T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Okay, you sound good.
Discovery Houston, negative return.
Copy, a negative return. getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedgies are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedgies are dead. So when the night's getting colder, you're needing that shoulder. These apes got your back. We got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw the hedgies. Screw 'em! That's right. This is where we like to fling poo and eat crayons for breakfast. Rock strong. Good morning, guys. The title for the day today is all about FOMC and the rate hike. 50 basis points is what's being predicted. I have not updated it to see what the probability calculators, the target rate probability calculator is saying. As of yesterday, it was a 20.6% chance of seeing 75 basis points. Let's see what it is for today. After the refresh for today, it is currently reporting a 20.6% chance at 75 basis points. It only has 50 or 75 as choices. So 79.4% chance that we're going to see that 50 basis points. That is the projected amount for the day today. NOSA came in with the news article. I'll go ahead and talk about that right now. We'll read it together. Take you guys over to the other page just so you can see this, because they do show a picture here. This is a Business Wire where I'm reading it from right here. AMC Theaters announces a co-branded credit card perfect for AMC moviegoers and AMC shareholders. The AMC Entertainment Visa card enables AMC Stub members to earn rewards faster through everyday purchases. Coming in early 2023, the AMC Entertainment Visa card, the only credit card of its kind in the U.S. theatrical exhibition industry, will offer credit card holders the opportunity to earn additional AMC Stubs reward points when they use their AMC Entertainment Visa card at the movies and on everyday purchases. New card holders who spend $50 in their first 3 months will earn $50 in AMC Stubs bonus bucks, which can be used at all domestic AMC locations and on AMCtheaters.com. Using the AMC Theater Visa card for purchases at AMC, as well as everyday purchases for gas, groceries, and dining, earns cardholders accelerated AMC Stubs reward points. Prior to the full card launch, AMC is introducing a waitlist to accommodate the expected high demand from those who wish to be among the first to carry and use the AMC Entertainment Visa card. Those who sign up on the waitlist and apply for a card will be entered into a sweepstakes to win a trip to attend a red carpet movie premiere with AMC Chairman and CEO Adam Aron. Let's see here. And then this is, I guess, the Business Wire portion of it says here. AMC Theaters, the largest theatrical exhibitor in the United States and the world, today announced it will launch the AMC Entertainment Visa card, the only co-branded movie theater credit card in the United States. I really should be doing this with my glasses on. In partnership with Visa, a world leader in digital payments and deserve a modern credit card technology platform, the AMC Entertainment Visa card is expected to be available in early 2023. The rewards-rich AMC Entertainment Visa card is the only credit card that earns in theater. It seems like a lot of this is repeat what I just read already. AMC Stub members can easily convert their points into AMC Stubs rewards, which can be used on all concessions items like popcorn, Coca-Cola products, AMC dine-in and feature fare menu items. Additionally, AMC Stubs A-List Premier members can use their AMC Stubs rewards for free or discounted movie tickets, including for the latest blockbusters and premium formats like Dolby Cinema, AMC IMAX at AMC, Prime at AMC, and Laser AMC. Let's see here. Then they talk about the $50 within the first 90 days. You get $50. So you're gonna have to sign up for it. It can be found on AMC's website at amctheaters.com/visa. They got a couple different quotes in here that we've already heard before, I think, from Adam Aaron about the Visa card. To power the AMC Entertainment Visa card, AMC partnered with Deserve, a fintech company transforming credit cards into software that lives on mobile and in the cloud. Through Deserve, AMC is able to offer its cardholders rich and flexible rewards, 24/7 customer service, and best-in-class mobile experience and fraud protection. Then you've got, it says, at Deserve, we want to help our branded card partners craft meaningful rewards and point programs that really speak to value for their customers and give them the technology platform that allows them to quickly and securely launch any type of credit card product in the cloud, customized to their specific audience, said Kalpesh Kapadia, co-founder and CEO of Deserve. Partnering with AMC to launch this card tailor-made for movie fans is a perfect example of the commitment. Yeah, so let's see. The AMC Entertainment Visa card is only available to AMC Stubs members. For information and to sign up for AMC Stubs, visit the theater, the website, the AMC website, .com, AMC /AMC Stubs. Let's see here. Also, last night I was doing a little bit of math with some of the numbers, and I'll tell you about that here in just a second. Trying to get to some of the more meaty stuff on here. Deserve Incorporated. So here we should probably know a little bit about this. Deserve is a credit card platform providing a mobile-first consumer experience for cardholders and embeddable API platform for its partners. Deserve's mobile-first capabilities enable its partners to drive a rich consumer experience embedded in the partner's own brand and channels. A wide variety of partners, including banks, fintechs, lenders, and merchant co-brands, have launched and managed their credit card programs on the Deserve platform. Deserve is a venture-backed fintech company whose investors include MasterCard, Goldman Sachs Asset Manager, Sallie Mae, Ali Ventures, Visa, Excel, Pelion Venture Partners, Aspect Ventures, and Mission Holdings. Connect with Deserve on LinkedIn and Twitter, or visit, and then they give a website here, deserve.com, for more information. Obviously subject to credit card approval. They are a member of FDIC. The AMC Entertainment Visa card is powered by Deserve Incorporated and issued by Celtic Bank. Maximum qualifying earn per day is 50,000 points per AMC Stubs Premier and AMC Stubs A-List account, and 10,000 points per AMC Stubs Insider account. Maximum number of eligible transactions per day is 10 per account. Members will not receive credit for spending greater than 50,000 points per day per AMC Stubs Premier and AMC Stubs A-List accounts, and 10,000 points per AMC Stubs Insider account, or more than 10 transactions per day per account. You must be an AMC Stubs loyalty member to apply for the AMC Entertainment Visa card to earn rewards. New cardholder incentive offer has maximum value of $50 delivered in AMC Entertainment card bonus bucks. A-list and Premier members can redeem for tickets or up to 50 in concessions. Insiders can only redeem for up to 50 in concessions. $50 bonus bucks will be delivered to the AMC Stubs member following the monthly account statement that includes the qualifying transactions in which the cardholder has spent a total of 50 or more on the account. Offer expires 90 days from issuance. Valid at AMC theaters in USA only. No cash back or cash value. No purchase or application necessary. Void where prohibited. Sweepstakes is open to legal residents of the contiguous United States and or the District of Columbia, excluding Alaska, Hawaii, and Rhode Island, who are 18 years of age or older as of the date of entry, entering by joining the waitlist, and then applying for the new AMC Entertainment Visa card starting at 12 a.m. Central Time on 12/13 through 11/59 on 4/30 of 2023. For complete rules, okay, so I'm going to give you guys the link to be able to sign up for this. Should you choose to. And I'm going to close all that and tell you guys what I kind of got with the numbers. I don't know if anybody else, I know Censored Content, I think, was maybe working on some of the numbers from Point Break. Thor got timed out by Ketogenesis. Keto's got his phone. Point Break, don't worry, you'll be back. Keto must have his phone in his pocket. I'm sure it was an accident. Point Break. Let us know when you're out of your timeout. I just want to make sure you're okay. Make sure that you didn't get taken off. I thought it was you, Censored Content, when we were talking about the numbers yesterday when Adam Aaron put out his 10 million. Maybe it wasn't you. Maybe it was somebody else. I don't remember who it was. But anyways, based off of Adam Aaron's tweet yesterday, where he said 100,000 U.S. showtimes and 10 million seats on sale for Avatar between essentially movie opening on the 15th through New Year's Day. I started looking into some of the numbers a little bit to see how they would make some sense, and here's what I came up with. I don't know if you guys, when the last time you've been in a movie theater, but if you count my family kind of sits really close to the top usually, so we're like usually we're F through maybe G. Oh, that's not very. F, G. I guess we're F through H. We're either F through H. Usually we're around like F through H. So A, B, C, D, E, F, G, H. I don't think there's usually more than H in movie theaters, but sometimes there is. Not very often, but most of the time it's like H. It's like the very top row. Each row has roughly about 12 seats out of the movie theater. So you just do 12 times 8. And you get 96 seats, which is really close to the number that you take with the numbers that he gave out. If you take 10 million seats divided by the 100,000 showings, you get 100 seats. I think that's the math. So I'm getting 96 seats a movie theater screening. So I think that's where the math comes out to. I think he's averaging, or he's at least coming up with an average of 100 seats per movie theater. And then if you take that and if you make the assumption that between between movie opening of, say, perhaps like the 15th through New Year's, and we have, let's say we have 75% of all seats sold between that time, then you can essentially say, okay, well then that's times that 100,000. We'll say 75% of the seats are taken up. That would be 7.5 million, and then multiply that by 9, like dollars average. So you're looking at like $67.5 million over that span of time. So those are the numbers that I kind of came up with as I was kind of playing around with some of the numbers late last night. I was a little tired, but those are the numbers I was kind of coming up with. If you figure like 75% attendance, which I think, I don't know if that's fair or not. I don't know if 75% attendance on average is a fair number, but I feel like it's pretty fair, especially for a movie that I think is going to get a lot of traction within the first week of showing. So that's perhaps about how much money AMC in just movie seats alone will probably average. And I think that's just domestic, if I'm not mistaken, because the way his tweet reads, it says far more adding in our cinemas abroad. So he's only accounting domestic movie theaters in those numbers. So the domestic earnings this is only going to be domestic earnings on just ticket sales alone. But then you have to factor in like concessions, that money that's made through concessions. Yeah, I know, Richard. $9. I know it's 12.75. I mean, you could plug in whatever number you want to in there. I went with 9 because people were saying 9 yesterday. You can plug whatever number you want to in there. I would just take 7.5 million and multiply it by whatever number you want to, and that's essentially how much money they could potentially make. Um, Superfan, I can't. If let me check something real quick here. I'm not sure what time they're going to be getting up at and coming on there. Let me check it real quick here. Hold on a second. Um, Let me go to their website and just check real quick and see what time that's going to be at. Give me just a second here. And today's date's the 14th. Let's see what they got on their website. On their website, they have they don't have a link to it. So my guess is that it says right here that at 2 p.m. is going to be the press conference. So 1 o'clock p.m. my time, I will stream that because that's about when I take my break. So, and I usually can find that on the Fed YouTube channel. So yeah, I will definitely I'll definitely stream it. Oh, myself, I have no idea what the average moviegoer spends on average. Hey, Duke of Wall Street, congrats on being first this morning. It was nice seeing a different name today. We get the same names all the time. You can add popcorn and snacks to that number, basically double that number. What do you think of Adam Aaron raising average ticket price for A2? He decreased standard showings and increased premium showtimes, so we need less people to make more money from this money. I mean, I don't know. It depends. It really depends on the average moviegoer and whether or not they can sustain supply and demand, right? If you can't get people in the door by raising, if you raise price and you can't get as many people in the door, then you've obviously got not enough demand for raising it. So I don't know. I mean, he raised the price this last year, so I'm sure they're seeing some kind of significant change from that price from raising that price? I don't. It's a good question. I have no idea. Mr. Mills says, "Is cereal a soup?" No, it's cereal. It's breakfast. You don't eat soup for breakfast. I think he did the right thing, incentivizing premium showtimes. Yeah, and I think he was doing seating as well, like preferred seating. Change price for preferred seating. It is time to take a look at the numbers, guys. So I'm going to go ahead and do that. And I will be taking an early break today, guys, because I got dishes galore. Oh my gosh. I made chicken fried chicken last night and I got dishes. I got dishes to clean up. I wasn't feeling it last night. I never feel like doing the dishes at night. Sometimes I do, very rarely, but I got dishes to do before my wife gets home this morning. So, because I don't want her walking home and into the house and seeing all this mess. Because let me tell you, there's a lot. There's a lot there. Funky Pizza says, "I'm the dish betch of the house, Casey." Well, I wouldn't put it like that around here, but but yeah, there's I'm not gonna leave these for anybody to do. Hey, there ain't nobody special around here, Sammy boy. We're all the same. All people equal, man. Ape. All right, I got the glasses on. I'm ready to go to do some numbers here. Let's see what we got. Dude, you know what? You know what, Tim? Bruno doesn't do that. I don't know what the hell is up with that dog. But I'm telling you right now, Tim, like there's something seriously wrong with my dog. He will not he just doesn't. I can drop food on the ground and he won't like go chasing after it like a normal dog. I don't know what happened. I don't know why he became such a uh, snob when it comes to eating food. But he won't. He doesn't go chasing after it. It's kind of weird. All right, price prediction tally points from yesterday. So the combined price of AMC and Ape on close. By the way, guys, I'm not gonna be able to see what it is you guys are writing until you see the big tramp back up on the screen again. Closing price on Ape yesterday was 0.86, exactly on the money. AMC was 5.72. Combined was 658. Price prediction tally numbers for for yesterday. Everybody made it. Nobody was at risk. So points around. Let me add the points up here real quick. And I gotta log into my broker still. All right, give me just a second while I log into my broker. Two-factor authentication, if you don't have it, you may want to get it, as it could prevent somebody from getting into your account that shouldn't be in your account. When you do set that up, to check it out and see if it's something you can deal with. Set up a secondary phone number in case something happens to your primary. You'll still be able to get into your account because you can send that code to something else, another device. All right, I'm logged in, and let's see what we got going on here. In regards to short exempt volume, 338.7. On AMC. Oops. Let's fix that. And on Ape, where did it go? There, wait, there it is. Ape had only 96,981, 96.9. Very, very low. With volume being as low as it was yesterday, that kind of makes a little bit of sense. Very, very low volume on Ape yesterday, and actually based off of pre-market volume this morning, I'm not expecting much of a difference today. But we will have to wait and see what the numbers show up as in pre-market. AMC was down 3.87 yesterday. Ape was up 2.2. Utilization, let me update it and find out what it was. AMC showing 100% utilization. Let me verify the day. And December 13th is correct. So we are on day number 215 straight trading days of 100% utilization. And let's see here. Ape, 74.52. So a little bit lower. Taking a look at, let's see what's next here. Max Pain. So we had quite a large amount of in-the-money puts that were being purchased yesterday, which would tend to leave Max Pain kind of where it's at. Although I do expect it to kind of drop just at least a little bit. So I'm gonna guess 750 Max Pain for the day today. Nope, still $8. All right, the market's suggesting that there's still an $8 Max Pain closing price by the end of the week, and we're sitting at 572. So at some point or another, the market's kind of predicting there's going to be some kind of increase in price here, at least based off of what we're seeing for Max Pain. We did close about $1 less than Max Pain, I believe it was last week. Maybe it was $2 lower. It might have been $2 lower. No, it was $1 lower. Max Pain it started out the week last week at 8, dropped down to 7. We closed at like 6, I think, by the end of the week, or really it was like 594. So we were like $1 under. So you know we're just about $1.25 underneath $1 under Max Pain for this week. So that would mean we'd need to go up at least $1.25 before the end of this week, just to hit the same kind of numbers from last week. Otherwise, there's going to be tons of puts that are going to go in the money, or that will be in the money, and that could be exercised. Let's take a look at off exchange. Final numbers for the day on Friday on off exchange was 51.8. EDGX was 10.98. Grand total between the two is 62.78. That's about 1.25 less than what I would expect on a normal day. Nothing unusual about CHX volume. On Ape, this was crazy how high this was. 78.88% of all volume going through off exchanges. EDGX at 3.94. The total on that came out to 82.82% of our total volume going through those exchanges. That's 20. Let's see, 18.8, something like that. 18.8% higher than it should than where it should have been. Extremely high numbers. CHX volume was very normal. On GME, CHX volume was right where it should have been, and HYMC's CHX volume was abnormal. Their normal 30-day average is about 0.07% of the daily volume. They had 0.19, so almost 3 times the amount of volume going through CHX for HYMC. And let's take a look at institutional ownership. I don't expect to see this changing just yet. 140.185 million is where it's at yesterday. Still reporting the same number. Taking a look at the options chain for AMC. Highest amount of open interest that we've been seeing so far this week at it has been at a $15 strike for calls. And it went from 23.9 thousand contracts to 26.4. So it looks like somebody's expecting price to be moving up. I don't think they're expecting 15 exactly, but I think sometime between now and the end of the week, I mean, there's still a bunch of call options that are still going in at $15. On the put side of things, highest amount of open interest yesterday was at a $7 strike, and there was 26.4 thousand contracts. And I told you guys that there was in the money contracts that are being purchased at $7, 6.5, 7, 7.5, 8. All those numbers had large amounts. Like I said, there was 26.4 thousand in open interest yesterday. In the money puts at 7. Today there's only 14.9 thousand contracts, which means like 12,000 contracts were closed out yesterday on puts. At a $7, so $7 is no longer the high amount of open interest. The high amount now is at a $6 strike, which is $1 less than what it was yesterday, and it's 19.6 thousand contracts. Do note, at a $15 strike in puts, there's 17.3 thousand contracts that are open. And let's see here. Let me move a couple screens around and we'll take a look at the rest of the data. Combined price of AMC and Ape currently at $6.65. In the later portion of the day yesterday, we did run up towards the box that I've got set up here. I kind of wanted to see a breakthrough sometime in that time frame in there. The breakthrough of this descending level of resistance, and this is kind of where I've got the box set up at, and the end time here that I have is about 7:26 Eastern Standard. So before market even opens, I was hoping to see us break through this descending level of resistance, which at the end of this time frame would be around 662. Right now it's saying that we're at 665 for a total price. So it looks like we did break through. It's really difficult to see it, but we're way up here above the box. So we are breaking through right at that box there. Didn't quite leap around it like we did yesterday's. 665. We'll see if we can maintain it. Oop, I hear thunder. I had hail a little bit ago. Before I started the live stream, there was hail outside. Let's see here. Taking a look at Ortex data, AMC has 18.58% short share interest of the free float. Here's 215 straight trading days of utilization being 100%. What it looks like let's zoom in a little bit and see what our current numbers are here. Taking a look at on loan amount, day over day increased from 161.43 million shares to 166.97. So we're looking at 4.5 million shares, new shares. So we had 5 million shares yesterday of new loan shares. Today's 4.5 million. Usually Ortex estimates about a third of that to be in new short interest. Let's see what they're estimating. Short share interest of the free float went from 18.21 to 18.58. So a 37.37% increase. It's going to be, so they're actually estimating a little high. They're saying that there's about 1.9 million in new short interest. On loan average age per day, when you have that many new shares come in, it's got to be dipping some more. It is. It went from 78.75 down to 76.18. Security lending volume day over day decreased from 25.48 to 12.41, so it got cut in half. Taking a look at Ape, cost of borrow, short share interest of the free float being reported at 6.67%. The short share interest of the free float dipping day over day from 76.89 to 74.52%. On loan amount decreasing day over day from 29.18 million shares on loan to 24.41. 4.3 million, looks like. Yeah, wait. 4.7 million new shares, or 4.7 million shares returned on Ape. On loan average age per day should be, if these are really old loans, should be decreasing. If they're newer loans that were closed out, it should be going up. On loan average age per day is going up, which means that there were newer positions that were closed out, not older positions out of that 4.7 million shares that were returned. So we've got that number going, that's 2 days in a row of that number going up. So we have a new date that we can log in for December 9th. So we've got a 15-day counter set up for December 9th, which means we should see a significant price increase somewhere before the end of the year, by the December 30th, or no later than. And that value went from, on loan average age went from 24.29 to 28.92. Security lending volume did increase day over day from 3.14 to 6.97. Orders by Fidelity customers. These are going to be just for the last 4 minutes of yesterday, because I can tell based off the order sizes that are showing up on the page here. So in the last 4 minutes of settlements, we had 60, GME made it up on the list here with a 69% buying to 32 or 31% sell ratio. Nice. AMC and Ape. AMC made the list, Ape did not. AMC in those final settlements was 51% buying to 49% selling. Yesterday, though, majority of our, and that was very few orders. Most of our orders that were closed out yesterday during market open hours had good buy-sell ratios. So that's not a direct reflection on the last 4 minutes. SSR trigger price $5.15 for AMC for the day today. I have not calculated apes. Let me pull it up real quick. 0.774 is the SSR tripping point for Ape. Very low amount of shares. They borrowed most of the shares yesterday. We saw a total of 1 million shares borrowed. And so the amount of shares that were available to borrow for today were really low. It looks like overnight they did return quite a few shares, and they went up to as high as 500,000 shares available. And then they borrowed out almost all those, 430,000 of it, and then another 50,000. So I would put that at about I'm gonna put it about. I'm just gonna call it 450,000. I know it's a little underneath that, but that's it's fine. It's close enough. 450,000 shares borrowed for the day so far today. And they've already returned 130,000 of those. Fees are back up to 20.2%. They would drop down to as low as 19.5 yesterday. There's currently, and you can see a big difference today. There's a lot of positions that were closed out of the money, and you can see it already. Yesterday we had over 200K in out of the money calls for this week. It's now down to 152,000 contracts that are out of the money, 7.7 thousand contracts in the money, 33.2 thousand contracts are out of the money on the puts versus 58.2 thousand contracts that are in the money. So a lot of positions were closed that were out of the money before the end of this week. The VIX is showing up 0.42 in the pre-market, which means that the market should be opening down. However, futures on the market don't appear to be down. As of right now, the market's showing just fractionally above. Well, now they're all going to zero. They're heading down now. Now they're starting to go negative. So with the VIX futures showing up 0.42%, we're starting to see some of the futures on the market here starting to head south. Let's see what we got going on here. On the other side of the world, international markets were mostly up. The ones that were down were not down by very much, anywhere from 0.31 to 0.5. Other markets that were up about the same amount on the other side. Mixed markets. US dollar ended up down 0.08% in total yesterday. SPY in the pre-market this morning is showing down 0.14. We've got Tesla down in the pre-market 0.83. Amazon is up 0.22. Cinemark is up 0.16. Doge up, down 0.14. Bitcoin is up 0.52. GME is down 0.05. HYMC up 1.65. Hood is breaking even. CS is down 2.96. NCMI is up 1.96. Ape is up 0.93. And AMC is down 0.17. I just saw lightning outside. If I lose you guys, it's because there was probably a lightning strike and I lost power where I live. So, yeah, just throwing that out there. Taking a look at AMC, yesterday we had about $6.4 million more inflow than outflow yesterday. So far this morning, we've got about 41.8 thousand shares traded so far on AMC, which is definitely more elevated in volume than what we have been seeing in the more recent history. So I would expect higher volume out of AMC for the day today. On a 1 hour time interval, we have more selling pressure. No. More buying pressure than selling pressure. Actually, hold on, it's really close. I can't tell. I'm going to say even amounts of buying and selling pressure with RSI of 43.62, which is slightly below average. On a 30-minute interval, there's more selling pressure than buying pressure with a crossover on the vortex indicator. RSI at 44.13, which is slightly below average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 37.4, which is below average. Taking a look at Ape, yesterday there was approximately about $1.5 million more outflow than inflow. 4.13 thousand shares having been traded so far this morning. Very low volume on Ape this morning. On a 1 hour time interval, there is more buying pressure than selling pressure with an RSI of 53.4, which is just slightly above average. On a 30-minute interval, more buying pressure than selling pressure with an RSI of 51.22, which is pretty much average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 47.63, which is just slightly below average. Taking a look at the Ichimoto cloud on the 1 hour time interval. So we've got on a 1 hour time interval, the conversion or the lagging line is just above price line. We have conversion above base, but base is very heavily driving up towards the conversion. One of the things that I kind of mentioned to you guys before is when you see a break or when you start seeing a buy signal like this, usually you'll see price hit the conversion line once, and then sometimes a second time. And it's actually drove through it, never actually made it above it again until in the aftermarket hours last night, and it's hitting it for a second time. Now you've got price hitting base. This is not a very good strong buy signal. This is usually a kind of a negative indicator for time to get out from whenever you got in. From anybody who might have been purchasing into this, if they got in way back here or maybe even back here, they're gonna be breaking net even on this, and they probably don't want to see losses. There may be some stop losses that are going to be triggered in this kind of period, and if that's the case, we may see a little bit of a sell-off, pushing us back down through the green cloud here again. And this is on Ape, which would put us under 0.83 more than likely. To see more continuous buying pressure or seeing a strong buy signal out of this, we're going to need to see price eventually rising above the current most recent high of 0.9. So we're at 0.86 right now. 0.9 is what we're going to need to see. That's the same number from yesterday that we needed. We're going to need to see a retest of 0.9 and perhaps maybe even push through of that number. On a 4-hour time interval, we've hit a TD9, and we're starting to see a little bit of that correction. We don't have conversion above base yet, and the lagging line is not quite above price line. We are really close to a buy signal on this, moving into like that 0.97 range, what I mentioned yesterday, would kind of turn it into a heavy buy, but kind of puts us into the cloud as well. So we need to see above a $1.08 to really see this thing start taking off, though. So yesterday I had a $1.15, now it's $1.08. So keeping or seeing the Ape hit above 0.9 and maintaining that, or actually launching past that's going to be really crucial to seeing more price improvement. Otherwise, we might kind of stall out a little bit and maybe see a breakout of this red cloud here at a later date. On AMC, on the 1 hour time interval, we've got lagging line below price line, conversion below base. It looks like we want to try to break through this cloud here on the 1 hour time interval, but we're not quite making it yet. In order to get above the cloud for the day-to-day, we'll have to see a price above $6.16. That would turn into a really strong buy. On a 4-hour time interval, We are on a thinner portion of the red cloud today. Seeing price moving up on the front side of this cloud would be ideal, but we're going to have to see price move pretty quickly up here. The bottom side of the cloud starts at about 719, and the top side of the cloud is about 758. This really turns into a huge buy signal above 7 towards the later half of the day above 760. And I know that's quite a ways from where we're at right now in price. But I am expecting a little bit of buying pressure to start happening over the next day or so, either today or tomorrow. Just based off of some of the failure to delivers that have been stacking. Let's see, I think that's it. That's all I got. I do want to share one other thing with you guys from something from yesterday. Give me just a second. I don't know if you guys remember or not, but in the beginning of the morning yesterday, as the market was about ready to open, we had some really weird stuff showing up on the level 2 order book. And what I want to show you, and I actually filed the complaint with SEC about this, because I actually went in and looked at the actual data that was being logged or registered through the order books. Went through and kind of did a deep dive into it and was looking at it. Some really kind of strange stuff that was occurring. But what we saw was this massive amount of order right around 9:21. We saw this huge order of about 440,000 ish shares that showed up at I think it was like $5.50 or something like that a share. Actually, it's right here. Sorry, I said five. It was 630. It was about 634, and price started increasing and made it all the way up to 650s. But something very interesting happened with that, and I want to share it with you guys real quick if you don't mind. And this is the complaint that I filed. I'm going to be showing you guys a really bright screen here for just a second. So bright lights in 3, 2, 1. All right. So at 9:23 Eastern Standard Time, what happened is the following. We had price trading at about $6.50, and I kind of I sent the information to an Excel spreadsheet to kind of be able to go through and kind of check some information out. But what was happening was we were trading at about $6.50 at 9:22 and 54 seconds. We went from 650 to 651, back down to 650, up to 651, back down to 650, and then all of a sudden there was one order at 9:22 and 58 seconds that went from 650 to $6.32, back up to 650. Now, I went back through the live stream from yesterday and watched it in slow motion, and there is never an order that goes through for $6.32 that hit the market. And so one of the things that I wanted to verify was one, did we actually see it go through the order book? And the answer is no. And yet here at 9:22:58 seconds, we had a $6.32 order that went through for 200 shares, and it went through the Boston market. TH is the ask, and the bid side was also TH. TH stands for third party. This is OTC. OTC shouldn't be hitting the lit market. So for some reason or another, all these third parties were hitting. These big orders were hitting. And you can see it's part of that 360. I said it was 344,000 shares. It was higher than that, or 400,000 share. By the time this hit, though, a lot of it had been evaporated. So this is like 300. By this time, it was down to 364,000 share order on there. And so it was part of that order. That order, 200 shares of that order went through at a $6.32 price. Now, the problem I have with this is that if it's going to be on the ticker, it's going to show up on the lit market and not OTC. And guess what? On the chart at that time, it shows up. The low for that minute was $6.30. I'm sitting on it right up here. Watch the price in the top left-hand corner. The price low was $6.32. This big huge candle wick right here was based off of that 200 order, and immediately after that, price started trading the other direction. And my from looking at this, to me, that order stopped price momentum. It stopped price momentum because it signaled a downtrend, a massive downtrend in pricing, and then you start seeing, less price improvement occurring right after that. So this wasn't normal. It shouldn't have gone through. An order shouldn't have been able to go through for a buy at $6.32 when the going price at the time, the bid side, the high side was $6.50. You just can't sneak in a $6.32 order and just, you just can't do that. You can't sneak in you can't sneak in an order that's less. If your order book is showing a higher value, if the current highest bid is $6.50, you can't sneak in a bid order at 632. It doesn't work like that. That's not how a market's supposed to be made. So somebody did that. I flagged it. I sent it to the SEC for verification. Everything is there. We verified this through TradingView last night. TradingView shows the actual. Actually, let me show it to you guys. TradingView has this as well. So you can actually go down to the seconds, and why isn't it pulling up here? You can go down to the actual seconds here, and let me pull it up for you guys. Here's my submission to the SEC here, just to prove that I did indeed file a complaint late last night, very very late, and so that's for the records. You guys now have seen that, and I can get rid of that. Let's see here. This is also on TradingView that minute where you shouldn't have been able to see this. This right here shouldn't have been able to happen. Like that shows up right here. The low is $6.32. You can't be trading at 650 and have a 200 share order go through on an order that's got 400 and some odd thousand share, 300 and some odd thousand shares in it, and have one single order go through at 632. It's not how it works. But yet it did. So I got problems with that. You can't have a successful trading market when something like that's happening. You just can't. Like there's no reason that should happen. It just can't. I can't even. It blows my mind, quite frankly. I can't believe that they're that obvious about it and threw it out there in our faces like they did. But we all witnessed it yesterday. We were seeing these crazy things happening, and I went back and I re-reviewed everything that was happening and reported. I even reported the fact that the way that the trades were being made on that block of that limit, that huge block limit order. Wasn't transacting. The whole entire order book was changing with it, and it's just not. That's not how a market's supposed to be traded. But whatever. So, anyways, we'll see what ends up happening with that. I don't expect much, but at least we can prove it beyond a shadow of a doubt that something stupid was happening yesterday. Yeah, well, when I say that price is simply a figment of your imagination, I mean, it's a great example. It's a great example. Like they can just make price whatever they want whenever they want to. I mean, if you're just going to be able to throw up an order, if somebody's bidding $6.50 and somebody can suddenly just push through a bid at 6.32, they literally can change the price to whatever they want to at any given time. I mean, that is sheer proof of that because you can't go through that 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 page that I just showed you guys. You saw the order. I know the order sizes on this say 3640 364.6, but if you actually go through the order book and you look at the live stream yesterday, this is in they took off the last two digits on this. So this is actually 300 at the time when this order went through, there was 364,006 something left in the order book, and you can see the numbers changing as the orders are going through, and it's insane. It's just insane. Oh yeah. Here's the other part. I forgot one more thing. Hold on 1 second. There was one other thing that was unusual about this. It went through the Boston market. Uh, no pun intended with the food place, right? Not related. But it went through the B in this year. The last place that the trade went through was the Boston market, and so just for shits and giggles, kind of went through here and decided to look and see how many orders during the time frame that I pulled, which was a very small time frame. I only pulled for like 5 minutes worth of time. I think I pulled from like nine. Um, Shoot, I think it was like 9:19 maybe to 9:25, and there was only five orders that went through the Boston market, and one of those happened to be the that 632 order. None of the rest of them stood out as being unusual, but this one particular order right here was the problem order, and it went through that Boston market. So I don't know what the significance to that is, but it was unusual. So I don't know. Um, who said sue? Mike said, "Can we see that?" I'm not interested in suing at this point right now. Maybe on a later date. I'm gonna give the SEC a chance to take a look at it first and see what they say. So in regards to somebody said, I wonder if Keith is around. If he had an idea on the number on the level two order book. When I went back over and watched the orders go through, not on the time and sales, but on the level two, it never showed up. It never, ever. I watched it at a quarter of the speed yesterday's live stream, and it never popped up on the level two order book at all. So, because you would have had to have seen the level two order book disappear every price, every bid order from $6.32 to 6.50 would have had to have cleared out, and that 400,000 or 300,000 share order would have had to have been the highest order at $6.32, and that didn't happen. I watched it in quarter speed, uh, really slow motion as every trade was going through, and nothing showed up, but it did show up in the time and sales. Uh, Balarkey says, "Do you think they'll be able to control it like that during the squeeze?" I don't know. Zeke says, like we're successfully trading on AMC ever. If we're trading to the lit market, it should be. Yeah, you can't. Mm, the last digit of ask. Oh yeah, I know what you're talking about, Domainer. Einstein, thank you very much. 6:05 to 9:05, guys. I gotta take a break here. I need to go. I need to go do some dishes. Einstein, I'm putting you down for 6:05 to 9:05. Did anybody see if Keto put in his numbers yet? Also, is Point Break Thor back in here? he got accidentally silenced. Let me make sure Point Break Thor is back. Let's see here. I'm scrolling backwards to see if he's in here. I want to make sure he didn't get accidentally booted. I haven't seen Point Break Thor write anything in here yet. Point Break, I see that you're in here. Let me check real quick here and see if you got the boot and fix that for you real quick. Give me 1 second while I look. And I forgot to look at the pokey stick of volume. I'll do that too real quick before I go. Hold on a second. I always forget how to look this up. I do not see Point Break Thor on this list. So he should still be able to talk. Oh, Keto accidentally. There he is. I am here. Keto accidentally. I think he had his phone in his pocket and accidentally silenced him. Pokey stick of volume, guys. For AMC came in at 59,000 shares. Total amount of shares traded since then. We've had quite a few minutes here that's gone through. Probably about a little over 10,000 shares. So we probably had about 120-ish to maybe 115,000 shares at the time when the pokey stick went through with 59,000 shares or 60. I would expect to see a 10 to 30 million 10 to 30 million shares traded for the day today. I do expect elevated volume, but not. Those numbers don't look big enough. I'll raise it just a little bit. I think I'll put in a prediction. Excuse me. I'll put in a prediction of. Well, shucks. Let's go 2040. I think we should be able to hit higher than 20 million shares by the end of the day today on AMC. Let me just check something real quick. Oh yeah, that shouldn't be a problem. We should hit over 20 million shares. So I'm gonna go 2040 on volume for the day today on AMC and on Ape. Let me check it real quick here. Ape pokey stick of volume coming in pretty large actually. We had 42,000 shares going through for the pokey stick itself. Since then, we have had we've had 20,000 shares or so go through since. So minus that from the 74. So we're looking at 54. Pokey stick was 42. We had about 10,000 shares traded before the pokey stick. So we're looking at 5 to 25 million. I don't expect to see a whole lot of volume out of Ape today. So 5 to 25 million on Ape, 20 to 40 million on AMC. And it's time for me to do some dishes. I will see you guys in a bit. Put you guys on some music and see you guys. All right, I'm back. So I'm just kind of looking at what's going on here. I feel like we're kind of like in a descending parallel channel on AMC, which is usually bullish when it breaks out going up. The price for today on the top of this would end at about $6.36. I do see a strong level of buying pressure at 616. So if price were to rise up to around 616, which would be half the distance, a little more than half the distance up, we could see that perhaps that third test of $6.52 and perhaps get that breakout of the descending parallel channel and also breakout of kind of that level of resistance that we've seen on at least two different occasions here. So that would be the ideal thing to have happen today. If it does do that, if it does break out of here, I would suggest that it might be later towards the end portion of the day, and it might actually trade out sideways, and then we get like maybe a little bit of a retracement going into tomorrow. Maybe a retest of this level of which a level of support that would come if it did break out, touching back down on that, and perhaps then maybe finally driving back past up 652 for Friday, which would be really close to um, max pain. It would be at least a buck within. It would be very close to a buck within a buck of max pain. So that would look a little something like this, perhaps. I don't think today is going to be a straight line up. There's probably some points in between here where we're going to be doing some kind of maneuver along the way where maybe we see some downwards momentum at first, coming back up. There's going to be some momentum in here, but the general profile essentially looking like seeing these touch points somewhere along the way. I'll keep this up here just like this as a possibility. It would make a little bit of sense to see max pain achieved by the end of the week or thereabouts, as max pain is $8. And so for price prediction for the day today, I think I'm going to put down AMC as being somewhere probably around. I actually got this drawn wrong. There we go. I'm going to put us around maybe 625 for closing price for the day today on AMC. And then, which would be 50 cents up from where we're at right now, which would be actually pretty amazing to see have happen. So I might be guesstimating a little too high, but I always kind of take a little bit off here. And then on Ape for the day today, I'm not seeing a whole lot of buy pressure, and I kind of feel like we are getting that multiple touch off of 88 cents. I think we've got 4 touches now. And so it looks to me like we may be breaking through 88.88, which would be great. We need to see 90 cents or better. I would like to see 90 cents by the end of the day. So I'm going to go ahead and put 90 cents down as my prediction for Ape for the end of the day today. And let's see here. $7.15 minus $1.50 puts me at 565 to 865 is not a bad prediction, and it gives me a little bit of breathing room on the bottom side in case price does come down. We are a combined price right now of $6.66. That gives me a dollar breathing room down and $2 breathing room up. I think it's not bad. That's a pretty good prediction. I'm going to go 565 to 865. Yesterday I only did $1 down from our market open instead of $1.50. Oh, actually I'm not doing from open. So yeah, actually that is $1 down. That's perfect. I've only seen Einstein come in. I haven't seen Keto's numbers yet. If I have to reach out to Keto here in a little bit, I will. Unless he's already put him in. There it is. Look at that. Nana Ape filling in for Keto. Thank you, Nana Ape. 613 to 913. Same prediction he had yesterday. Eric will fill in here in a little bit. He usually texts me right at market open. And then Apex is going 529 to 829. Apex, I apologize. Apex somehow accidentally got silenced. I'm pretty sure that probably. I think Keto might have had his phone in his pocket earlier this morning, and I think that might explain why that might have happened. As it stands right now, we have a pretty good range of price predictions. I think we should be able to. Somebody should be able to catch it. Keto, I did. Thank you very much. Nana Ape was. She's on it. She's on it this morning. Balls, good morning to you. Good to see you. Good. It's always good to see balls in the morning. James of Arizona saying 425 to 725. James, you're expecting some serious downwards movement. I would guess because of the FOMC rate hike of 50 basis points. My guess is why you're putting 425 to 725. But I don't. I think they priced it in last week, to be honest with you. Dr. Zeno says, on the third day of Christmas, my true love gave to me three cotches cotching. Hot Koch is one of the Bird Eye says, "What is a hot Koch?" Hot Koch is the name of one of our board of directors. Believe it or not, you wouldn't know unless you looked him up. But Hot Koch, it's funny. I had no idea what the guy sounded like, looked like, anything. I just saw the name the very first time I saw the name. I was like, Hot Koch. It just sounds like one of those names where it's like that real like authoritative but not necessarily over the top kind of person. He comes over and he grabs your hand, and when he goes to shake it, he gives nice big squeeze and says, "Hi, I'm Hot Koch." and then I found out he's got a YouTube channel because he's a director, and he does interviews with different actors and stuff. And it's so funny because Hot Koch is exactly like how I thought he would be. And not only that, but you know how I get names wrong all the time. Everybody was assuming that his last name was pronounced differently than Koch, and they thought it was Coach or Cooch or something like that. It is literally Hawk Koch. That's how you say his name. I'm not sure I understand. Yeah, Siri, you wouldn't understand. Apex says, do you have any info on the SEC votes today? Votes for what? For rule amendments? I don't. I mean, I actually should have just said no. I don't know. I don't know about any votes for SEC today. All right, guys. It's getting real close to market open here. Captain Awesome's going with a 10-cent range, 525 to 535. I'm assuming you're suggesting just AMC's price. All right, I'll see you guys on the other side of market open. I got to get this thing started here. Voting on who takes blame for all the corruption. Well, we'll look into it here. Maybe we can look into it and see what's going on. I'll see you guys on the other side of market open.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward leg now at SM.
Dan, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
When the night's getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder, you're needing that shoulder. These apes got your back. We got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw the hedgies. Screw them! That's right. This is where we like to fling poo and eat crayons for breakfast. Rock strong. Good morning, guys. It is the day of the FOMC rate hike. The feds are going to come in today. The predicted amount that we've been seeing for quite a long time, under 20, mostly under 25%, has been 50 basis points predicted. The Fed has announced many months ago that this was the target plan that they were going to go on. I don't see any reason for them to change their opinion, even though the numbers came in for CPI up 0.1. I have a feeling that they're going to stick to the 50 basis points. I don't think there's going to be any change with that whatsoever. Javi the Great says, my oldest son plays buy and hold song at his after school tutoring session. That's pretty cool, man. That's pretty cool. Jay says, did you open that gift yesterday? Yes, I did. My neighbors got me a leash, one of those AMC leashes and dog collars for Bruno. And, I think they're trying to give me a little bit of a hint, 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 Casey, nudge, nudge. God, you say it at the end of every day, take your dogs for a walk. You need to take your dog for a walk more. So yeah, it was really cool gift. Unfortunately, the collar didn't fit his neck, but I think the other part to that is they may be suggesting that I need to get a puppy for Christmas. I don't know. I don't know. I'm not ready for it yet. It's really tough when you have a really, really, really super good dog. It's really tough to go from a great dog to another dog because I don't know. As I'm getting older, I feel like it's like this is going to be the last dog that I ever have kind of thing, and I'd rather go out on a great note than a bad note. So and I love Bruno so much. I just don't. I'd hate to get a dog that I just don't really like that much, or just don't have any kind of attachment to. And I don't know that that would necessarily be the case. There's usually is. I have had a dog like that before though. There was a dog that was kind of thrust upon me once before, and it's not like if there's no attachment, if you just don't have an attachment to the dog, it's not fun. So Joe says it wasn't for Bruno. Probably not. No, I tried to put it around my neck, Tony, and it fits me just about as much as it fits Bruno. My neck's about the same size as his neck, apparently. Earlier this morning, we kind of talked about the credit card. announcement that came out through AMC. What you'll notice in the comment section is that pinned to the top is the link for you to be able to apply for it if you should so want to. It's entirely up to you. You do have to be I believe to receive the card or have benefits, you need to be a investor. I think you have to be part of the investor either connect or um, investor. Shoot, I forget what it is. Or you have to be like an A list or whatever the I forget what the other is it premium and A list or something like that. I know I know A list, but I can't remember what the other one's called. It's like premium or something like that. But yeah, so you can go check that out. I got the link in there for you, so you can go look at it. And then one other thing is that earlier this morning also I also put up today's poll: will Casey have a puppy by Christmas? No, I'm not putting that up there. I'm not putting that poll up there. The other thing that I had listed up is that I filed the SEC complaint with something that I found yesterday when we were looking at the order book. We saw some very unusual activity in the order book last night or yesterday morning when we were watching the market open. And I don't remember who pointed it out, but whoever it was, thank you for pointing it out. There was a very large order that was in there for it was over 400 some thousand shares to be purchased on the bid side. There's two things that I can tell you about that, and it's because I went back and I went through all the time and sales, and I actually pulled an Excel spreadsheet on certain minutes in there to kind of take a look at what happened on the time and sales. And as I was analyzing it, I can tell you one thing's for certain, that there was a bid price that started at six. I want to say it was like $6.40 something, maybe it's 6.34. I don't remember what the price was exactly, but there shouldn't have been any orders going through for a price lower than what it first started out at. And I could go back and tell you what that is. But if we go back to the screen here for yesterday's market open on AMC, I just want to show this to you real fast. This is the price movement in question right here. So we started to have this little bit of a run here right before the market open that morning. And as price was running up, the order was in here. That 400 some odd thousand order was open since I believe it was 9:21 is when it first popped up. And 2 minutes into that order being on the order book, not more than 2 minutes of that order being on the order book, there was a single order for 200 shares that went through, and you can see it with the candle wick that's on this thing. You can see this candle wick here going down to $6.32. So this candle opened at $6.44. The high on it was 652. The closing was 650. Everything was normal on this candle except for that one order that came in at $6.32, which is a pretty drastic drop, and it was at the very next minute. And by the way, the timestamp on that was 9:22:58. It was at the very end of the minute, and going into the next minute, you can see price started doing some weird stuff after that, right? Like price didn't continue to keep on that momentum drive upwards. Likely, if a market sees a candle wick like this, it's going to start kind of stopping on the buying process. That order alone may have stopped the momentum, and it was pretty crazy to see go through. So I've got it here on Excel sheet, and I'm going to pull it over to the side here so you guys can see it. Give me 1 second while I put this back to current. So I'm going to pull up Excel here real quick and just show you guys, for those of you who are just joining in for the day and didn't see this. Give me 1 second. So I kind of pulled everything onto Excel so I could kind of go through and see some comparisons. And here it is right here. All right, I'm going to pull up the Excel. This is going to be a little bit bright for you guys. So here comes the brightness. Fair warning, 3, 2, 1, bright. All right, so what you're going to see here is you're going to see that the market was trading at $6.51. There's a couple of orders that went through for $6.50. Another 3 orders went through for $6.51, and 2 orders of $6.50, and then a single order of 200 shares on that order that had and notes that these numbers over here on this these right here are all the order sizes, the amount of shares that are being bid on. There's 2 digits that are dropped off of this. So it's at this time when this order went through right here, there was 364,600 and some odd amount. I don't know what the last 2 digits are because they only report the first 4 digits. But it went from 650 to 632 for 200 shares and then back up to 650. And it was those shares right there that got sold. Now, see, the problem with this is that if your bidding price is set for 650 and our total amount, you can see that they were being sold at 650, and then it suddenly drops to 632. All the orders that are behind this at 650 should have stopped the price from dropping to 632 instantly. Should have, but they didn't. And you can see that the order actually went through the ask and the bid side with third parties. TH represents third party or OTC. Normally OTC doesn't necessarily have to affect market price, but in this particular case it did. They traded it through B, which is the Boston Exchange. So I had about 5 minutes worth of data that I pulled on this Excel spreadsheet, and I just wanted to see, like, do some contrast and comparisons on this. There was only 5 orders that went through the Boston Exchange, and this is one of them. But that price of 632 shouldn't have happened. So I reported that to the SEC. Doubt it'll go anywhere, but I at least reported it because that shouldn't have happened. You shouldn't see price go from 650 to 632 when there were other orders. I actually went through the live stream yesterday and watched it. In the level 2 order book, it never showed up. It never, ever showed up. It went through the time and sales without ever showing up on the order book. But all the rest of these did. All the rest of these orders showed up on the order book, but not that one. And so it went through at 632, and you can see that it actually impacted when I showed you that candle wick. It impacted the look of the price movement on the charts. So kind of crazy stuff happened yesterday. I reported it all. We'll see what ends up happening. I don't really expect anything out of it. Zeki, I don't know I don't know, man. 2 weeks. Matt Kors was saying they do affect the lit market. He was saying they do, and they do. But the problem is that they only, you could have a bulk order of like, 1 million shares. I'm making up a number, but you could have a bulk order of tons of shares going through, but only impacting the price by a penny. And that's the problem that a lot of people have is that the reason that people have a problem with OTC markets is because of the fact that a lot of our orders are being bulked up and traded off exchange. And yes, they have an impact on price, but only by a penny. It improves the price by maybe a penny, or maybe it's not even improved at all. Maybe it's actually maybe they execute it at a lower price. Because after all, they are trying to get us best price, right? And if they're trying to get us best price and they're going lower, then that's going to help drive the price down. This is why we're trying to get off that payment for order flow. We don't want them to drive the price down with our orders. Good morning, Pam. Good to see you. By the way, that mint ice cream looked really good last night. I saw it. Made me a little jealous, not gonna lie. Missing some of that Thrifty's mint chocolate chip ice cream. Dr. Zena says, I prefer to take the mature approach. I tweet some turd emoji to Gensler and SEC every week. You know, every single one of us has our own special. We're all here for special reasons. That's okay. There isn't anything wrong with that. Yeah, Boss Blunts was the one saying that the dark pools don't affect the price, and they're not supposed to, right? They're supposed to have the least amount of impact. That's the whole point of having a off exchange is you want to make sure that large quantities of orders are not impacting the market. The problem is that it wasn't created to be used as a place for retail orders to be bulked up together to prevent the least amount of price movement. Retail should be trading. Retail should be getting their trades placed through the market. Bird eye photography. I have not done any investigating into the Boston Exchange at all, so I appreciate that. The Boston Exchange is controlled by the MX, the Montreal Exchange, in 2007. Interesting. How's trading for AMC on the MX Exchange? Let me check and see. I don't know that that shows up on off exchange or on. Oh, it does. Wait, MX. I guess that would be MEMX, perhaps. The MEMX, perhaps. I don't know. If that's the case, volume yesterday was normal. It's pretty normal. But if it's not MEMX, I don't know what it is. What exchange that would show up as. I'd have to do some investigating to look into it. Yeah, Matt Kors was the one who said dark pools do affect price, and he's not wrong, but he's not really right either. Because when he said he, he's not wrong in the fact that they do show up as orders, but they only change it fractionally. Like if you can have like you can have a really large order of like 5,000 shares go through, and it only changes by a penny, where normally 5,000 retail orders going through would change price quite a bit. Pam says, "Oh yes, I thought of you every time I get some Thrifty's mint and chips. Oh man, I miss it." SEC says that announces charges against 8 social media influencers, $100 million securities scheme. Ooh, who are they? Yeah, I don't know Bird Eye View. It doesn't show up on chartexchange.com, so I'm gonna have to do some research on it. I don't know what it is then. I'm gonna have to do some research on it to see. No, CHX is Chicago Exchange. Defendant Casey Shaw. What? I know I'm not gonna be one of them because I haven't schemed to do nothing. 100, or how many YouTubers was it again? Let's see. Let me go back up here and read this. Uh, missed it. Where did it go? Eight social media influencers. Be interesting to see who they are. I know I haven't been contacted by anybody, and I know I won't be. That's for sure. Derek says Matt is textbook. This is not a textbook play. This is true. Oh sweet, BioLife got the link here. Hold on a second. Hold up. I'm gonna check it out and see. Let's see here. Perry Matlock, Edward Constantine, Thomas Cooperman, Gary Dell, Mitch Hennessy, Stefan Harvaden, John Roberzik. I've never heard of any of these people before. Okay, so one of them's PJ Matlock, one's Mr. Zach Morris. The other one's looks like maybe it says Oh Hey Tommy. Oh Hey Tommy. Another one's Notorious Alerts, Huge Henny or Heen, Laid Back, and Ultra Calls. The complaint further charges Daniel Knight, who's Dip Deity of Texas, with aiding and abetting the alleged scheme by, among other things, co-hosting a podcast in which he promoted many of the other individuals as expert traders and provided them with a forum for their manipulative statements. Knight also traded in concert with the other defendants and regularly generated profits from the manipulation. I'll bet you there's probably a really good reason that some of the people who were part of streaming YouTube videos on AMC left. I have a very good feeling that that's the case. Interesting. Well, don't worry me none. I got nothing to worry about here. The Big Tramp says, Casey, are we inverse the SPY? Most of the time that SPY is ripping, AMC is ripping down. I don't necessarily feel like that's the case. I don't feel like we're inverse the SPY exactly. I know there's been some times where it looks like that's the case, but not always. I don't know any of those handles, Tendies plus plus. Those are all not familiar to me. I don't think I know any of those names. Yay! Deborah made it to Virginia Beach. Lots warmer than New York. Deborah, glad to see that you're doing good. Delayed Noise says I got caught in Zach's CEI pump. My first big loss. Doug says, I think this is just the beginning of the SEC charges for social media influencers. It should worry all of us. As soon as they hit some of the big AMC names, people will sell feeling scammed. You know what, Doug? And I've stated this for a long time. The very first people that sell are going to be the ones that miss out. When investors, especially at these prices, when investors start selling at these prices, those shares are going to get sucked up, and you're going to see some buying pressure happening in the market to collect those up and complete orders. And I know for a fact that we're going to lose people before we rip. It's going to happen. I don't know when that's going to be. Am I going to stream the hearing? for those people, probably not. I don't even know who any of them are. FGCV, at the very top, you can click on the link that gets you to the place where you can apply for it if you wanted to. Maccabee says, Casey's clean, not worried. Yeah, it'd be one thing if I was collecting money for what it is that I'm doing, but I'm not, and so I'm pretty safe. Sandy says, good morning, Casey. Do you think they're going to try for SSR today? I don't think so. But since you said that, I haven't actually changed SSR values. So let me change them real quick here. 515. I got to move this down a little. I don't think so. I don't think so on AMC. Ape it might be a different story. Ape triggers at 774. Viola says, here's the SEC link for the statement of charges. I already opened that. That's the one I was looking at. Yeah, we see you, Joe. You're all good, man. The Matt Perry guy who is always pushing Luna token. I have no idea. Fork says, Casey, I enjoy that you're not monetized. The commercials make me want to lose my effing mind. Uh, I, I'm in a total agreement with you, Forks, but and I'm not trying to advertise for YouTube at all. But I do. There is a way out of getting those advertisements, but it does cost you some money. But um, a subscription to YouTube is a little bit of a. My wife has it. I don't know why, but and then she can put people on the account. So I'm on the account. I think you put up like 5 people or something like that on the premium. And then you don't get any commercials at all, which is great. I love it. I don't have to sit through commercials anymore. But I mean, it's up to you. Starcadian says ad block is easy. I don't I don't have that on my phone, so that's where I watch most of my videos. Jay says, Casey, make sure you're careful when we are squeezing that you're not drinking a stiff drink you drink. Uh, can't have you choking on those amazing sounding ice cubes. Yeah, I don't plan on drinking on those days. It's not worth it. Real quickly too, I just want to mention Jay's about. We've got 3 days left of fantasy stonks, and Jay's about ready to win. I think but I'll tell you what though, Gorilla Gardner is putting up a tough fight. It's really neck and neck at this point. The three finalists that we've got in here is Jay, Prataji, and I'm still saying your last name probably wrong. Gorilla Gardener and Tech We Love. Tech We Love had a rough day yesterday, and kind of lost a little bit of traction. But Gorilla Gardeners is right behind Jay by about $450 or 500, 550, 450, right around there. It's really, really close. They're neck and neck, and so it's a real fight. But Jay is not currently invested in anything, so his money is currently not losing or gaining anything. So it'll be all on Gorilla Gardner and his stocks in trying to beat Jay out of first place. Z Wade says, "I love premium, best $17 a month spent ever." It helps with my sanity too. Ooh, if you do get YouTube Premium, don't buy from Apple. They charge $4 extra. Good advice there, Billy. Thank you. Use the. I've never even heard of that. Maybe it's supposed to be Opera. Is that Opera browser? I've never even heard of that browser for. Is that iPhone? I can't even. I don't know. I have an iPhone. Six Sun says KCDC AMC going down to $5.30. Want to scoop up 100 bananas. Let me look at something real quick here. I don't know. I really don't know the answer to that, but let me look up our current most recent low is 553. Let me make sure I've got that put into my synthetic price failure list here. I don't have that in, so let me put it in. That is a 39.6% drop. That is a very common number to see price starting to move the other direction. The only further down it could go than this is maybe to 40. I wouldn't suggest maybe more than 43 to 44% down. So I kind of think 553 is a bit of a bottom. And if it's not, then we could see as much as 60% down, which I'd have to do the math on that. But it would be 60% down from $9.15. So you can you can do the math yourself. But I think more than likely you're going to see a retest potentially of that low, 553, maybe see it just a tad bit lower. I don't know about 530 though. 530 would put it at 42.1. It's a possibility, but it's a possibility. Obviously, there's no way for me to completely predict the futures. More often than not, that's not likely the case though. No, Jabibs, I did not finish watching the hearing. In fact, do you guys mind if I put it on right now? It's 9 o'clock. I'm going to do the numbers. Can I go over the numbers and continue finishing watching the hearing? Because I didn't get a chance to finish it, and I was hoping I could finish it with you guys listening. Because I want to see that altercation that occurred there with Lance Gooden. So if you guys don't mind, I'm gonna play out the rest of that video after the numbers. And so let's go ahead and take a look at what we got going on here. Let's see. I'm gonna take you guys over the other screen. I'm not gonna be able to continue to see what it is you guys are writing until after you see the big tramp back up on the screen again. So hold those specific thoughts or comments you want me to comment on. Hold on one second as I log into my broker. Two-factor authentication, if you don't have it, you may want to consider getting it. It could help prevent somebody from being able to get into your account that shouldn't be in your account. When you do set that up, you may want to consider setting up a secondary phone number or device that can receive the code in case something happens to your primary. Let's see what we got going on here. This is the first rundown of the morning, so I'm going to move a couple screens around here real quick. What's first? Let's move this one over. Alrighty, starting at the very top left-hand side, price prediction tally points. All four of us got the price predictions right. Actually, all five of us, because we've actually got Apex in there as well. We all got our price prediction tally points for the day. We were all right on that for today, and this is not meant to be any kind of financial advice. The lowest that is on the list for the day is Apex at 529 to 829. I've got 565 to 865. Eric has 580 to 880. Einstein has 605 to 905, and Keto has 613 to 913. Those are our price predictions. Those are not meant as financial advice. It's just us trying to stay sharp on where we think the combined price of AMC and Ape is going to be by the end of the day. Short exempt volume on AMC yesterday was up to 338.7 thousand shares. Ape had a very abysmal 96.9 thousand shares in short exempt volume. Whenever there's low volume on the stock, that will be the case. That should be how it is. Lower volume, lower short exempt volume. Utilization yesterday, we still had 100% on AMC utilization. That is day number 215 straight trading days. Ape went down a little bit to 74.52%. Day-over-day price decreased on AMC by 3.87%. Ape was up 2.2%. Max pain is still $8 by the end of the week for AMC, which is highly unusual. Off exchange, by this time of the morning, I would expect to see about 49%, and EDGX to be somewhere between 10 and 11. Right now we've got 59.29% and EDGX at 10.43 for a grand total 69.72%. Nice. That's definitely elevated by about 15.7% higher than it should be. Nothing happening on CHX volume though. On Ape, 71.34% of the volume going through Ape, and EDGX at 5.3. Grand total on that 76.64. That is 22.6% higher than where it should be by this time of the day. CHX volume, nothing unusual to report there. On GME, CHX volume is elevated by double more than what it sees on a normal 30-day average. 30-day average is 0.21. It's at 0.46. HYMC has nothing to report on CHX volume. Taking a look at institutional share ownership, 140.185 million, no changes. And let's see where the highest amount of volume is this morning. Highest amount of volume at a $7 strike for AMC. It was $6 yesterday for calls. There's currently 3.2 thousand contracts. That's a very normal amount of volume. On puts, highest amount of volume is at his $5.50 strike. It was $7 yesterday. They were buying in the money puts. Currently, there's 1.4 thousand contracts. Very, very low volume on the order on the options. Taking a look at combined price of AMC and Ape, we're currently at $6.58. We are seeing a little bit of consolidation. We did get that break that I was suggesting yesterday, right about where I thought we would see it, but we came back down as soon as market opened this morning. Are staying underneath this descending level of resistance. I want to see us break through this and break through 663 and at least maintain getting into some higher numbers up in here. That would be ideal to see have happen. Currently, it looks like we also have a trend line that's kind of heading up this direction right here. We may see consolidation and a breakout of this kind of in this time frame in here. Maybe even a little bit before that. The object is to decrease volume, keep outside investors away from the stock. So they'll try to reduce volume, drop price, reduce volume, and then slowly try to trade sideways. From sideways to down is the key for hedge funds. Taking a look at Ortex data here. Short share interest of the free float's at 18.65% for the day so far. There's been 1.11 million shares having been borrowed. Cost to borrow mins at 19.83, average at 22.18, and max at 23.61. Utilization, here's your 100% for 215 straight trading days. Zooming in on this just a tad here. Here's your on loan amount increasing day over day by 4.5 million shares from 161.43 to 166.97. On loan average age per day with those new shares coming in is dipping still. That's a good sign. Went from 78.75 to 76.18. Short share interest of the free float rose with the new shares on loan from 18.21 to 18.58. And security lending volume day over day dropped by half from 25.48 to 12.41. On Ape, currently for the day to day, there's been a return of about 439,000 shares. That's going to have the effect of lowering the short share interest of the free float to 6.63%. Cost to borrow min at 5.84, average at 6.96, and max at 7.94. We have 24.41 million shares on loan for the day to day. That is a drop day over day by 4.7 million shares in short interest. Let's take a look at what that looks like. Also, that's going to lower the short share interest of the free float from 76.89 to 74.52. Here's your on loan amount dropping by 4.7 million shares from 29.18 down to 24.41 million. On loan average age per day hit 2 days in a row of upwards momentum. That means that we've hit the bottom, and that next significant price increase is within 15, starts to counter 15 days from the 9th. So we're looking at the 30th. Sometime between now and the 30th, we should see a significant increase in price on Ape. Security lending volume increasing from 3.14 million to 6.97. Orders by Fidelity customers. Only looking for AMC, Ape, and GME. GME's on the list here with an 80% to 20% buy-sell ratio. Looking very strong. AMC also on the list here with a 67% buy to 33% sell ratio. Also looking very strong. Ape likely not having enough volume to make it onto the list today. SSR trips for the day today at $5.15 for AMC. Ape triggers at 0.774. Shares available to borrow. So far this morning, they've borrowed about 450,000 shares. Nothing but mainly returns since earlier this morning. Nope. Here's another 150,000 shares. 200,000 shares borrowed. I didn't see these. 200,000 shares borrowed. They did return to the ETFs. Fees are currently at 19.8%. Let me go ahead and add that 200,000 to the 450 so far for the day. 650,000 shares now for the day. I just want to note here, guys, that we've had a lot of positions that were closed out. I don't remember what the exact numbers were, but I know it was over 200,000 shares in out-of-the-money calls those positions were closed because there's only 152,000 contracts out of the money now on calls and 7.7 thousand contracts that are in the money. 33.2 thousand contracts are out of the money on the puts versus 58.2 thousand contracts are in the money. NASDAQ is up 0.57, Dow Jones is up 0.44, and the S&P 500 is up 0.57. We have 3,763 advancers to 2,761. Market is advancing over declining. The US dollar is down 0.16. I have a feeling this is going to keep on heading down to somewhere around this box before finding some kind of bottom, and then perhaps maybe starting to head back up. Oil is down 0.68. SPY is down, up 0.59. Mortgage-backed securities are up anywhere from 0.12 to 0.16. VIX is down 0.98. VTI is up 0.52. IWD is up 0.47. Tesla is down 1.51. Amazon up 0.45. Cinemark is down 3.91. Doge is up 0.98. Bitcoin is up 1.67. GME is up 2.33. Hycroft is down 0.46. Hood is up 0.48. CS is down 4.24. NCMI is down 0.64. Ape is up 1.97 and AMC is up 0.61. Inflow versus outflow on AMC, we have currently $500,000 more outflow than or more inflow than outflow. Sorry. Total amount of shares having been traded so far is 4.47 million shares after 51 minutes of trading, putting us on a pace for 34.25 million shares traded by the end of the day today. That is within the pace of 10. Actually, I upped my numbers from 10 to 30 million on AMC to 20 to 40 million. So as of right now, we are trading within that range already. And let's see here on the 1 hour time interval. Just slightly more buying pressure than selling pressure with an RSI of 46.99, which is slightly below average. On a 30-minute interval, more buying pressure than selling pressure with an RSI of 49.61, which is average. And on a 5-minute interval, more buying pressure than selling pressure with an RSI of 56.89, which is slightly above average. Taking a look at Ape, there is approximately $150,000 more inflow than outflow. 1.73 million shares traded so far for the day today. After 52 minutes of trading, puts us on a pace for 12.97 million shares traded by the end of the day. I do expect those numbers to go down throughout the day, as usually you see volume fall. However, just throwing this out there, but I only suggested 5 to 25 million shares traded by the end of the day. So I think we'll be within that 5 to 25, but I wouldn't expect it. I don't know. This is looking like we're going to see really, really low volume. On a 1 hour time interval, there's more buying pressure than selling pressure with an RSI of 56.01, which is just slightly above average. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 54.69, which is just slightly above average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 57.13, which is slightly above average. Taking a look at the Ichimoto cloud on a 1 hour time interval for Ape. Conversion and base. Conversion is just barely over base right now. Price is still trying to hang on to upwards momentum. What we really need to see is price move up above 0.9 for this to really start perhaps looking like it's going to have any more life left in upwards momentum. Otherwise, we're going to start moving towards the green cloud that we have set up here for the day-to-day, the thinning portion of a green cloud. So, but the lagging line is above price line. On a 4 hour, we have conversion finally crossing base. We have lagging line almost about ready to break price line, but the big point, the number that we need to hit again is that point, at least point, this is saying about 0.94. We need to see like 94, 97 cents, somewhere around there, and this could turn into a big buy. It's got to get there. On a 1 hour time interval for AMC, we have lagging line below price line, conversion below base. We are on a thinning portion of red cloud for the day today. I feel like at $6.16 would really turn this into a big buy for us. But on a 4 hour cloud, we're going to see something more in the range of around $7.60 to get up above the cloud, to get the conversion above the base and the lagging line above price line. So we've got a lot of work ahead of us to hit some of the numbers that we need to hit. But I think that there is a path to get there. Where did I pull this up at? I think where did I pull? No, I didn't pull this up on here. Let me get rid of the Ichimoto real quick. So really the trick I think right now is to break that 584. And this is the path. I did draw it on here. This is the path that I'm kind of drawn out here for potential price movement. I'd like to see us finish the day out at around 6:30 by the end of the day today, which would probably be a pretty significant price increase. Let me just check that real quick and see where that would put us. What did we open at? We opened at 577. So, oh, we got to go by close from yesterday. Previous close, 572. What did I say? 636. That'd be like an 11.2% increase in price. So we may not see 636. That's a little bit of a hefty call. We might see something more, maybe around like 615, which would only be like a 7.5% increase in price. That's more likely. But I really want to see 636. If we can get 636 by the end of the day today, we could see some potential fireworks going into tomorrow or Friday. And I think that's it. With that, I can see what it is you guys are writing. Get that Bollinger Band back up. Let's see here. Yeah, and from Mr. Gray's testimony, Bird Eye View, one of the things that really kind of bothered me the most was that the Bahamian government allowed open trading to occur for Bahamian residents for like a 24-hour, or it was actually a little over 24 hour. I think they said like 25 hours and some odd change, which I think is super, super shady when you consider the fact that that's one of their main sources of businesses by, drawing companies to come down and open up their businesses down there. You could have seen that would basically leave corporate America the ability to be able to go in there and do whatever it is that they want to do while leaving everybody in the dust on uh, their money being trapped. I mean, the Bahamian government is just filled with fraud. It just reeks of it. Uh, well, today's not over yet, RB. Today's not over with yet, number one. And number two, that doesn't make any sense to come in and say stuff like that. We already talked about that yesterday. Doug says, so Gary Gensler spotted these scam influencers but missed SBF. Come on. I know. It's craziness. All right, let's take a look at. I want to watch the rest of that hearing yesterday. I shouldn't say hearing. It was really more of a um, investigation. Oh no, did I lose it? Are you kidding me? Hold on a second here. All right, I didn't lose it. Oh, I lost it. No. Are you kidding me? Wait. I gotta go back to yesterday's. Ah, that's terrible. Hold on, I gotta go back to yesterday's. Does anybody remember where we left off yesterday? What's this? This is part 1. We saw AOC. Did we leave off on? Okay, hold on a second.
Course of action to recover.
Okay. So where do you?
Did we see Mr. Timmons yesterday? I can't remember if we saw Mr. Timmons. I don't recall.
You're obviously going to do everything you can to maintain control of it and keep it in Chapter 11. Is that fair to say?
It is fair to say.
Did we see Mr. Timmons? Did we see the lady in the red? There's a lady in red here.
Yeah, not at my fingertips.
I don't remember that either. I remember AOC. Was AOC? We couldn't have ended on AOC. We had to have gotten past that. Does anybody remember? I'll tell you what. I'm gonna start with the. I'm pretty sure we might have been on Mr. Timmons. I don't remember the lady in red. I don't remember this guy with the mustache. Let's start right here with Mr. Timmons.
It's same for all, for all the customers. I mean, obviously the extent of the harm appears greater on the international side.
So there's not much time left on this, guys. It's got like
on the U.S. side,
less than 20 minutes.
the dissipated assets are not significant, and that obviously would lead to a greater recovery and a sooner recovery. But it's a little bit premature to really nail that down today.
Well, thank you. And when you do the demographics and the consumer data, keep in mind that Morning Consult study showed that about a quarter of Black
It's
and
Miss
Latino
Garcia, by the way,
respondents own
the lady in red.
cryptocurrencies. It's a quarter compared to 17% of white respondents. We need to make
Tech,
sure
we love
that
it's
when
going to be
we
at
talk
2
about
o'clock
making
Eastern.
everybody whole, we're talking about everybody.
Absolutely.
Thank you. I yield back.
Thank you very much. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Mr. Ray. Let's go back to Enron. That trial was from January 30th, 2006 until May 25th, 2006. Pretty lengthy trial. I imagine that the federal prosecutors presented ample evidence. They were all kind of witnesses. Would it have been helpful to have the defendant testify before Congress for like 6 hours and answer a whole bunch of questions under oath prior to that trial? Would that have been helpful to federal prosecutors?
Well, by that time, the company had been confirmed out of bankruptcy. We had
Before he was arrested, would it have been helpful for him to come before Congress and testify for hours on end and answer every question that we could come up with?
Oh, absolutely, absolutely. Yeah.
So it would have been really helpful.
Yeah. Oh, yes.
Okay, okay. So why 36 hours before he was scheduled to testify before this committee for hours on end, did the Southern District of New York send a provisional arrest warrant to the Bohemian?
Wait, why is he asking Mr. Gray why he was arrested 30? I mean, of course he's not going to know the answer to this. This doesn't make any sense to me. It doesn't make any sense.
Bohemian government to facilitate his arrest, to preclude his testimony, which would have been incredibly helpful in the prosecution of Sam Bankman-Fried.
I mean, I obviously can't speak for the agency.
It's kind of bizarre. I mean, I was a prosecutor for a number of years. I prosecuted complex white-collar cases. The thought of getting 6 hours of congressional grilling for a target of investigation or a defendant, that would be great for my case. So I just don't understand. I guess the grand jury returned the indictment on the 9th. Technically, you can delay weeks if you want to. So this was a decision made by somebody at DOJ to prevent Sam Bankman-Fried from coming here in a couple hours and testifying before Congress, answering questions in front of the American people. I've read his alleged testimony that he was going to give. He's basically saying that he lacks the criminal intent. He lacks mens rea. He's saying that his attorneys pressured him into filing Chapter 11, that he immediately, after doing a DocuSign to sign away everything, said, I don't want to do that, told his attorneys, again, this is all what he says, told his attorneys that undo it, I do not want to do that. And it seems that he's been taking steps ever since that to try to wrangle control of his companies back. Is that fair to say?
You know, I can only read what you read in the press. I haven't talked to Mr. Fried.
So my friend from Wisconsin was talking about Chapter 15 versus Chapter 11. And that's basically the Bohemian government or outside, what do they call it? Joint provisional liquidators are trying to wrangle control of this bankruptcy. Is that fair to say?
It seems that way, yes.
And arguably, you're going to be going after the $100 million that was allowed by 1,500 Bohemian citizens to take out that was allegedly owed. You're still going to get to the bottom of that. So you plan on going after that money, correct?
We'll investigate every potential cause of action.
And if 1,500 people in the Bahamas were allowed 25 and a half hours to withdraw $100 million, do you plan on trying to get that back and distribute it appropriately?
We will certainly pursue every course of action to recover.
Okay. So where do you go from here? You're obviously going to do everything you can to maintain control of it and keep it in Chapter 11. Is that fair to say?
It is fair to say. I mean, you know, we think the bankruptcy process here is the one place that has transparency and has the greatest ability to maximize value for creditors. But these things aren't usually mutually exclusive. We work with liquidators all the time on a cooperative basis. So this is a little bit unprecedented.
I think that's fair to say. This is going to be a law school exam for many students in years to come. I'll end with this. I really look forward to figuring out why the Department of Justice issued the provisional arrest warrant to preclude Sam Bankman-Fried from testifying before us this afternoon. I do not understand it. As a former prosecutor, the thought of him going on the record for 3, 4, 5 hours and answering every question to try to keep his alleged mens rea out of this would be wonderful. So I look forward to figuring out why they did that. With that, Madam Chair, I yield back.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Chair Waters and Ranking Member McHenry for hosting this important hearing. And thank you, Mr. John Ray, for joining us today. I want to start by zooming out a bit because FTX isn't an anomaly. It's a collapse. Is just a case of isn't just a case of one corrupt guy stealing money. It's about an entire industry that refuses to comply with existing regulation that thinks it's above the law. It is not. As we speak, Binance is being investigated by the Department of Justice. Tether is being investigated by DOJ as well. The SEC is investigating the co-founder of Terra Luna, which collapsed earlier this year, and Digital Currency Group has many of the same conflicts of interest present in the FTX case. The crypto industry is in crisis because crypto assets have no inherent value. These companies are making money using one thing, hype. And when the hype runs out, these businesses fail, and ordinary investors, especially latecomers who are disproportionately low-income, Black and Latino, lose. Mr. Ray, in your November 17th filing, you noted that your team had detected unauthorized minting of approximately 300 million in FTT tokens by an unauthorized source after the bankruptcy petition date. Your December 12th filing notes that while one source of this unauthorized minting remains under investigation, a second source has been confirmed without doubt. Who was the source of this unauthorized minting that your team has confirmed without a doubt?
The second source I think you're referring to is the Bahamian Commission.
And Mr. Ray, one of the unacceptable management practices at FTX that you identified was the absence of independent governance throughout the FTX group. People from the same group were leading various companies, and there were potential conflicts of interest because of this. Could you tell us more about the lack of independent governance, and what risks were created as a result?
We had no independent board of directors, and with the lack of oversight by an independent board, it leaves the company in the hands of a small group of individuals, and the company is effectively sort of naked when it comes to internal controls. So that was certainly the case here, and it's something that is atypical of companies of this size.
And customers report, and you've confirmed during the hearing, that FTX was asking customers to send money to Alameda instead of FTX. Mr. Bankman-Fried claims this is because in the early days of FTX, the company did not have a bank account. On a Twitter space yesterday, Mr. Bankman-Fried said he does not know if assets were moved over from the Alameda to FTX after those early days. To your knowledge, how long were customers instructed to send funds to Alameda that were meant for FTX?
We don't have a precise timeline of that circumstance. That's one of our investigations. We'll certainly look to what kind of communications were given to customers. Did they know? Did they actually have knowledge of that direction? Those are all questions.
And were the assets ever moved over to FTX, or were they allowed to stay with Alameda?
There were certainly certain assets were stayed with the exchange, effectively in a pot, if you will. But clearly, assets moved to Alameda, or those assets were there continuously. So clearly there was an allocation to Alameda of customer funds that were utilized for other purposes.
Thank you, sir. Madam Chair, I yield back the balance of my time.
Thank you so very much. The gentleman from Massachusetts, Mr. Auchincloss, who is also the vice chair of the full committee, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Ray, I appreciate your patience and diligence this afternoon in answering these long questions. You've addressed everything with care and thought. You haven't played any video games while you're talking to us, so terrific. Mr. Bankman-Fried leaked his written testimony to Forbes today. Just one more link in a long chain of dissembling and lies from Mr. Bankman-Fried. So I think it's important to allow you to respond to anything he put in there on the record here with us. He really makes two pointed assertions. One is that you haven't engaged with him and haven't allowed him access to his passwords and accounts. Can you explain to the committee now why that is the appropriate course of action?
Well, for a couple of reasons. I mean, first of all, we wanted an independent, examination. We didn't want to rely on people who were potentially compromised, and as we now sit here today, we know that was a wise decision, right?
Yes.
Second of all, what he was asking for fundamentally was to allow access to a system that we know just hours after the bankruptcy filing, he had dissipated assets from the estate.
I think those two are sufficiently good reasons. I'll reclaim. The second broad point he makes is that were he allowed to restart FTX, he could raise the financing and make customers whole. That's, I think, a fair paraphrasing of what he's asserting. Again, can you respond to that and whether that's true and credible?
In my history of doing corporate restructurings, I don't find that remotely believable, because the first thing an investor would have to do is pay several $1 billion just to have the company, back to the position it was in. So it's a fantastic idea.
It would be throwing good money after bad in the biggest sense of the word, right?
Correct.
Good, thank you. I just wanted to give you that opportunity. And I also want to associate myself with the very thoughtful line of questioning from both Ms. Ocasio-Cortez and Mr. Timmons, actually, from both sides of the aisle on the timeline here, and I'll just reiterate the timeline quickly. On November 6th, FTX Group was facing a liquidity crisis. On November 8th, FTX withdrawals were halted. On November 9th, Mr. Bankman-Fried sent an email to the Attorney General of the Bahamas saying the Bahamian customers could make withdrawals as they had, quote, segregated funds for all Bahamian customers, end quote, despite his awareness of FTX's withdrawal halt. And then on November 10th, 2 days after withdrawals were halted, nearly $100 million in cryptocurrency was withdrawn by those, quote, asserting to be Bahamian customers. And then, quite conveniently for Mr. Bankman-Fried's counsel, he is arrested right before he was due to provide hours' worth of sworn testimony to Congress. Mr. Ray, do we have your commitment that as you continue to unravel this ball of yarn and pull on these relative threads here, that if you find any evidence of improper collusion between Mr. Bankman-Fried and any authorities in the Bahamas or elsewhere, that you will make that known to us?
Absolutely.
Thank you. And I want to close really with comments directly to the broader industry here. And I've long said that I'm neither a crypto bull nor a bear. My job as a policymaker is not to deliver new products or technology, but rather to advance laws and regulations that protect consumers, that preserve market integrity, and advance the US dollar as the world's reserve currency. And I maintain this market and tech agnostic position. I think it's the appropriate one. We need strong and clear regulations here from Washington. But I do want to say that my patience with the crypto bulls is wearing thin. It's been 14 years, and the American public has heard lots of promises, but it has seen lots of Ponzi schemes. For crypto, it's time to put up or shut up. It's worth noting that ARK, the innovation investor, several years ago identified 5 general-purpose technologies of the future: DNA sequencing, artificial intelligence, robotics, energy storage, and blockchain. And yet those first 4 disruptive technologies have already delivered game-changing innovation that affects my constituents in daily life. Blockchain has thus far delivered white papers and podcasts about Bitcoin and DAOs and NFTs, DeFi, and more. And it's all interesting, it's exciting even, but none of it has achieved product market fit at scale. And it's time for the blockchain investors and entrepreneurs to build things that matter or to lose more credibility. Madam Chair, I yield back.
Thank you very much. Without objection, I would like to enter into the record the closing statements from Ranking Member McHenry and myself. And I'd like to thank you, Mr. John Ray III.
Chairwoman Waters.
For your presence here today.
Chairwoman Waters, I've not had an opportunity to testify or to question the witness.
I'd like to thank you for your presence.
Chairwoman Waters.
And for the time.
Parliamentary inquiry?
Yes.
Are all members entitled to question witnesses?
You are, and if you would like to miss the votes on the floor for everybody.
Hey, it's the
just one
chairwoman's
moment.
prerogative to call a
Just
recess.
one moment, please.
That's your decision, not mine.
Just one moment, please. You may go right ahead and have 5 minutes. Thank you.
Thank you, Madam Chair.
You're certainly welcome, sir.
Mr. Ray,
the hell
earlier
is that
today you
about?
said FTX was one of the worst bankruptcies you have handled in your 40 years of legal and restructuring experience. Under Mr. Bankman-Fried, FTX had almost no record keeping, risk management, or accounting. In fact, FTX had 0 accountants on their payroll. Mr. Bankman-Fried explained to Bloomberg Businessweek that FTX's accounting was done by him, and in his head, quote, "I was real lazy about the mental math. The complete lack of any basic record keeping makes it difficult to track down assets and untangle this mess." Are you aware of any additional wallets the co-founders potentially have access to that contain debtor assets?
No, we're not.
There's also been very little attention to the banks that FTX had a relationship with. I don't know that I've heard about any questions today, but the ties between FTX and Farmington State Bank began in March when Alameda Research invested $11.5 million in the bank's parent company, FBH. Do you have any insight or additional information as to why a small agricultural lending bank with really no footprint in fintech or crypto has a relationship with FTX?
No, that's the subject of our inquiry. I mean, we do know, obviously, we made that investment.
Well, thank you. I appreciate that. You've also stated that Alameda's business model as a market maker required deploying funds to various third-party exchanges, which were inherently unsafe and further exacerbated by the limited protections offered in certain foreign jurisdictions. To your knowledge, are any of the FTX co-founder or their family members affiliated with third-party exchanges that receive funds from Alameda?
We're certainly investigating that. It's going to take some time to dig through that, but that's clearly a part of our focus.
Thank you. I appreciate you coming here today, and I'd like to yield the balance of my time to the ranking member, Mr. McHenry.
I yield back. Thank you.
Thank you. As I was saying before, without objection, I would like to enter into the record the closing statements from Ranking Member McHenry and myself. I would like to thank you so very much, Mr. John Ray, for the time that you have spent here today in the way that you had helped us. And with that, I would recognize the Ranking Member for a minute.
Well, thank you, Madam Chair. And first, I want to say thank you to you, Madam Chair, and your team. Over the last 4 years as Ranking Member and Chair of this committee, there are times we've worked together. There are times we haven't. There are times where we've agreed in public and disagreed in private, and then other times we've done the opposite. But I want to thank you for how we have attempted with one another to treat digital assets and the bipartisan work we have here. Mr. Ray, thank you for you and your team, your willingness to participate today, and the forthright nature by which you've handled a hearing like this. We know there will be ongoing conversations in the new year. The title of this hearing was Part 1. Part 2 will be next year. And as chair of the committee, it's my intention to continue the work of Chairwoman Waters when it comes to this matter. We know more because of your testimony. You had somebody who's a crypto genius, but behind closed doors was using QuickBooks. We know somebody who was a pretender to the technology, but was doing everything possible to obscure something that is innately a transparent product. Now we understand why, a lot more of the why. We wish you well in resolving these matters and look forward to continuing the conversation. Thank you, Madam Chair.
Thank you.
Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. Without objection, all members will have 5 legislative days within which.
All right, so he did say 5 or next year. However, I'm going to refresh this page here, and I think that they are doing the part 2 today, if I'm not mistaken. I may be wrong on this, but let me just check and see. Originally, when I had finished, or when I came into this Oh man, where is it? Hearings. I had seen something about part 2 being today. No, I don't see it now. Okay, I could have sworn I saw part 2 listed. I only see part 1 though. Yeah, so part 2, I guess, next year. You guys are saying you think there's a Senate hearing today? I can look and see. Um, let's see what we got going on here. I don't see any. I don't see anything listed here. I don't see anything listed. Fed speaks in 4 minutes. All right, hold on a second. Let me check it out. Oh, you can stop that right now. Fed Reserve Live. Let's see here. I've got a Bloomberg Global Finance News live. Hold on a second here. I do not see any lives scheduled for the Fed as of right now. Yeah, I got no Fed lives, and I don't have anything on the schedule for the day today. So I don't have anything showing right now for videos that we can watch. The Fed meeting was supposed to happen at 1 o'clock Eastern Standard Time, which would have been, or sorry, 2 o'clock Eastern Standard Time. The meeting is supposed to show up here. Okay, C-SPAN. Hold on, let me see. Thank you, Sean, for that link. Let's see what we got going on here.
There's no secret.
That's an ad.
You just have to plan every date.
Sorry. It was an ad. Let's see what we got. Give me a second here.
Centralized at every level. There are people controlling things. So, we heard that that Bitcoin was decentralized. Well,
All right, I'm gonna go watch from the beginning here, and so this is gonna be. Let me see when this is from. I want to make sure this is actually live here. It says December 14th, so we can watch this. I'm gonna go through the numbers since it is time to do the numbers real quick, and I'm gonna go through those numbers, and then we can watch that that live. Give me just a second here. DJ, I'm going to see Avatar on Friday. All right, give me just a second, guys. We'll check the numbers out here, and then we'll watch that live. Let's see what we got going on with the numbers. Taking you guys over to the other screen. The big tramp's not on the page. I'm not gonna be able to see what it is you guys are writing. Hold those thoughts for just a minute while I go through these numbers. Give me a second to log into my broker as well. Nope, not gonna give you guys the speech today because, or right now because I didn't have to log in. All right, let's move these around. Just like that. And all right, starting with off exchange. By this time of the morning on AMC, I would think that we would see somewhere. Oh, you know what? Shoot. I told you guys 49% earlier this morning, I think, and it should have been 44% is what we should be seeing. It's 49% now. Now, by this time of the morning, we should see 49% through off exchange. EDGX should be somewhere between 11 and 12%. So let's take a look and see what AMC has. 60.47% going through off exchange. EDGX is at 9.4. Total combined between the two is 69.87%. Nice. So that's elevated by about 10.8% higher than where it should be by this time of the morning. And CHX volume, nothing unusual to report there at all. On Ape, off exchange 76.03%, EDGX at 6.88. For a grand total of 82.91%. That is higher by, let's see, 23, almost 24% higher than where it should be by this time of the day. CHX volume, nothing unusual to report. GME, we have CHX volume slightly elevated. Normally we see on a 30-day average 0.21% of the daily volume. We're at 0.33 on GME. And on HYMC, nothing unusual to report on that one. Taking a look at the Ortex data. An hour ago, there was 1.11 million shares having been borrowed for AMC. It's now 2.21 million shares. It's going to have the effect of raising that short share interest of the free float to 18.72. Cost to borrow minute 19.83. Cost to borrow average at 22.57. And cost to borrow max at 26.87. Shares on loan right now is currently at 166.97 million shares on loan. Day over day, that is an increase of 4.5 million shares. More shares on loan than yesterday. Ortex is estimating about 1.9 million of that was in new short interest. And on Ape, so far this morning, an hour ago, there was 439,000 shares having been returned. It's now 416. That's not too much of a change. So going to leave that short share interest, the free float, pretty much where it was at 6.64%. Cost of our minute 5.84, average 7.01, and max at 7.94. Shares on loan for the day-to-day is down 4.7 million shares day over day returned. and leaving us at 24.41 million shares on loan currently for Ape. Taking a look at options. Highest amount of call volume this morning on AMC is putting our it went down actually. So more call volume at $6 than there was at $7. An hour ago, the highest amount of volume was at $7, and there was 3.2 thousand contracts. It's now at $6 with 3.7 thousand contracts, but it's changed more, like just slight amounts. 37.40 at 6 and 37.21 at 7. So a lot of call options being created at 6. Puts, highest amount of volume is currently at $5.50. It was 1.7 thousand contracts an hour ago. It's now 2.8. Low volume today, surprisingly. Market suggesting a closing price somewhere between $5.50 and $6 on AMC by the end of the day, although the way that price is moving right this second, I would imagine that's going to change. We are a combined price of $6.71. We did break out of this this kind of wedge here a little bit. I had drawn this in here before we had price starting to rise up here. We did break out of it, did break through 663, but fell back down inside and then really started taking off closer to where the box was. Breaking back through that 663, so we got our third test and breakthrough of that 663 and are currently heading upwards. I'm not going to draw anything out on this just yet, but we may be, that's more of an ascending wedge as of right now, but we'll see how this turns out as time continues on. We'll revisit later. Orders by Fidelity customers. AMC, Ape, and GME are the only three I'm looking for. GME, first one on the list here with a excellent 78% buy to 22% sell ratio. And AMC is also on the list with a good 66% buy to 34% sell ratio. Not bad. Looking good. Ape has low volume today, so it's not on the list. SSR trips for AMC is 5.15 today. Ape would trip at 0.774. Amount of shares available to borrow is at 300,000 shares. No new borrows in the last hour. We've seen so far for the day-to-day 650,000 shares borrowed. NASDAQ is up 0.54, Dow Jones is up 0.58, and S&P 500 is up 0.59. We currently have 4,012 advancers to 2,590 decliners. The market is advancing over declining. We have the US dollar currently is down 0.22%. Oil is currently down 0.68. SPY up 0.55. Mortgage-backed securities up anywhere between 0.12 to 0.21. VIX is down 1.42. VTI is up 0.57. IWD is up 0.57. Tesla down 2.91. Amazon is up 0.45. Cinemark is down 1.55. Doge is up 0.85. Bitcoin is up 1.85 and at 18.1 a coin. GME is up 2.95, HYMC is up 1.79, Hood is down 2.79, CS is down 5.14, NCMI is up 2.1, Ape is up 1.78, and AMC is up 1.16. This line that you're seeing heading up here right now is kind of like a 5-minute outlook where I think price should be heading towards over the next couple days. What I would like to see happen, I'm not necessarily stating I think this is exactly what's going to happen, but more or less what I would like to see have happen ideally. We are heading up towards it. I don't think it's going to follow right up this line. Of course, there's going to be maybe some upwards momentum above it, maybe down below it, or ultimately it may not even follow this at all. I mean, it's just kind of this is ultimately the direction that we want to see the price heading, and a good closeout for the day-to-day somewhere around that like 636 range would be ideal. Taking a look at inflow versus outflow, we have just barely like 600,000 more, 60,000 rather, more dollars in flow than outflow. Shares traded so far for the day today on AMC. What is going on with my calculator? Calculator's frozen. Uh-oh. Okay. There we go. After 100 minutes of trading, let's see here. We're on pace for 26.52 million shares by the end of the day today on AMC. I suggested somewhere between 20 and 40 million shares. I'm going to get lucky here. I raised, if we hit today, if we hit 20 million shares traded by the end of the day today on AMC, I'm going to get lucky because pre-market was suggesting we would see that an elevated amount of volume, and I figured I could increase the amount of volume that we would see to 20 to 40. Hopefully I end up getting this right, but chances are we're going to see this drop below 20. Unless we see a spike in volume at some point later on this morning. Taking a look at 1 hour time interval, there's currently more buying pressure than selling pressure than RSI of 51.08, which is right down the middle. On a 30-minute interval, oh my. My computer just said nope. Hopefully I'm still streaming here. All right. Still shows I'm streaming. That's good. On a 30-minute interval, there's more equal amounts of buying and selling pressure with an RSI of 56.87, which is slightly above average. On a 5-minute interval, there's more buying pressure than selling pressure with an RSI of 69.93, which is above average and almost signaling oversold. On Ape, there's approximately $300,000 more inflow than outflow for the day-to-day, with 2.9 million shares traded so far. After 102 minutes of trading, that's a pace for 11.08 million shares when I suggested somewhere between 5 and 25 million. I don't think we'll have any problem hitting that. There's currently on the 1 hour time interval more selling pressure than buying pressure with an RSI of 55.53, which is slightly above average. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 54.14, which is slightly above average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 54.12, which is just slightly above average. AMC is getting a nice little boost of price momentum. Just want to see if we're on an ascending parallel channel. Nope. If we are, yeah, I don't think so. All right, with that, guys, Christopher Bate, I am not the guru. I kid you not, man. I'm just like the rest of us here. I'm no better than anybody else here. I'm just another dude, playing a dude, hanging out with the dudes and the dudettes. That's it. Yeah, NC Proud Dad, we had a link for that earlier this morning. For that, let me go ahead and pull up that meeting here. The House looks like the hearing is called Hearing on Collapse of Cryptocurrency Company FTX. The Senate Banking, Housing, and Urban Affairs Committee examines the collapse of cryptocurrency company FTX and the resulting impact on consumers. Let's go ahead and take Apex says dudes. I'm not disguised though, so I can't say that. I'm not disguised. Well, actually, I guess with the beard right now, kind of disguised as another dude, because like the beard, I guess kind of counts. Because I don't normally have a beard, except for the last 2 years of my life. Actually, it's been less than that. It's been less. It's only been it's been just slightly over a year now. Just so you guys know. If you want to know what a beard looks like with minimal trimming, just enough to get by so that you look decent, this is what a beard can look like after 1 year's worth of time. Just in case anybody was wondering, this is how long it takes. Yale says, here's an interesting poll for you, Casey. How many people think that SBF will be silenced before he even gets to the U.S.? I would say, I don't know if I want to put that up there. I know where you're going with that. I want to try to reword it a little bit. Maybe I'll put the poll up here. Tech We Love says, Casey, the whole SEC is speaking. I feel like my words are falling flat. What are they saying? I'm missing it. What's going on, man? I'll wait for you to write something in. I'm going back. I'm scrolling back up to see what you said here. Let's see. Casey Ginsler is live. All right. We'll check Ginsler out. Maybe Ginsler's a little bit more fun to watch. Where is he live at? Is he live on that housing, what am I saying? The Senate Banking and Housing and Urban Affairs Committee, or is he live someplace else?
We're good to rock and roll.
I don't see anything. Michael says, Casey, that you didn't choose the beard chooses you. SEC Gov. Okay, hold on a second. I'm trying to pull it in
liquidity.
here.
When investors have confidence they are not participating in the market with better informed insiders, they may be more willing to trade the issuer's shares. The final amendments may also help compensation to do what it is meant to do, align interests of shareholders and executives. At the same time, these rules may make it somewhat less convenient for affected insiders to trade, and they may also result in compliance costs in terms of disclosure obligations, but these costs may be mitigated by the tailored scope of the rule. In closing, I would like to extend my sincerest thanks to my colleagues in the Division of Corporation Finance, the Division of Enforcement, and the Office of the General Counsel. Thank you, and I'm happy to answer any questions.
Thank you, Renee, Sean, Jessica, and of course, all the teams. Commissioner Peirce.
Thank you, Mr. Chair, and thanks to Renee, Sean, and Jessica for those presentations. While this rulemaking is more prescriptive and restrictive than I would have preferred, I support it.
Boy, that's terrible.
For likely doing more good than bad. It should help insiders to trade without fear of liability while making it more difficult to misuse 10b5-1 plans. Evidence cited in the adopting release suggests that some
This is terrible.
Some executives may illegally trade based on MNPI and try to cover their tracks through 10b5-1 plans. For example, insiders might try to game Rule 10b5-1 by selectively canceling overlapping plans to avoid a lousy trade. Much of the Commission's solution to this problem is reasonable. Most importantly, the rule imposes a cooling off period for entering and exiting plans. The rule also limits overlapping plans, but allows them, if they facilitate sales, to cover tax obligations related to the vesting of a compensatory award like a restricted stock. Further, in response to commenters, the final rule is improved over the proposed rule. Among other improvements, the final rule drops the unnecessary and likely unworkable changes to 10b5-1 plans for issuers. It improves the definition of non-10b5-1 plans. I question the need for quarterly disclosure about these plans, but the definition is more precise than the proposal's expansive and confusing one. The final rule also reduces the number of disclosures. It contains fewer costly disclosure requirements. For example, the rule will not require directors or officers to disclose pricing information about their 10b5-1 plans. And the tabular chart about certain forms of equity compensation is more reasonably scoped. While I generally support tailored 10b5-1 plan reforms, the new regime in the final rule is still unnecessarily restrictive. For example, the final rule imposes a longer cooling off period than is necessary, even though it is shorter than proposed. Many commenters reasonably called for a period as short as 30 to 60 days. A longer period could discourage the use of 10b5-1 plans. It also conditions the availability of the defense on acting in good faith with respect to the plan. The final rule provides that the individual relying on the plan must have acted in good faith with respect to the plan. Although better than the language, the ambiguous operated in good faith language that was in the proposal, this condition I think is still unnecessary. The inclusion of the condition could create unnecessary concern for insiders in the execution of their duties. The final rule also includes unnecessary disclosures around options. The final rule, like the proposal, requires companies to prepare a table relating various material events with the issuance of options and similar instruments. Some disclosure may be merited, but the rule's granular tabular requirement could be more noise than signal. It could suggest a non-existent relationship between the material events and options grants. The rule's narrative requirement for companies to discuss policies and practices on the timing of awards would suffice, I think, to address any concerns about this type of compensation. The final rule also requires publication of insider trading policies on EDGAR, or companies have to explain why, if they don't have insider trading policies, they don't have them. The Commission, I think, should have just allowed companies to publish those policies on their website, which would have reduced costs and made it easier for companies to update their policies and would be easy for investors to find those policies as well. It also applies unreasonable deadlines for bona fide gifts for Form 4 reporting. The rule requires, as you heard, certain executives to publicly report those gifts on Form 4 within 2 days of the reportable transaction. While the current lag is too long, the final rule, I think, the reporting deadline is too short. And then the final rule also lacks a financial hardship exemption. Insiders with legitimate reasons for trading and no MNPI may avoid trading anyway for fear of an SEC investigation. And it fails to allow individuals to rely on a 10b5-1 plan if they were aware of MNPI when they entered into the plan, but knew that MNPI would become public before trading under the plan could begin. Although also true of existing regulations under 10b5-1, we could have revisited this requirement as part of imposing a certification requirement on directors and officers entering into Rule 10b5-1 plans. But despite these concerns with some of the details of the new rule, addressing the kind of regulatory gaps that may have enabled the abuse of 10b5-1 plans is an excellent example of what should occupy the Commission's rulemaking agenda. While I disagree with some of the policy choices, I am pleased that my colleagues were able to settle on a final rule that I could support. Instrumental in getting to this point were staff across the Commission, including Corey Clemmer on the chair staff, numerous staff in the Division of Corporation Finance, Dorothy McQuaig, David Lisitsa, and Bryant Morris in the Office of General Counsel, the Division of Economic and Risk Analysis, the Division of Enforcement, and others across the Commission. I do have one question. As I noted in my statement, the final rule provides that the individual relying on the plan must have acted in good faith with respect to the plan. What does that mean? And is the language targeting bad behavior, is this language targeting bad behavior sort of duplicative, since it seems to me that we already have the ability to address the kinds of conduct that we're going after with that active in good faith?
Thanks. I'll be happy to address that question. Just with respect to the term good faith, or the requirement to act in good faith is already part of Rule 10b5-1 as it was adopted in 2000. So that term is not a new term with respect to this rule, so it should already be well understood by officers, directors, and their attorneys. But generally speaking, good faith has been defined as honesty in a person's conduct or honest dealing. And with respect to the rule, acting in good faith with respect to the plan includes any trading under the plan, and it means that insiders should not be attempting to evade the prohibitions of the rule. And we have some examples in the release that an individual should not be using their influence to affect the timing of a corporate disclosure, for example, to occur before or after a planned trade under the trading arrangement. And if they were to do so, that may not be acting in good faith with respect to the plan. And that's just one example that's included in the release.
Well, thanks, Renee, for clarifying. Yeah, it was the acting with respect to the acting in good faith with respect to the plan that I'm trying to discern what that means. And so it does seem to me that the example you mentioned and other examples in the release are already things that we could pursue. Am I wrong about that?
I think the point is just to clarify that the good faith requirement applies not just at the time of the adoption of the plan, but also during the duration of the plan, and that any attempts to evade the restrictions of Rule 10b-5 or Rule 10b-5-1 may be considered not to be acting in good faith and the person may not benefit from the affirmative defense in those instances.
Okay, thank you, Renee. I don't have any other questions.
Thank you, Commissioner Peirce. Commissioner Crenshaw.
Good morning. Thank you. A lot of this you'll have heard already from my colleagues, but by virtue of their positions, executives and certain other corporate insiders are routinely exposed to material non-public information. Unpublished financial results, advanced merger discussions, unannounced business risks that may have materialized. Trading on that information ahead of the public undermines confidence in our markets. In light of that, but also with the understanding that there will be times when executives need to sell some portion of their holdings for personal reasons, roughly 20 years ago, the Commission allowed for what are known as these Rule 10b-5-1 plans, which enable corporate insiders to establish a formal plan setting forth a pre-established formula that would trigger stock sales. If this plan was established while the insider had no material non-public information, the rule would provide an affirmative defense for the plan trades against allegations of insider trading. Once those plans were put into place, however, under the original 10b-5 rules, they could be modified with ease and without public disclosure. Because the plans were so flexible, executives could avail themselves of the affirmative defense while at the same time amending their plans in advance of corporate announcements that would likely move stock prices. As written, those rules have ceased to provide appropriate investor protection, and data show have been abused. As I noted in March of last year, it's well past time to revisit these insider trading rules. So I'm pleased that after data-driven deliberative process, including a proposal in December, that we are doing just that. Today, the Commission adopts new rules for insiders that prohibit single trade plans with a limited exception to provide for unexpected liquidity needs, that prohibit overlapping plans, that require a cooling off period and officer and director certifications, that establish an amended good faith condition, as you just heard a little bit more about, that mandate new disclosures of the registrant's policies and procedures, of certain options awarded to named executive officers, and of the plans used by officers and directors. And that also finally require a checkbox on Form 4 clearly indicating when transactions are made pursuant to 10b5-1 plans. These protections should help limit the scope of 10b1 plans to situations where insiders are truly trading without the unfair benefit of material non-public information, and protect against opportunistic trading. And in doing so, they should help bolster confidence to the public and the market that the proverbial deck is not stacked in favor of the House. As always, thank you to the staff of the Division of Corporation Finance for their hard work and many, many late night hours. Thank you to enforcement for their counsel and advice on this one. And of course, last but not least, the Office of the General Counsel, the Division of Economic and Risk Analysis, exams, and my fellow commissioners and their staff for their hard work on this rule and dedication to the public and the markets. Thank you.
Thank you so much, Commissioner Crenshaw. Commissioner Ueda.
Good morning, and thank you, Chair Gensler. The Commission initially adopted Rule 10b5-1 under the Securities Act of 1934 in the year 2000 and has not revised it since. In the past 22 years, thousands of public company employees, directors, and officers have entered into written plans designed to satisfy Rules 10b5-1's affirmative defenses. These 10b5-1 plans have received much scrutiny because of concerns that corporate insiders have claimed reliance on the affirmative defense while possibly trading on material non-public information. Today's amendments are intended to address these concerns, attempting to strike the right balance between eliminating opportunistic behavior and providing a rule that can be implemented on a practical basis. While I support the final amendments, which have been reached through discussions among the commissioners individually, not in violation of the Government Sunshine Act, through our staffs, I hope that market participants will provide the Commission with feedback on whether the right balance was struck. As noted by some commenters, having a 10b5-1 plan as a viable option for trading is beneficial to public companies, their shareholders, and their employees. For example, by using 10b5-1 plans, insiders can spread their trades over time, which can decrease market volatility. In contrast, without 10b5-1 plans, insiders may concentrate a high volume of trades within a short period, such as during a company's trading window. Equity compensation is an important component of employee pay packages and align the interests of employees with shareholders. 10b5-1 plans allow employees to monetize equity compensation while complying with the insider trading laws. However, making it difficult for employees to sell their shares of company stock means making that form of compensation less valuable. If so, equity compensation might increase to compensate for the increased liquidity risk. The final amendments provide a cooling off period for directors and officers that will be between 90 and 120 days. The cooling off period is the most effective mechanism to ensure that an insider is not trading on the basis of material non-public information. An unnecessarily long period may discourage insiders from relying on 10b5-1 plans because of the need for more immediate liquidity. The final amendments prohibit, with limited exceptions, multiple plans that are overlapping, as well as plans designed to affect the purchase or sale of all securities covered by a plan in a single transaction. For the overlapping plan prohibition, the provision aims to address concerns that insiders are adopting multiple plans and selectively canceling the unfavorable plans. For the single plan trade plan prohibition, the rationale seems to be an academic study that found single trade plans consistently outperforming the market. But the final rule's use of prophylactic prohibitions to address both situations may unnecessarily restrict the use of overlapping plans or single trade plans established for legitimate reasons. The final amendments also introduced the broad concept of good faith for insider actions with respect to 10b5-1 plans after adoption. Good faith is an inherently subjective determination. The potential uncertainty of whether a person's actions after his or her adoption of a plan will be deemed, in hindsight, not constitute good faith may similarly render amended Rule 10b5-1 to be difficult to implement. The final amendments require some of the new reporting to be made using structured data. While I generally support the use of structured data for material disclosure in SEC filings, which makes them far more useful than a static HTML or ASCII page, I am concerned about the lack of a plan to implement structured data, whether that be XBRL or XML, on a more thoughtful and comprehensive basis. Instead, the Commission's implementation has been largely random and piecemeal, mainly for new executive compensation and proxy voting rules. However, the Commission has not given any consideration to what material existing disclosures ought to be prioritized for reporting as structured data, like management's discussion and analysis and the data contained therein. This lack of an overall plan for structured data is a shortcoming of the Commission and one that ought to be rectified. Now, with respect to today's amendments to item 402 of Regulation SK, this will be the third change to item 402 since I became a commissioner 5.5 months ago. The addition to paragraph X of item 402 is somewhat puzzling because the required narrative disclosure is already required by the Commission's existing compensation discussion and analysis rules, and the information required by the tabular disclosure is otherwise publicly available. Before we reach the end of the alphabet for future subparagraphs of item 402, I hope that the Commission carefully weighs the effectiveness of executive compensation disclosure versus its costs. Despite these concerns, I support the recommendation and look forward to any feedback from the public on the final amendments. I thank the staff in the Division of Corporation Finance, Division of Economic and Risk Analysis, and the Office of General Counsel for their work, as well as Chair Gensler's Corporation Finance Council. I would like to specifically acknowledge the efforts of Felicia, Sean, John, and Pearl from CorpFin's rulemaking office for the many hours they've worked over the last few days to bring this recommendation to a conclusion, and more importantly, to make sure that we've got, to the greatest extent possible, all of the very precise, important details that will need to be implemented by companies, their counsels, and ultimately the persons who are responsible for making their various filings. You know, this process started with a pretty detailed comment summary, which allowed me to fully understand the issues raised by commenters. This facilitated several fairly thoughtful conversations with staff from the chair, my fellow commissioners, as well as the CorpFin staff and others in the commission to outline a final rule that the staff could develop into a final adopting release. This process worked really well. And I've been sometimes critical on our rulemaking process in the past, but I think it's equally important to recognize when I think the rulemaking process has performed at a very, very high level. And I've seen a lot of rules, and this one, the amount of collaboration and discussion with the staff has been at the top. So I really kudos to all of those who've been involved in getting this to the finish line. Thank you, and I don't have any questions.
Thank you, Commissioner. Commissioner Lizarga.
Thank you, Chair Gensler. Good morning. Today, the Commission adopts reforms designed to tackle insider trading by corporate insiders. These reforms will strengthen investor protection and the integrity of our securities markets. The Commission first adopted Rule 10b-5 over 20 years ago. Since then, courts, several academic studies, members of Congress from both sides of the aisle, the SEC's Investor Advisory Committee, and other stakeholders have all raised concerns about flaws in the rule's original design that have enabled corporate insiders to trade securities opportunistically while enjoying the liability protections of Rule 10b-5-1. The common sense targeted amendments proposed for adoption today are born out of the 20-plus years of Commission experience with executive trading plans and are designed to fulfill the intent of the original rule to meaningfully prevent insider trading by corporate insiders. Insider trading is not a victimless crime. It erodes trust in our markets, undermines market integrity, distorts shareholder value, and harms investors. When ordinary investors see that corporate executives can legally manipulate the rules for their own benefit, and in doing so, misuse material non-public information without consequences, it raises valid questions about whether these practices undermine fairness and transparency in our markets. Why would investors devote considerable time to gathering information about a company and investing in the stock market if they're having to compete against insiders who have access to a cheat sheet with the correct answers? That isn't fair competition. Closing some of the rules loopholes as we're doing today will provide investors with the confidence that there's a level playing field. Overall, today's amendments are designed to significantly reduce opportunities for corporate insiders to misuse 10b-5-1 plans. The amended rule adopts new cooling off periods as a condition of using these plans. The later of 90 days or after the release of the next quarterly earnings for directors and officers, and 30 days for all other insiders. This will deter insider trading based on material non-public information about quarterly earnings, as well as other types of material events such as mergers or acquisitions, management changes, or regulatory approvals. Cooling off periods by themselves aren't sufficient, however. To avoid situations where directors and officers can intentionally game the timing of disclosures after entering into a 10b-5-1 plan, corporate insiders are required to act in good faith, not just when they enter into a plan, but through the life of the plan as well. The amended rule also provides for limits on multiple overlapping plans, which prevents insiders from selectively canceling unfavorable plans based on material non-public information. Similarly, the amended rule limits single trade plans to one every 12 months. Research shows that trades under these sorts of one and done plans may be particularly profitable, even if there's a cooling off period. Finally, the amended rule provides for enhanced disclosures of insider trading policies, the material terms of 10b-5-1 plans for directors and officers, and certain options disclosures that occur immediately before public filings. The rule in place currently does not require disclosure of a company's use of 10b-5-1 trading plans. This information gap prevents investors from assessing whether corporate insiders may be using material non-public information for personal gain, which undercuts the rule's effectiveness. To be clear, the confidential information of issuers belongs to the company and its shareholders, not to insiders. So investors have a right to understand how issuers protect material non-public information from being misused. I'm pleased to support the adoption of today's rule and would like to thank all of the Commission staff, particularly in the Division of Corporation Finance, for their hard work. Thank you.
Thank you, Commissioner. Thank you, all four commissioners. I'm also pleased to support the new requirements because if adopted, I think they will close potential gaps in our insider trading regime. I have a longer statement that we'll post on the website, but since it's consistent with what my other colleagues have said, I'm just going to focus on a couple of things. Look, I think the core issue is that company insiders regularly have material non-public information. And so how, given that they have stock-based executive compensation, and that compensation is important. It's important to boards, it's important to shareholders, it incentivizes not only senior leadership, but also other executives and staff to be aligned with the shareholders, how to meet those different policy goals. And as you've heard, 20 years ago, our commission, or 22 years ago, maybe, our commission tried to put in place an organization called 10b5-1 plans, or a way to have some safe harbors for them. I think what we found over those 20 years that there have been these affirmative defensive, as they're technically called, for corporate insiders and companies. There's been gaps in that. So I'm pleased at this point in time that we're addressing those gaps. And as Commissioner Lizarga said, that inside information is not theirs, it's the companies. And who owns the companies but the shareholders? And so it's a matter of fair competition and trust in our capital markets. The 4 ways that we're addressing it, the cooling off periods, I was comfortable in making sure that the senior executives still have to wait at least 90 days or until the next quarterly reports are out. So it could still be as long as 120 days, but that for other participants in the plan beyond those more senior folks, it's 30 days. And then making sure that there's no, as other commissioners call it, the one and done, but only single trade plans once every 12 months. That the condition also is that senior officers or officers and directors, more appropriately, will certify that they're not in possession of material non-public information, and that to rely on the affirmative defense that everybody is subject to this, the insiders, to the good faith condition. Today's amendments also establish a number of new disclosure requirements about the officers and directors and then the company's disclosures. They update the forms in ways that I think are appropriate. And I think that these issues really do speak to the confidence that investors have in the markets. When you have so many commenters, whether academics, whether it's members of the public, members of the press, members of Congress, commenting about why the insiders apparently be trading something based on that material non-public information, that lowers the confidence in markets, but actually on the margin also could also raise the cost of capital for businesses that are doing things right. I think with this role, it helps lower the cost of capital as well for everybody. We did benefit a lot from the public comment period. We did make some modifications, as my fellow commissioners mentioned, not only about the cooling off periods, but also not adopting the cooling off period for issuers and providing for some phased implementation for disclosures for smaller reporting companies. Tremendous amount of work goes into something like this, and my colleagues have talked about this team effort. We would be here too long if I had to read all the names, but they'll be on the public website. But the Division of Corporate Finance, Division of Economic Risk Analysis, the Office of General Counsel, for the public, those are generally the groups that always align when you have a proposal like this. But it takes a lot more than that. Division of Enforcement, the Edgar Business Office, all of the commission councils, the commissioners themselves, and coming to what, not prejudging, but it sounds like might be a unanimous vote. So I do really want to thank my fellow commissioners and thinking through this all together and trying to find where we can ways to find agreement. With that, how do my colleagues vote?
Yes.
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 I didn't do that. Yep, it sure does look like I'm sleeping in my chair.
Yes, the ayes being unanimous, the rule is adopted and will be sent to the Federal Register. I want to thank everybody. I think if it's all right with my fellow commissioners, we'll move to the next rule, but please shoot me a text or an email if you want to take a break after this, the first of the next 4. Right now, we do have a 10-minute break scheduled after two of the equity market roles, but it's no shame if somebody wants to shoot me an email. We'll take breaks when people feel appropriate. With that, I will turn over to Hashang Zhu, Director of Division of Trading and Markets. Hashang, you'll be with us for 4 of these right now, but to introduce the proposal regarding disclosure on execution quality. Over to you.
Good morning, Chair Gensler and the Commissioners Peirce, Crenshaw, Ueda, and Lizarraga. Today, the Division of Trading and Market will present to you 4 separate recommendations. As the Chair mentioned, 3 of them are equity market structure. The 4th addresses best execution of all securities. Before discussing any specific recommendation, I want to take a moment to express my deepest gratitude to the trading market staff for the extremely diligent and thoughtful work over the last 18
NC Proud Dad, it's not porn. I'm going through my tweets. Oh, man. I'm waiting for this thing to buffer.
the receive for
This guy talks too fast. He talks too fast for my internet.
execution. Market centers must provide specified measures of execution quality, including effective spread, average amount of price improvement, number of shares executed, and the speed of execution, among others. In the 2 decades since its adoption, Rule 605 disclosures have provided valuable insight into the execution quality of market centers. But the equity market itself has also evolved dramatically. The content of the disclosure required by Rule 605 has not been substantively updated to reflect those changes. We are now recommending updates to broaden the coverage of Rule 605, as well as to add more information to the disclosure. There are 3 aspects of this proposal. First, we recommend expanding the scope of entities subject to the rule. The proposal requires, for the first time, that broker-dealers with a large number of customer accounts make available to the public monthly execution quality reports. Because 605 reports prepared by market centers commingle orders from all broker-dealers that send orders to the reporting market center, investors may not be able to discern the execution quality of their specific broker-dealers. The division therefore recommends amending Rule 605 to require large broker-dealers to make available monthly standardized execution quality reports in order to provide visibility into these variations. Direct information about the execution quality of broker-dealers would enhance transparency and competition by making it easier for investors to compare broker-dealers based on standardized metrics of execution quality. We're also recommending amending Rule 605 to require separate reports for single dealer platforms, as well as for market centers that would operate qualified auctions, which are an element of a separate proposal that I'll discuss later today. Requiring separate reports would provide transparency into the execution quality achieved at each of these market center types and encourage competition among market centers and broker-dealers. Second, we recommend updating and requiring execution quality metrics to make them more granular, useful, and relevant. Our recommended changes would increase the available information for certain order types and sizes that now trade with more increasing frequency, and would also better reflect the increased speed of trading. There are many specific changes, but let me just highlight a few. We recommend changing the existing order size categories to base them on round lots rather than number of shares. We recommend including additional order size categories for fractional shares, allowed orders, and large size orders. We recommend requiring statistical measures of execution quality, including average effective over quoted spread, percentage effective and realized spread statistics, a size improvement benchmark, additional price improvement statistics for market and marketable order types, and certain statistical measures that could be used to measure execution quality of non-marketable limit orders. There are many others. Third, we recommend enhancing the access of the required reports by requiring all entities subject to Rule 605, to also make available a new summary execution quality reports. Requiring market centers and large broker-dealers to produce these summary execution quality reports would allow market participants and other interested parties to have more ready access to high-level, human-readable data. that will allow them to compare some of the more significant aspects of the execution quality provided by specific market centers and broker-dealers. I will now turn this over to Lauren Yates and then to Kathleen Gross, both in the Office of Market Supervision, who will discuss the proposal in more detail. Thank you.
That reminded me of a South Park episode.
Thank you, Hashan. Good morning, Chair Gensler and Commissioners Peirce, Crenshaw, Ueda, and Lizarga. The division is today recommending several rule changes to update the disclosures required for order executions in national market system stocks under Rule 605. I will now highlight those recommended changes that would impact the scope of entities subject to Rule 605 and provide an overview of the proposed requirement for reporting entities to produce summary reports in addition to the more detailed reports. As Hashan previously discussed, the division recommends that the Commission propose amendments to Rule 605 that would expand the scope of entities that must produce monthly execution quality reports to include broker-dealers who introduce or carry 100,000 or more customer accounts. Under the proposal, a broker-dealer that meets or exceeds this threshold and is also a market center would be required to produce separate reports pertaining to each function. Currently, Rule 605 reports prepared by market centers commingle orders from all broker-dealers that send covered order flow to the reporting market center, even though market centers may provide different execution quality to customers of different broker-dealers, and in some cases, this difference may be substantial. Expanding the scope of reporting entities to include broker-dealers with a larger number of customers would increase transparency into these differences in execution quality and increase competition among broker-dealers that accept customer orders for execution, which could lead to faster executions, better price improvement, and a shift in order flow to those broker-dealers that offer the best execution quality for their customers. Further, the proposed amendments would require market centers that operate single dealer platforms to produce separate 605 reports pertaining to covered orders submitted to these routing destinations, and would also require market centers that would operate the qualified auctions that will be discussed later as part of another proposal to produce separate 605 reports pertaining to covered orders received for execution in such auctions. Requiring separate 605 reports would allow market participants to assess the execution quality of each market individually and avoid obscuring differences in execution quality that would not be apparent in blended execution quality statistics. In addition, the proposed amendments would require all entities subject to the rule to make a monthly report available that would contain summary execution quality statistics in a standardized format, with a focus on price-based information and execution speed. Current Rule 605 reports are contained in large electronic data files that are machine readable and therefore more suitable for further processing and analysis than for direct review. The proposed summary reports would improve the accessibility of Rule 605 data by providing human readable information that market participants, and in particular individual investors, would be able to use to compare some of the more significant aspects of execution quality across reporting entities. I would now like to turn the microphone over to Kathleen Gross to discuss the division's recommended changes regarding what information should be reported under the rule.
Thank you, Lauren. Good morning, Chair Gensler and Commissioners. The recommended amendments would update both the scope of orders covered by the rule and the content of the monthly reports. As Hashan mentioned, Rule 605 has not been substantively updated in over 20 years. Given the developments in trading over time, modernizing the rule would provide market participants and members of the public more insight into execution quality. For example, certain order types and sizes, including odd lot orders and orders smaller than a share, are not captured in Rule 605 reports, but now trade with increasing frequency. The division is recommending proposed updates to the rule in order to better reflect the speed of the marketplace and increase the usefulness of the execution quality metrics required by the rule. The scope of the rule would be updated as follows. First, the amendments would expand the definition of covered order. Because 605 reports are intended to provide cross-market comparisons of execution quality, in order to provide apples-to-apples comparisons, only covered orders are included in Rule 605 reports. Generally, this excludes orders with special handling, such as not held orders and orders that are submitted or executed outside of regular trading hours. The expanded definition would include certain orders submitted pre-market and post-close, certain orders submitted with stop prices, and certain non-exempt short sale orders. Second, the existing order size categories would be modified to base them on round lots rather than number of shares, and include additional order size categories for orders smaller than a share, odd lots, and larger sized orders. This proposed change would better group orders of similar notional size and provide execution quality information about a larger segment of order flow. Third, the proposal would modify how orders are categorized by order type. The current order type categories are market orders and marketable limit orders, as well as 3 types of non-marketable limit orders that are just outside, at, and inside the quote. The proposal would add a new order type category for marketable immediate or cancel orders. In addition, the proposal would replace the 3 existing categories of non-marketable limit order types with 3 new categories. Specifically, the proposed amendments would add new order type categories for beyond the midpoint limit orders, which would be limit orders priced better than the midpoint that do not fully cross the spread, executable non-marketable limit orders, and executable orders with stop prices. Adding the concept of executable for non-marketable limit order types would allow execution quality statistics to be measured from a point where an order could potentially be executed, and would bring them within the scope of the rule if they become executable during regular trading hours. In addition to the changes to the scope of orders covered by the rule, the division is recommending updates to the information contained in the reports required under Rule 605. First, the current time to execution reporting categories would be eliminated and replaced with average time to execution, median time to execution, and 99th percentile time to execution, each of which would be measured in increments of a millisecond or finer. Because non-marketable order types would be within scope from the point they become executable, we are recommending that time to execution statistics and effective spread statistics be measured from the time these orders become executable. Second, average realized spread statistics would be required to be calculated after 15 seconds and 1 minute instead of the current 5-minute time horizon. Third, the proposed amendments would require new statistical measures of execution quality, including average effective over quoted spread, percentage effective and realized spread, and a size improvement benchmark. Fourth, for marketable order types, we recommend adding price improvement statistics that show price improvement relative to the best available price displayed in the market, even if such price is a displayed odd lot price. Finally, we are recommending additional statistical measures to help better analyze execution quality of non-marketable orders. Overall, the goal of the proposed rule amendments is to improve the ability of the public to compare and evaluate execution quality among different market setters and broker-dealers, and, in turn, promote increased transparency of order execution quality, increase the information available to investors, and help promote competition among market centers and broker-dealers. Now, I will turn it over to Jessica Wachter, Director of the Division of Economic and Risk Analysis, to discuss the economic impact of the proposed rule changes. Thank you.
Thank you, Kathleen. Chair Gensler and Commissioners. Current 605 requires the reporting of execution quality statistics of market centers, namely exchanges, market makers, and any other entity that holds itself out as willing to accept and execute orders in NMS stocks. So this required reporting includes statistics of execution quality relative to the NBBO, such as how much price improvement certain orders receive, and statistics relative to the midpoint at the time of execution or shortly thereafter, the effective or the realized spread. These statistics are an important piece of transparency in today's markets. However, up until now, a piece has been missing, and that's an important piece. And this piece is the execution quality at the level of the individual broker-dealer. Our own research, as well as research by outside economists, shows that the quality of execution differs between brokers, and that market center level execution statistics do not tell the entire story. The proposal, as you've heard, would mandate Rule 605 disclosure for broker-dealers with 100,000 or more customer accounts. This is an important step forward in transparency in our financial markets. In addition, the proposed amendments would make a number of modifications to the reporting itself. Execution quality tends to vary by order size. It may be harder or easier, depending on the market, to trade a large order than a smaller one. However, whether an order for a particular number of shares is large or small depends a great deal on the stock price. The proposed amendments to Rule 605 would create buckets based on round lots, not number of shares. In a world where prices can differ by several orders of magnitude, this would more meaningfully categorize orders. Also, markets are faster than they used to be. The proposed amendments would update timestamp conventions, as Kathleen described. They would shrink the time frame also used to calculate realized spreads. The proposal, as you've heard, would include a measure of size improvement, which measures when a market center improves on the quantity at the best price. These measures would come with compliance costs, which would be greatest for those reporting for the first time. We believe, however, that most reporting entities likely already collect the information that would be required under the new Rule 605 amendments. In closing, I want to thank my colleagues in the Division of Trading and Markets and the Office of the General Counsel, with whom we have worked closely during the development of these proposed amendments.
Thank you so much, Jessica, Hashang, Lauren, and Kathleen. Commissioner Peirce.
Thank you, Mr. Chair, and thanks, Hashang, Lauren, Kathleen, and Jessica. And thank you to the staff who worked on the release and the rest of the package of proposed reforms to the structure of our capital markets that we're considering today. The 4 releases in that package are here before us because a lot of members of the staff worked late, worked weekends, and missed out on time with family and friends. I appreciate your hard work over the past several months on all these releases and your engagement with my office. And I hope that you'll all find some time to relax over the holidays before the comment letters start pouring in. As will become clear over the upcoming hours of discussion, the reforms embodied in these 4 proposals are complex and will likely have significant overlapping and unpredictable effects on the way our markets operate. As will also become clear, I doubt that our markets require a significant overhaul now. They've weathered quite well several remarkable stresses over the past 3 years, and retail and institutional investors continue to experience unparalleled execution quality, particularly in our equity markets. There is no emergency in our markets that demands a comprehensive revamping of how broker-dealers and market makers handle customer order flows. Commenters will struggle to conduct a thorough analysis of each of these voluminous and complicated proposals individually. An even more daunting task will be understanding and analyzing them as what they clearly are, a package of comprehensive reforms that will interact both with the existing rule set and with each other in complex and likely unpredictable ways. Moreover, the market data infrastructure reforms that we adopted 2 years ago have not yet taken effect, so uncertainties around those changes will affect the market, and that will be another wrinkle in our analysis. Of course, the Commission always should be open to making adjustments to its rules to address discrete issues that we or our market participants identify. But effective regulation requires a good deal of prudence and humility on the part of the regulator. Our financial markets are complex. Our ability to comprehend fully how they function and predict the effects of significant changes is limited. Accordingly, we should not be overconfident about our ability to make significant market structure overhauls in a market that's functioning well, albeit not perfectly, for retail and other investors. We need to recognize that our efforts are not guaranteed to produce even marginal improvements. Indeed, the mere possibility of such improvements may not justify risking significant disruption to the market. Some elements of today's package, however, involve proposals to make certain fairly discrete changes that market participants have long discussed as possible ways of addressing particular problems in the market. I can support those proposed changes, and I expect that many commenters will too. Among these are the amendments to Rule 605, which you just heard described. Rule 605 was initially adopted in 2000 when the market was quite different, and its age shows. By most accounts, the current rule does not provide sufficient information to judge execution quality under current market conditions. The proposal would establish more granular reporting requirements. The largest broker-dealers would have to report order execution information that should make the statistics more useful for customers and others seeking to understand order routing decisions and execution quality across a range of market centers and broker-dealers. The proposal appears to be a reasonable attempt to address deficiencies of the current Rule 605, but the Commission will still need input from market participants to make a final judgment. I look forward to hearing whether the proposed amendments will benefit investors. I also look forward to hearing whether any benefits will come at the cost of being overly burdensome to the broker-dealers and market centers that will be required to report order execution data in more detail than is required under the current rule, and if those costs will then be passed on to investors. Of particular interest to me are questions like the following. Who will use the data? Are the required data elements relevant to these users? Does it make sense to make certain broker-dealers report these data, and has the Commission identified the appropriate set of broker-dealers to subject to these requirements? Are the monthly summary reports going to be informative to individual investors in a way that the more detailed data required under Rule 605 will not be, even if that data will be synthesized and made available by third-party providers? Will the monthly summary reports create a different impression of order execution practices and quality than would be provided by the more detailed order execution information required under the rule? I hope that commenters will have the time to explain whether this rule taken on its own is a net improvement to useful decisions available to investors. I also look forward to hearing whether it would make sense to allow these changes to take effect before moving forward with some of the more fundamental changes we're proposing today. I do have a few questions. Has the staff considered how this rule is likely to affect the other rules being considered today if all are adopted at the same time?
Commissioner Peirce, I appreciate this question. And at a high level, all of these releases are aimed at promoting transparency, competition, and efficiency. On the other hand, they all address slightly different aspects of market structure. And we do believe that they stand on their own and they deliver their own benefit. Because we have not talked about the tick size and also OCR. If it's okay, can I defer your question? Unless my colleagues want to chime in already. I'll make sure to answer them once we present the additional two releases.
Sounds like a deal. I do have one question that I think you can answer now, which is, if these changes are adopted, will the Commission and the public be able to do an apples-to-apples comparison of execution quality before and then after the rules are adopted? Or will the changes to the 605 reports make that cross-time comparison very difficult to do?
I can take a quick reply, and the staff, please feel free to weigh in, Kathleen and Lauren. So currently, the market has some statistics about the execution quality, say, all-out orders. But now the Commission, if the rule got adopted, the broker-dealers and market centers would have to put in, say, for example, all-out execution quality. So in that respect, it is possible to create a comparison that way. And in any case, the comparison is also about across market centers and broker-dealers. I think to the extent that broker-dealers would be incentivized to provide more, better execution quality because there's more transparency, we also believe that there will be benefit in that regard. But my colleagues in TM and Sarah,
yes, the question is more because it's always hard to change a data reporting rule because you want to make sure that the data that you got before you put the changes in place, and the data that you get after you put the changes in place, that you can still do cross-time comparisons. And so, have you thought about how that particular aspect of it will work? I appreciate that some of the data will be brand new, and we didn't have data about these large broker-dealers, and now if this gets adopted, we would. But some of the data is just expanding what we already collect.
Right. So on this point, Commissioner, certain statistics, let's say one of them commonly used by the market is effective overquoted, effective spread over quoted spread. This is a new statistic, but I think this is one that we'll see potentially some changes to the extent the market centers and the broker-dealers would compete on that metric. And for the statistics that kind of in the existing 605 report and retained in the new 605 report, we do expect to see some changes as people compete on this metric as well. As it broadens the scope, competition would intensify in that regard.
Okay, well, I hope we'll take just the technical question of how are people who will be analyzing the data, how can they make sure that there's no interruption in their analysis based on the fact that we're coming up with a new rule. So I hope we can take technical comment on that as well and think about that and take that into account as we adopt. I don't have any other questions. Thanks.
Thank you, Commissioner Peirce. Commissioner Crenshaw.
Thank you. The equity market structures are a place where Americans can invest and grow their savings for everything from retirement to a child's education, to buying a new home, or taking a well-earned vacation. In order for the markets to serve this purpose, investors must have confidence in their trading venues and their market intermediaries. And this requires well-regulated, well-functioning markets that are efficient, competitive, and transparent. When investors lack confidence in the public equity markets, it may manifest in people seeking out other riskier investments, such as those offered in the more opaque private or over-the-counter markets, or involving non-compliant crypto entities. So the equity markets are complex and interconnected. Over time, new technologies, regulations, and other developments have caused the markets to change and evolve, sometimes in unanticipated ways. In order for the SEC to fulfill its three-part mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation, we must continually reevaluate our approach to market regulation, making adjustments as needed to respond to changes. I'm pleased that we're taking that responsibility seriously by proposing a package of new rules and rule amendments that's designed to improve outcomes for all investors, and retail investors in particular. Public comment is vital to every commission rulemaking effort, but particularly so here, where the issues, as you've heard, are highly complex and technical. And the staff has spent months, and in some cases years, working on today's proposals, which are designed to increase competition, transparency, and integrity in the markets. I look forward to hearing from market participants about whether the approach we're proposing today is the optimal one to achieve those goals, and whether there are other changes to the approach or other approaches that we should consider. With that introduction, I'll now turn to the first proposal before us today, which is designed to update and improve the disclosures that market centers provide about the quality of their executions of investor orders. As you've heard, Rule 605 requires market centers, such as exchanges, ATSs, and broker-dealer internalizers, to make monthly disclosures of standardized information concerning execution quality for orders in NMS stocks. This can help investors and intermediaries understand what happens to their orders after they are submitted for execution, and how price and other execution quality measures compare across venues. Since its adoption over 20 years ago, Rule 605 has provided valuable information about the execution quality offered by different market centers. For many years, however, commenters have noted that the scope and content of Rule 605 reports have not kept pace with changes in the markets. The amendments we are proposing today would modernize those disclosures by making a number of changes to the scope and content of the reports. I won't list them all, as the proposal has been summarized thoroughly by others already, but they include common sense updates, such as the inclusion of odd lots, which are an increasing proportion of orders in today's markets, and more granular timestamps to reflect the market's ever-increasing speed. Additionally, the proposal would expand the scope of Rule 605 reporting requirements to include large broker-dealers and would require all reporters to produce summary reports with aggregated execution quality information. The summary report should provide a more digestible source of execution quality information than the full reports, which are lengthy, detailed, and in some cases can be read only with specific processing software. I look forward to hearing from commenters about whether the updates we are proposing to make are the right ones, and if there are any things we should do differently. For example, only certain broker-dealers are scoped into the requirements. Should Rule 605 apply to all broker-dealers, as recommended by the Equity Market Structure Advisory Committee? Should the creation and formatting of the reports be standardized? Should the reports be made accessible in a central location? Are the summary reports likely to be helpful to investors? Thank you to the staff for their work on this proposal. As you've heard already from my colleagues, the staff in the Division of Trading and Markets, the Office of the General Counsel, and the Division of Economic and Risk Analysis have worked incredibly hard to put together the package of proposals we're considering today. They've also had assistance of staff in exams and enforcement and elsewhere throughout the Commission, and I extend my thanks to everyone who played a part in putting together this package. The amendments to 605 would make common sense updates to execution quality disclosures to make them more useful for investors, and I'm pleased to support the proposal.
Thank you, Commissioner. Commissioner Ueda.
Thank you, Chair Gensler. Today, the Commission proposes to update the Rule 605 disclosure requirements for order executions in the national market system stocks. Technology and market structure has evolved rapidly since the year 2000, when the Commission last addressed the substance of these disclosures. Speed is now of the essence. As the proposal notes, orders may be matched, routed, or canceled in microseconds, and market information is transmitted near instantaneously. Markets are now characterized by multiple venues, various types of orders, and the mix has changed over time. Today's proposal attempts to address these changes. Among other things, the proposal would require time-based metrics to be recorded at a more granular level, scope in more order types and sizes, and expand the scope of reporting entities. Pertinent, timely, and reliable public information on the quality of order executions is fundamental to the trading venue competition that drives innovation and serves investors so well. This outcome occurs when competitive market forces are unleashed. In 2000, the Commission emphasized this point when it said, quote, "By increasing the visibility of order execution and routing practices, the rules adopted today are intended to empower market forces with the means to achieve a more competitive and efficient national market system for public investors." Today's proposal continues that successful trajectory. When first contemplated, it was thought that investors using a particular broker-dealer could employ Rule 606 reports to identify the market centers to which their broker-dealers routed trades, and then they could employ Rule 605 to see the execution quality that those market centers provided, thereby receiving a better understanding of execution quality. In operation, however, there have been challenges to fulfilling that vision. For example, the execution quality that particular market centers provide may differ with respect to different broker-dealers, yet because market center data is commingled in the reporting, the specific execution quality that a particular broker-dealer is receiving cannot be readily observed by that broker-dealer's customers. As the proposing release indicates, extending Rule 605 reporting obligations directly to larger broker-dealers would increase transparency into the differences in execution quality achieved by broker-dealers when they route customer orders to execution venues, and thereby would make execution quality statistics more useful to market participants and other interested parties. This revision could enhance competition among venues as well as among broker-dealers that accept customer orders. This enhanced competition could result in faster executions, better price improvement, and a shift in order flow to those broker-dealers offering the best execution quality for their customers, as stated in the proposing release. If so, this rule proposal could be an example of a regulatory improvement that can increase competition among market intermediaries and thereby better serve investors.
All right, I'm gonna pause it right there. I can't take it anymore. I'm gonna do numbers, guys, and I'm gonna go to break because I gotta take a break. I gotta eat something. I'm tired. I did pass out for about 2 or 3 minutes right there. You guys weren't kidding when you said I was falling out of my sleep. When I woke up, I was slightly leaning to the side a little bit. I was like, dang, that was like 3 minutes because I was looking at the time. It was like right on the hour as I was starting to pass out. So it's 11:23. I got to do these numbers here real quick, guys, and I'll turn it back on. I don't know what this is going to do to the fact that I've paused it because I think when it ends, it'll just end early. I don't think it allows you to pause. So I got to get through these numbers really, really quick so I can get it back up there so you guys can hear some more about it. Yeah, I know he's talking about payment for order flow, Pantheon, but I got to get out. I got to get out of here on my break, or else I'm not going to get one, and I got to eat. So let me take you guys over to the other page here, and let me pull up the numbers, log in my broker. Two-factor authentication, guys. If you don't have it, you may want to get it. It could prevent somebody from getting into your account that shouldn't be there. Make sure you set up a secondary phone number or device that can receive the code in case something should happen. Let's take a look at our numbers real quick and see what's going on here. All right, starting with off exchange, by this time of the day, I would expect maybe probably about, I'm going to go with, I think about this time of the day, I think we would see about 61% of our volume going through the, between off exchange and CBOE EDGX, 61% would be about right. So let's take a look and see what we got on AMC. 60.24% going through off exchange, EDGX at 9.62. So the combined on that is 69.86. Very, very close to what it was an hour ago. So we're about 8% higher than where we should be for the day to day. Nothing unusual happening with CHX volume for the day to day. Let's see here. Off exchange for AMC is at 77.8. Or sorry, for Ape, I said AMC, I think. And EDGX is 7.54. Combined totals 85.34. So 14%, 24% higher than where it should be by this time of the day. And CHX volume is nominal. GME CHX volume has very slightly higher than the 30-day average, and CHX volume on HYMC is normal. Taking a look at Ortex, an hour ago there was 2.21 million shares having been borrowed for AMC. And apparently today I'm buffering for some reason. Either I'm buffering or let's see what you guys are seeing. You guys are getting excellent connection, so it might just be Ortex that I'm having a problem with here right now. There it goes. Finally went through. Let's see. So an hour ago on AMC, there was 2.21 million shares having been borrowed. It's now 2.19. Not much change. It's going to leave that estimated short-term interest, the free float, at 18.72%. Cost per hour minute, 19.83. Average, 22.58. Max at 26.87. Shares on loan is 166.97 million shares on loan for the day-to-day, which is 4.5 million more shares on loan today than yesterday. And Ortex is estimating about 1.9 million of that to be in new short interest. Taking a look at Ape, an hour ago there was a return of 416,000 shares. It's now 548. That's going to have the effect of slightly lowering that estimated short share of the interest a little bit more to 6.63%. Cost per hour minute 5.84, average 7.01, max at 7.94. We currently have a return day over day of 4.7 million shares on Ape, leaving the amount of shares on loan at 24.41 million shares. That is all closed short interest. Taking a look at AMC options. We had the highest amount of call strike at 3.7 at $6. That is still the case. An hour ago there was 3.7 thousand contracts. There's now 5.9. Puts highest amount of volume at a $5.50 strike. There was 2.8 thousand contracts an hour ago. There's now 4.2. That leaves us with a closing price somewhere between $5.50 and $6 combined between AMC and Ape, according to what the options are kind of suggesting. Taking a look at the combined price of AMC and Ape, we're at $6.62 right now. We are hovering right at that Fibonacci level. Still finding some support on this ascending level of support that we have right here. Don't want to see it break past that. I'd like to see stay above 663 and perhaps maybe even before the day's closed out, fighting for 685 combined, but we'll see if that happens or not. Taking a look at orders by Fidelity customers. AMC and GME were the only ones on the list today due to low volume on Ape. We've got GME, gotta still be on the list here. Yep, GME still on the list with a 76% buy to 24% sell ratio. Looking very strong. AMC's crawled, we were in 30th position earlier, crawled up the list a little bit here. Now we're at 60% buy to 40% sell ratio. That's like the bare minimum I like to see. So not bad. I mean, even though price is going up, we're still buying into it. That's good. Good to see. That's good, strong bullish thing to have happen. SSR trigger price is at $5.15 for AMC for the day today, and at 0.774 for Ape. Shares available to borrow has not changed in the last hour. Fees have gone from 19.8 to 19.7. NASDAQ is up 0.37, Dow Jones is up 0.57, and the S&P 500 is up 0.47. We currently have 3,822 advancers to 2,810 decliners. The market is technically advancing right now. We have the US dollar down 0.28. Oil is up 0.26. SPY is up 0.5. Mortgage-backed securities are up 0.18 and 0.21. VIX is down 0.89, VTI up 0.5, IWD up 0.53, Tesla is down 0.88, Amazon is up 0.06, Cinemark down 1.22, Doge is up 0.03, Bitcoin is up 1.87 and over 18.1 a coin. GME is up 2.52, HYMC up 3.52, Hood down 0.64. CS is down 5.18, NCMI down 0.44, Ape is up 3.56, and AMC is up 0.51. We are deviating further and further away from that ascending line where I wanted to see us closing out the day at about $6.36 before the end. May not happen if we can't get this back up above the Fibonacci retracements. I was expecting some buying pressure coming into today. I'm also expecting it tomorrow as well, so we'll see what ends up happening. But as of right now, we're just barely hanging over closing price from yesterday, which was 572. We're at 575 right now. Taking a look at AMC, we currently have like $100,000 more inflow than outflow. 9.21 million shares traded after 182 minutes of trading. Due to UPS delivery guy making a suggestion that I know my times better, I've got 3 specific times written down throughout the day to make it a little bit easier to know how much time has transpired throughout the day. We're currently on a pace for 19.73 million shares traded on AMC. That's underneath the range that I said of 20 to 40 million shares by the end of the day today. I think I may have overguessed. I probably should have not gone up as much as I did. Based off of pre-market volume, but I don't know. We'll see. Sometimes we get surprised by some late in the afternoon volume. Taking a look at the 1 hour time interval, we have more selling pressure than buying pressure with an RSI of 46.43. Actually, real quick, I want to just check something real fast. I want to make sure that the time numbers that I used were accurate. I just want to check this just real fast. Minus 15 plus 3. What did I say? Did I say 183 minutes? That's pretty close. Yeah, okay. So I got it right. All right. I just want to make sure. Let's see here. On a 1 hour time interval, there's more selling pressure than buying pressure with an RSI of 46.43, which is slightly below average. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 48.67, which is that's pretty much average. On a 5-minute interval, there's more selling pressure than buying pressure with an RSI of 44.81, which is slightly below average. On Ape, there's currently more buying pressure than selling pressure by about, wait, we're getting a little bit of a run here on Ape. That's cool. Looks like we've got about a little less than $200,000 more buying pressure than selling pressure on our inflow versus outflow. 4.83 million shares having been traded so far for the day today. Let's see what we got going on here. After 184 minutes of trading, we're on pace for 10.32 million shares traded by the end of the day today. We are hitting that 90 number. We're actually moving up pretty quickly here. 90 cents was the first breakout number that I had kind of mentioned. We need to see a break above 90 and into the 97 range. If we can break 97, the next push is to $1.08. So those are the kind of like three big price points that we want to see price move towards. Let's see, what do we got going on here on the 1 hour time interval? We've got more buying pressure and selling pressure with an RSI of 65.78, which is above average. On a 30-minute interval, there's more buying pressure and selling pressure with an RSI of 67.52, which is above average. And on a 5-minute interval, more buying pressure and selling pressure with an RSI of 77.75, signaling overbought. Nice little run there on Ape. With that, let's see here. Taking it back to where I can see what it is you guys are saying, and you guys can see Ape having this nice little run here with a nice little jump. That was beautiful. A little bit earlier than I would have anticipated, but hey, I'll take it. I will take it. You didn't get blocked earlier. Well, you got silenced earlier. You didn't get blocked. Blocking, I think, comes usually it comes from me, but I don't know. It's like that. It's the whole premise that I went on yesterday about, like why are you crapping on your own investment, RB? If you're invested in it, I'm not going to get into it again today, but you're invested in a stock, RB, and if you were selling, let me ask you a question, RB. If you were selling lemonade in a lemonade stand, would you want to write piss on your sign? How well do you think you're going to sell piss if you got that written on your sign? You know what I'm saying? And so what you're doing is you're coming in here and you're pissing on your product. So if you think your product's piss, and everybody else that you're going around telling everybody, hey guys, guess what? We're holding piss, and we're trying to sell piss here, then you know what that means. You're everybody else who sees this, they're going to go, oh look, even the investors who are holding it thinks that it's piss. You're going to get piss. That's what you're going to get. Nobody's going to buy it. Nobody's going to buy piss. So that's not what this play is about. This play is not about that. So, if you want to come in here and start pissing on your own product, you can just leave. There's no point. Piss colored beverage, $1 a cup. I mean, it's really, that's what it comes down to. You know what I'm saying? Danny says everyone's going to be pissed off. No, I'm not gonna get fired up. I'm not getting fired up today. I got past it yesterday, but I'm just trying to give a good example of what it is, when you're pissing on the product that it is that you're invested in, all you're doing is making it look worse, and you're making your product that you believe or that you trust in seem like a bad investment, and that's not a good thing to do. It's just not a good thing to do. So piss off. That's what it comes down to. Sam says, if a kid had a lemonade stand that said piss, I would at least stop to inquire regarding this genuine marketing strategy or weirdo. right? But it would just be like curiosity, and then you'd take off. All right, guys. I'm gonna head to break here. I'll be back at. I'm leaving a little late, so I'll be back at 12:20. I'm gonna leave you. I'm gonna leave these wonderful speakers for the SEC here to to accompany you guys with their exciting, incredibly exciting things that they have to say here. We are talking about payment for order flow, so you might get some of you guys a little titillated here. And so yeah, let's turn on the piss. here comes. This is where the real piss is. You want to talk about a piss stand? Here it is.
However, this proposal is not being made in a vacuum. It is being proposed in conjunction with 3 other proposals that directly impact equity market structure. Analyzing its expected economic effects presents some challenges. What if this proposal is adopted at the same time as these other 3 proposals impacting the equity markets? In that context, the combined expected economic effects should be considered for all 4 new proposals, as well as the potential combinations and permutations among.
I'm not sure what's better, the silence, the silence, or having to listen to these guys. I was still sitting here. I was sitting here just reflecting for a minute. I was like, wait a minute.
Register, I would anticipate it will get there by February.
All right, I'm out. I'm gonna go get some lunch. I'll be
1st,
back.
But if any reason it's there after February 1st, the comment period will stay open for 60 days after it gets in the Federal Register. With that, do commissioners want to go to the next one, or we are going to take a 10-minute break after the 3rd one? Okay. Hashang, back to you. We're going to go to a rule that covers multiple items, but the minimum increment, which is for the public, is sometimes called tick size. The access fee, this is the fee that market participants may be paying to exchanges to access those exchanges, and transparency around what's called round lots and odd lots. But Hashang and your team, take it away again.
Right. Now, good afternoon, Chair Gensler and Commissioners Peirce, Crenshaw, Ueda, and Lizarraga. The Division of Trade in the Market recommends that the Commission propose a number of amendments to various rules under Regulation National Market System, also known as Reg AMS. Since Reg AMS was adopted in 2005, the U.S. equity market have changed tremendously. The proposed amendments today are designed to enhance trading opportunities for all investors and also to promote efficiency, competition, and transparency. There are 3 elements of this proposal, as the Chair just described. First, the proposal would amend the minimum price increments, also known as tick sizes, and Rule 612 of Regulation AMS, to establish a variable minimum price increment model that would apply to the quoting and the trading of AMS stocks, regardless of trading venue. Second, the proposal would reduce the access fee caps and Rule 610 of Regulation AMS and require national security exchanges to make sure the amounts of all fees and rebates determinable at the time of execution. And finally, the proposal would accelerate the implementation of the round lot and odd lot information definitions adopted in the 2020 under the Market Data Infrastructure Rules, or MDI rules, and amend the odd lot information definition adopted under the same rules to require the identification of the best priced odd lot order. Now, coming to the details, the first element of this proposal is tick size. Many AMS stocks are currently constrained by the minimum price increment of 1 penny that is required under Rule 612. That is, these stocks could have a narrower displayed bid-ask spread if they were not constrained by the current minimum price increment of 1 penny. These tick-constrained stocks make up a significant fraction of trading volume. An artificially wide quoted spread increases investors' trading cost. To address this issue, the Division recommends that the Commission propose to amend Rule 612 of Regulation AMS to establish a variable minimum price increment for quotation and orders in AMS stocks that are priced or greater than $1 per share based on objective criteria. More specifically, there will be 4 possible minimum price increments that depend on AMS stocks time-weighted average quoted spread during an evaluation period. First, the tick size would be 1 penny, as it is today, if the time-weighted average quoted spread for the stock was greater than 4 pennies. Second, the tick size would be a half penny if the time-weighted average quoted spread for the stock was 4 pennies or less, but also greater than 1.6 pennies. Third, the tick size would be 0.2 of a penny if the time-weighted average quoted spread for the stock was 1.6 pennies or less, but also greater than 0.8 penny. And finally, the tick size would be 1/10 of a penny if the time-weighted average quoted spread for the stock was less than or equal to 0.8. AMS, currently standing at 30 mils. For AMS stocks priced at $1 more. The proposed reduction would reflect the new tick sizes as well as the significant improvement in technology over the past 17 years since these excess fee caps were adopted. Specifically, for AMS stocks priced at $1 more, the excess fee cap would be 5 mils, or 5 cents per 100 shares, if the stock has a minimum price increment of 0.1 of a penny. And otherwise, the excess fee cap would be 10 mils, or 10 cents per 100 shares, if the stock has a minimum price increment greater than 0.1 of a penny, namely 2/10, half, and 1 penny. For AMS stocks priced less than $1 per share, the division recommends that the Commission reduce the excess fee cap for protected quotations to 5 basis points of the quotation price from today's 30 basis points. In addition to reducing excess fee cap, another aspect of the proposal relates to the transparency of exchange fees and rebates. The division recommends that the Commission propose a new section under Rule 610 to require exchanges to make the amount of all fees and rebates determinable at the time of execution. Exchange fees and rebate schedules are complex, and in many cases, market participants are not able to determine the amount of the fees or rebate that would be applied to their orders because the fees and rebates are calculated at the end of the month and applied retrospectively. The proposed new rule would require that exchange fees and rebates be determinable at the time of execution. This additional price transparency would help market participants make more informed decisions about order routing and execution. The last element of this proposal is about the round lot and odd lot information. The division recommends that the Commission propose to accelerate the implementation of the new round lot and odd lot information definitions adopted in the 2020 MDI rules, and the current round lot definitions. Smaller size orders in highly priced stocks are often priced better than orders currently in round lots. To address this issue, the Commission in the MDI rules adopted the new definition of round lot. participants to better monitor the execution quality of their broker-dealers. Particularly for smaller or outlawed orders. Taken together, these recommended updates would promote price transparency, competition, and efficiency, all to the benefit of investors. I will now turn this over to Kelly Riley in the Office of Market Supervision, who will discuss proposed changes in more detail. Thank you.
Thank you, Hao-Shan. And good afternoon, Chair Gensler, Commissioners Peirce, Crenshaw, Ueda, and Lizarga. As Hao-Shan just described, in this proposal, the division is recommending 3 areas of change to regulation NMS. First, the proposal would amend the minimum pricing increments under Rule 612. Second, the proposal would reduce the access fee caps under Rule 610 and propose a transparency requirement for exchange fees and rebates so that they are determinable at the time of execution. And third, the proposal would accelerate the implementation of the round lot and odd lot information definitions that were adopted in 2020 as part of the market data infrastructure rules, and revise the definition of odd lot information to include a new best odd lot. It would help prevent other stocks from becoming tick constrained. It would We also recommend that the Commission propose to amend Rule 612 to require that orders be executed in the relevant minimum pricing increment, subject to certain identified exceptions for midpoint and benchmark trades. Currently, Rule 612's minimum pricing increments do not apply to trading. However, this means that certain over-the-counter trading can occur more readily in sub-petty increments compared to exchange and ATS trading. The proposal would level the playing field for trading in NMS stocks by imposing the same minimum pricing increments for trading throughout the national market system. This proposal would also promote fair competition and equal regulation between trading in the OTC market and trading on exchanges and ATSs. With respect to the second change in the proposal, the division recommends that the Commission propose to reduce the access fee caps in Rule 610. Rule 610 imposes limits on the fees that can be charged to access protected quotes and was designed to prevent fees from constituting an excess percentage of the share price. Currently, for NMS stocks priced equal to or greater than $1 per share, a trading center may not impose any fee for the execution of an order against a protected quotation that exceeds 30 mils per share. For NMS stocks that are priced less than $1 per share, a trading center may not impose any fee for the execution of an order against a protected quotation that exceeds 0.3% of the quotation price per share. In light of the at the time of execution. Since the adoption of Rule 610, in 2005, the national securities exchanges have adopted complex fee schedules with fees charged and rebates paid in order to encourage the submission of liquidity. The fee schedules of the exchanges also include various volume-based tiers that seek to reward market participants for submitting a minimum level of liquidity. The fees included in these schedules are largely calculated based on volume in a given month, and therefore are calculated at the end of each month. This timing impedes the ability of market participants, including investors, to evaluate the total price of the trade at the time of execution and is an impediment to market participants' ability to evaluate best execution and order routing. To address these concerns, the division recommends that the Commission propose a provision that would require the exchanges to make the amounts of all fees and rebates determinable at the time of execution. Lastly, the proposal would accelerate the implementation of the round lot and odd lot information definitions that were adopted under the market data infrastructure rules. As originally adopted, the market data infrastructure rules enhance the content of NMS data by defining round lots to include smaller size orders and higher price stocks, and by defining odd lot information to include accelerating the dissemination of information about better priced orders would enhance trading opportunities for all investors. They would also serve to help ensure that orders placed in the national market system reflect the best prices available to all investors. I will now turn it over to Jessica Watcher and our Director of Division of Economic and Risk Analysis to discuss the economic impact of these proposals. Thank you.
Thank you, Kelly. Chair Gensler and Commissioners, under current Rule 612, stocks with prices at or above $1 can be quoted at an increment of 1 penny and no finer. The proposal would introduce tick sizes that vary based on the spread of the stock, and the spread means the difference between the best bid and offer. And it would lower the tick size for those stocks with narrower spreads. We believe that this change would lower transaction costs by enabling liquidity providers, those who post quotes on exchanges, to better compete on the basis of price. Currently, in some stocks, for example, with a tick size of, say, half a penny, which is contemplated under the proposal, a fee of 3/10 of a penny, which is the current cap on the access fee, the fee takes you most of the way to the next tick size. Thus, to mitigate distortions on routing and quoted prices, this proposal reduces the fee to a maximum of 1/10 of a cent or 1/2 of the tick size, whichever is lower. As you've heard, the proposal also sets a minimum increment for trading as well as quoting. Today, trading could take place at virtually any increment off exchange. On exchange, a minimum trading increment is functionally specified by the minimum tick size. This change sets the conditions for liquidity provision off exchange to be similar to those on exchange. We expect the proposal to come with compliance costs to implement the new tick regime. Also, while we expect reducing the tick to benefit investors on average, those transacting large orders may find it more expensive to trade. Applying the minimum pricing increment to trading as well as quoting could lead to the loss of some price improvement, though this could also be made up for in greater competition. In closing, I thank my colleagues in the Division of Trading and Markets and the Office of General Counsel, with whom we have worked closely during the development of this proposed rule.
Thank you so much, Hashang, Kelly, Jessica. Of course, earlier I
support putting this proposal out for public comment based on the data presented in the release and on discussions over the years with market participants. I'm persuaded that some stocks trading on our exchanges are tick constrained. Whether the proposal gets the new variable tick sizes correct is a question that commenters can help us answer. Similarly, although I would prefer that the Commission get out of the rate setting business altogether, doing so would require a significant overhaul of our markets, perhaps even more significant than the one we're contemplating today. Moreover, given the continued existence of the order protection rule, which forces market participants to access markets without regard for the price of entry, the Commission probably does have a role to play in preventing excessive access fees. Again, public input will be essential to thinking through whether the reduction in access fee caps is calibrated at the right level. Indeed, the difficulty of this determination is one of the reasons I would like to be out of the rate setting business entirely. The proposal, however, does appear to be a reasonable attempt to set those caps at a level that doesn't create unnecessary disruption in the markets. I also am eager to hear commenters' views on the acceleration of some of the changes in the market data infrastructure release. That rulemaking set out a detailed implementation timeline, but the Commission's recent loss in litigation over the related governance order seems likely to cause considerable delay in implementing the rule. In light of the delays, accelerating these requirements reasonable. A couple features of the proposal do give me pause. First, the Commission could have made it easier for commenters to perform the necessary analyses to understand and provide us with a reasonably confident appraisal of how they expect these changes to affect the market. As with the Rule 605 amendments, the proposal does not lay out the Commission's view as to how this rule will interact with the other rules that we're considering today. Commenters seeking to understand how the entire package fits together have to draw these connections on their own, and as difficult as that task may be, I do encourage them to do so or to identify where further Commission clarification might be helpful. Because the proposals taken together are so sweeping in their effect, different commenters are likely to come to different understandings of the interplay between the different rules, which in turn is likely to make our job harder when it comes to thinking about finalization. Another element of the proposal that causes me concern is the proposal to mandate uniform trading increments across the market for NMS stocks. Although I certainly understand the rationale, I'm not sure that I
Thank you, Commissioner. I think the division believes that this information, this best odd lot order would provide useful information to the market. It would provide information about the very best odd lot order, the price and the size in the market where that odd lot order is. It would allow investors to know what is the very best price available in the market and where it is located, and should help firms be able to, conduct trading decisions and facilitate best execution. So we think it would be a very useful piece of information for the market to have.
Is that something that you've heard a lot of demand for from market participants?
I think that we've heard that there is odd lot information is useful and that people do want to have this information. And I think that providing this metric that is similar to the MBBO and how it would be calculated and provided to the market would be also widely used and accepted.
Thanks, Kelly, and I'll look forward to hearing what commenters have to say about that. Hao-Sheng, now that we're on number 2 of the TM rules, I can ask you for a little bit of insight into how you think the minimum trade price increments will affect the data presented in our Rule 605 reports, and will it be readily apparent to users of those reports what the trade size increment is?
Thank you, Commissioner. Indeed, now I think it's a good time to discuss these two together. Kind of again, on the big picture, 605 is about heterogeneity across different market month. So I don't think that one could just invert from the statistics into the minimum trade increment. But I see that Kathleen is here. So Kathleen, would you like to weigh on this one as well?
Sure. Thank you, Commissioner. So also on 605, because these are detailed reports, it's going to be symbol by symbol. So you could look at kind of individual stock symbols to kind of figure out, or, you know, to use that to figure out kind of what the tick is there.
Okay, well, that's helpful. I mean, I think it will be potentially confusing because of the fact that tick sizes can change over time, and so that may be something that we want to think about how to flag a change, for example, but we can talk about that as we think about the comments that we get. So one final question, and that is, the release suggests that these proposed changes could be good for enhancing competition for retail orders, and I think that we're hoping that those 605 reforms will similarly have a positive effect. Would it make sense to wait with the two final proposals that we're considering until, well, at least with the order protection, I mean the order of competition rule? Would it make sense to wait with that until we see what the effect of these two rule changes are, should they be adopted?
Commissioner, again, because all the competition rule is not yet presented, if I could defer this one again, but on your question about competition, right? 605 is about competition across different market centers and broker-dealers on the unified set of rules, and these rules are set by the proposal we just discussed about tick size, access fee, and run lot definition. They kind of tackle competition in different dimensions. The sort of competition effect about
Commissioner Crenshaw.
Thank you, Chair Gensler. As you've already heard from my colleagues, this proposal has three main components: varying and lowering the minimum pricing increments, or tick sizes, for quotes and trades in certain NMS stocks, reducing the access fee caps, and increasing fee transparency for exchanges, and improving the dissemination of information about smaller orders. When Congress amended the Exchange Act in 1975, it underscored the public's interest in benefiting from, quote, fair competition among exchange markets and between exchange markets and markets other than exchange markets, end quote. Fair competition requires entities performing similar functions to be regulated similarly, and extending the minimum tick size to trades executed in non-exchange markets, namely ATSs and off-exchange wholesalers, should help provide a more level playing field across venues. With respect to the specific pricing increments in the proposal, many market participants have suggested that trading in tick-constrained stocks would benefit from a smaller minimum tick size, though the specifics of the suggestions have varied. There are trade-offs to lowering the minimum tick size. While it allows for more efficient pricing, a smaller tick size also adds complexity and increases the likelihood that a market participant, quote-unquote, jumps the queue by posting an economically trivial complex fee and rebate schedules, many of which include tiers or other incentives based on a broker-dealer's trading volume. One of the many issues with this problematic model is that because the fees are calculated based on monthly volume, broker-dealers and their customers do not actually know what the fees are until after the month's end. This uncertainty has implications for transparency and best execution analyses. Transparency at the time of execution should help broker-dealers make better order routing decisions and could facilitate a broker-dealer's ability to pass through the fee or rebate associated with the transaction. This is a model that some customers may prefer, but which is difficult to implement at present, in part due to fee uncertainty. It should also help customers gain insight into whether a broker-dealer may be routing to certain venues based on fee or rebate that venue assesses. While this change has the potential to mitigate certain issues around volume-based fees and rebates, I continue to have concerns about the model more generally. From a competitive standpoint, volume-based pricing subsidizes bigger broker-dealer firms at the expense of smaller and mid-sized firms, making it difficult for smaller players to compete. Liquidity that is available in the markets. As of June 2022, odd lot volume as a proportion of total exchange traded volume was approximately 19% for all corporate stocks and approximately 7% for all ETPs, higher than the levels observed in the data from 2018 and 2019. Given the increasing prevalence of odd lot orders in the markets, I believe these are common sense changes that are long overdue. Thank you again to the staff who worked on this rule, which is really three elements, so I'll extend triple thanks to this team. And thank you in advance to all those who submit comments, in particular with respect to the optimal minimum quoting and trading increments. I look forward to the comments and I'm happy to support.
Thank you, Commissioner Crenshaw. Commissioner Ueda, before I hand it over to you, I wanted to let you know the worm rule we adopted actually did get in the Federal Register on November 3rd, apparently. So thank you to the Federal Register. But Commissioner Ueda.
Oh, great, great. Yeah, I don't think our website currently has got the link to the Federal Register, and so yeah, I wasn't quite sure. So anyway, thank you for that update. So today, the Commission is proposing variable minimum pricing increments for both the quoting and trading of national market system stocks, a reduction of access fee caps, and an improvement in the transparency of certain better priced orders. Due to the technological changes since Regulation NMS was adopted, including the massively increased speeds and processing power used in electronic trading, the market standard known as the tick size ought to be reconsidered. For a national market system, having an established tick size that is a minimum pricing increment, or bids, asks, orders, or other expressions of interest, may make sense to encourage liquidity, as it constrains the ability of market participants to gain an execution priority over pre-existing limit orders through an economically insignificant difference. However, if an established tick size is too large, it may place an effective floor price on the provision of liquidity and preclude competition that may result in lower transaction costs for traders. Thus, it would appear that there is an optimal range for tick sizes. Identifying that optimal range is a bit complicated, though, from a regulatory perspective. Indeed, the optimal range may be different depending on the technical characteristics and capacities of trading institutions, as well as the characteristics of the securities being traded, including price. Today's national market system appears ripe for variable minimum pricing increments and a reduction in tick sizes in many circumstances. The majority of current trading volume appears to be tick constrained, meaning that the effective spread cannot be reduced below 1 penny. In other words, the tick size prevents competitive forces from further reducing quoted spreads. At the same time, there have been technological advancements that enable trading and order routing systems of market participants to handle the increased message traffic that could occur if smaller or variable minimum price increments were implemented for NMS stocks. Thus, it is appropriate for the Commission to consider whether any regulatory changes are in the public interest. One part of the proposal would extend the minimum tick size beyond a constraint on an order, bid, offer, or indication of interest to also limit the execution of trades. However,
all right, I gotta stop him right there because I gotta do the numbers. This stuff is so dry. I'd rather just like wait and see what their rulings are afterwards and not listen to them talk the whole time, because it's just kind of like, who cares about what it is that they have to say? I really just want to know how they rule. That's more than anything. That's all I really care about. Let's see. Thicks coming in with the repo. Reverse repo for today is 2.19 trillion with 97 counterparties. Previously, it was 2.18 with 98 counterparties. Less counterparties, more trillion. Looking interesting. Still heading up. I think since I got 59% of you guys saying that you'd rather see the FTX hearing, I'll probably switch to that after for this next hour or time in between numbers reading, because I just don't know. I really don't care what these guys have to say. Sensor content says, okay, I'm old, so I can use old words that are rude, and I want to know if these guys are all retarded. I don't know. I don't really care. Honestly, I don't really care to hear them sit there and discuss everything and their viewpoints and all that kind of stuff. I don't really care. I really don't care what their viewpoints are. I really just want to know how they're going to rule. That's the only thing that makes a difference to me, and I think we can get a summarized version and have this be a lot less painful than sitting through this. So I'm going to side with the 59% of you that are going for, damn it. More of you voted on the SEC open meetings room rules. I just realized that you guys voted more for this one. All right, fine. I leave it on there then. Let's get to the numbers. See what's going on here. You guys want to see the SEC talk? That's fine. We'll stay with that. You guys spoke. 241 people spoke, and it's stick with good old Gazer Beam Gary over here. Fine. All right. Let's see here. Let's look at these numbers real quick and see so we can get back to these amazing talkers. It really reminds me of like kind of like one of those meetings where like people get together and like everybody's told that they have to present, and everybody's like, man, I gotta present today, and then somebody tells you like, today I want you to could you please present on this subject matter, and then like you're all like you're sitting there and you're going, damn it, why did I get this one? That's what it seems like. Let's see what we got going on here. Just logged in my broker, two-factor authentication. If you don't have it, you may want to get it, as it could prevent somebody from getting into your account that shouldn't be in your account. When you set it up and you're testing it out to see if it's something you can live with, go ahead and get a secondary device set up for that to be able to receive that code. That way you're not locked out of your account at any point if something happens to your primary. Also, don't forget that while I'm on this other page here, I'm not going to be able to see what you guys are writing until you see the Big Tramp back up on the screen again. Let's take a look. Dang, this beard is getting so ratty. Hold on a second. We're going to have to comb this out. I just realized, looked at the picture, I was like, dang, man, this thing is looking so ratty. There we go. It's a little more civilized. It's just so much, so stupid, these beard things. Whoever came up with growing hair on your face, it's just ridiculous. All right. Let's take a look at what's going on. Off exchange. 60.26. Oh, wait. I just refreshed. It hasn't. I don't think it's refreshed yet. Hold on a second. Okay, it did refresh. 60.26% going through the off exchange. By this time of the day, I would expect to see probably around, combined between off exchange and EDGX, I would expect to see around, let's see, it's 1226, 64, 60, yeah, maybe like 62, 63%, somewhere right around there. So off exchange at 60.26 on AMC, EDGX at 9.22. Grand total 69.48, very close to what it was an hour ago, and that still puts us at like 7% higher than where we should be for the day today. CHX volume, nothing to note. Off exchange for Ape is at 7.08 and EDGX at 7.34. Grand total is 84.42. It's 21% higher than it should be. CHX volume, nothing unusual to report on that one. Volume through CHX on GME, nothing unusual. And HYMC, there has been a little bit of CHX volume. Normal 30-day average is 0.07%. It's at 0.11. Ortex, as some people like to call it, Hortex. Hortex. That's the Spanish version of it. Hortex. it's oh, never mind. Don't get angry at me. It was a joke because it's like, the H is silent, whatever. It's not silent. Like it's a J. Whatever. Anyways, borrowed change amount an hour ago was 2.19 million. It's now 2.26. We have that's gonna very slightly raise that estimated short share interest. So the free float's at 18.73%. Let's see here. Cost borrow min is at 19.83. Cost borrow average at 22.58. Max at 26.87. Shares on loan for the day today is at 166.97 million. That day over day, that is up by 4.5 million shares. And short interest, the new amount of short interest out of that 4.5 million, according to Ortex, is being estimated at 1.9 million shares. Taking a look at Ape. An hour ago, there was 548,000 shares having been returned. It's now 594. Not a whole lot of change. It's going to put the short share interest of the free float at 6.62. Cost per minute 5.84, average 7.05, and max at 7.94. Shares on loans at 24.41 million shares. That is 4.7 million shares less on loan today than there were yesterday. That was in all enclosed short interest. Taking a look at oh no, I took you over to the other screen too soon. Taking a look at options. Highest amount of call options so far this morning is at a $6 strike. There was 5.9 thousand contracts an hour ago. There's now 6.9. Low volume today. Puts has the highest amount of volume at $5.50 with 4.8 thousand contracts. It was 4.2 an hour ago. Combined price of AMC and Ape is currently at 664. We're finding levels of support and resistance. I would almost say that the 663 that I've got written in here might be a little bit off, and that the real support's like 661. But you can see that we're testing some level of support in here multiple times over, and holding support. So we're consolidating within this this next fib level, and we are following this this level of support here. Dipped under it twice. Hopefully we can stay above it before the end of the day. That would be perfect. Orders by Fidelity customers. GME is coming in here with a 76% buy to 24% sell ratio. And AMC is also on the list here with a 63% buy to 37% sell ratio. So looking really good. Ape has low volume today, so that's why we're not seeing it on the list here. SSR triggers today at $5.15 for AMC. Ape triggers at 0.774. Shares borrowed in the last hour. Doesn't appear like any new shares have been borrowed. Fees have dropped down to 19.7%. NASDAQ is up 0.55, Dow Jones is up 0.7, S&P 500 is up 0.64. We currently have 3,927 advancers to 2,738 decliners. The US dollar is currently down 0.3%. The SPY is up 0.63. Oil is up 1.54. Mortgage-backed securities are up 0.16 and 0.26. VIX is down 1.2. Vanguard is up 0.64. IWD is up I said Vanguard. VTI is up 0.63. IWD is up 0.68. Tesla is down 0.71. Amazon is down 0.02. Cinemark down 1.55. Doge is up 0.58. Bitcoin is up 2.86 at 18.2, almost 18.3 a coin. Just getting a nice little run on the crypto there. GME is up 2.86. HYMC is up 1.41. Hood is up 0.53. CS is down 4.59. NCMI is breaking even. Ape is up 5.44, and AMC is up 0.41. Inflow versus outflow, there's roughly $1 million. Actually, it's exactly $1 million more inflow than outflow for the day-to-day on AMC. We have 10.54 million shares having been traded today after 233 minutes of trading, putting us on a pace for 17.64 million shares traded by the end of the day today. That is definitely underneath the 20 to 40 million shares I suggested in pre-market. I'm not giving up on it though, because you never know in the late afternoon of today we may see some extraordinary volume kind of kicking in and driving it up. Pre-market's usually pretty right about, and sometimes it surprises you, and you go like, sometimes it's really high one day, and I'll tell you 10 to 30 million in volume, and the day starts off like we're going to have 100 million shares traded for the day, and by the end of the day, we end up having 30 million shares, and it's like, pre-market knows what it's talking about. And then some days you have days like this where, you say 20 to 40 million shares in volume, and you know, volume's looking like it's only going to be like 17 million shares, and it ends up being 25 or something like that by the end of the day. You never know. It's really difficult to say. But I just trust that pre-market volume to kind of give me a great idea on where we're moving to. Taking a look at the 1 hour time interval for AMC, we have more selling pressure than buying pressure with an RSI of 47.74, which is just slightly below average. On a 30-minute interval, there's more buying pressure than selling pressure with the divergence of the vortex indicator and an RSI at 51.61, which is average. On a 5-minute interval, more buying pressure than selling pressure with an RSI of 55.32, which is just slightly above average. Taking a look at Ape, there's approximately $400,000 more inflow than outflow on Ape. 7.12 million shares having been traded so far after 245 minutes. What did I say earlier? Did I say 245 earlier? I don't know what I said earlier. Oh, I don't know what I did. Hold on a second here. Let's go back to AMC. Dang it. And this is supposed to fix it. 10.66 million shares. We were at 245 minutes of trading. Okay, we're on pace for 16.96. So that's, yeah, I must have did the math right. I don't know. For some reason in my head I was thinking it was wrong, but all right. Let's see. 7.13 million shares having been traded so far on 245. I don't know why these numbers look so. This is the problem, UPS guy. If you're watching UPS guy, this is why I have such a hard problem with these numbers, is because the numbers just don't look right. To me, if there's 390 minutes of trading in the day and halfway through the day is 11:45 my time, and we're only 10 minutes away from. Anyways, the math comes out to 11.34 million shares pace for the day today. In pre-market, I suggested 5 to 25. So 390 divided by 2. Well, I got to just do this math because this doesn't make sense to me. Is 195. We're 10 minutes away from another hour, right? So add 50 minutes, 245. That's right. I don't know, man. It's just that the number doesn't look right to me. It just feels wrong. 245 at this time of the day seems like too high of a number, and so I doubt myself when I even though I'm right, I doubt it. On a 1 hour time interval, we have more buying pressure than selling pressure with an RSI of 66.07 RSI, which is above average. On a 30-minute interval, there's more buying pressure than selling pressure with an RSI of 69.06, which is above average, almost signaling overbought. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 69.87, which is almost signaling overbought. It's really, really close. AMC getting a nice little push up there. 616 is the number that we needed to hit to see some unique movement, price movements. We are getting a little bit of a bump up in volume right now. And let me get up the other one on here. With that, I can see what it is you guys are writing again. It's not UPS guy's fault. I'm just saying it's no. I'm not blaming him. I'm not blaming at all. I'm just saying like the number. I doubt myself. I'm blaming myself. I'm blaming it's me. I scrolled back up. I wanted to see some of the. Peter says, "Why did Ape rip?" I don't. I wouldn't call like a 5% increase in price a rip. The answer. I don't have a great answer for you. It's not going to be an answer that you're going to like. But let me just check something real quick here before I answer that. Arby says, "Relax, Casey. It's all good." No, nobody hates you, UPS delivery guy. It's me. Oh, Pro Jeweler, I totally forgot your numbers yesterday. I know you asked for them, and I forgot to do them, and I remembered later on after I'd already ended the live stream, and I was like, dang it, totally forgot to give him the numbers. I'll tell you what, I'll turn the SEC back on again, and I'll work on them on the side, and then I'll show you the numbers after I get done working on them, putting it together for you. And I would assume, Pro Jeweler, that you want to see both AMC and Ape. I'm assuming. I don't know. Or did you just want to see AMC? Okay. All right. I can pull them up for both. Let's see here. I'm trying to remember what I was going to show you guys. I feel like there was one more thing I was going to talk about, and I can't remember now. All right. Well, we'll just put the fun bags back on the screen, and I hope you guys don't mind, but unfortunately, there's nothing I can do with the way they have this set up here. It's probably going to buffer for a minute and then skip past everything that they've said while I've been talking.
The arguments for an optimal tick size for orders and other expressions of interest do not apply equally to execution improvements.
That's what you get,
For
Yucca.
example, a suboptimally sized tick size could discourage liquidity provision within orders by effectively eliminating time priority. But that same argument would not apply to improved execution. In addition, one can imagine workarounds to improving an execution within a given.
Yeah, here's where it's going to skip forward. Nothing I can do about it, guys. Sorry about that. I got to take the breaks to cover the numbers, though. Oh, they're on break. Oh, shucks. Darn. I'm working on the numbers over here on the side for Pro Jeweler real quick. So basically what I'm going to do here, and I'll describe what I'm doing since we're kind of waiting for them to come back on. But I'm pulling up on loan amounts and on loan returned. Or another way to pull it is on loan new versus returned. Those are two different numbers that you can pull to kind of see what's been loaned out versus what's been returned, and see what the balance differences are. And let me pull a Excel spreadsheet on this real quick. Oh, you know what, Pro Jeweler, I may not be able to do Ape. I forgot about that. Last time I tried to do Ape, it would not pull the information for me, and so I had to go through and manually hand log everything, which wasn't that bad when it was only like a month's worth of data, but I haven't kept up with it. So that could be pretty extensive. Where's my sheet at? Oh, there it is. Popped up. All right. Well, that's not it. Huh. Weird. Let's try this again. There we go. And that's not going to work. Let's see here. Alrighty, so I'm going to go ahead and pull the screen up over here on the page for you guys to see. So this is what ProJewelry was asking me to kind of build for you guys. It's real simple to just download this information from Ortex, and essentially what you're looking at here is let's see, is it okay to look at it like this? It's not, doesn't split it up too badly. I know there's a break in the page on this format here. If I put it the right spot, it won't look so terrible. I'll just put it over here. Yeah, that works. All right, so essentially what you have is you have opening prices. All this information is kind of worthless. We really don't need like any of this information. I can just delete this all out just so it doesn't confuse everybody. So Ortex is giving me the on loan amount and the on loan new amount based off of the reported data for the day, and on loan returned amount for the day. So I just put a little simple formula over here of on loan new minus on loan returned, and spits out a value, right? So the idea here is that we can find out how much on loan amount has been, how many shares have been on loan over a given period of time, and see what see how that compares to what's actually being reported as on loan. So if I were to do, for example, current time for the last 6 months, I can just, oh shoot, I just realized that these are not set up for, let me sort this. I think I want to do it by this one. I can't remember. This is not what I want. Yeah, this works. This is the long drawn out way. There is a way that I did this before. I'm trying to remember how I did this. I think I'm gonna have to basically like get rid of these columns here. Are you kidding me? Come on. Oh, this is so annoying. What do I do to this? I always forget what I did to this in order to get this to work right. There's an easier way to do this. I hate this. This is why I don't do this stuff in front of you guys, because I always struggle with some of this stuff. And what is it? Watch, this is probably the answer. Nope, still gonna be the problem. Oh, I know what I gotta do. I think this may fix it. You son of a gun! Anybody know how to why I'm having a hard time sorting by date and time? Like sometimes I have no problem with this whatsoever, and then other times it's like completely easy to do, or really difficult for me to do, like right now. Expand, so it wants me to do the whole field, and then but I can't get it to sort by. So the painful way to do this is to actually pull this up by this. By the filter, and go through and actually uncheck like all the dates that I don't want to have in here. Oh, son of a gun, I just figured it out. Dang it. That's so frustrating. I just figured it out. One Speed Ghost said Control A. It's actually what you do is you go in, you put the filter on it, and then you got to pull down the drop down box on it, and then you sort from that. It's so stupid. Like it doesn't make any sense to me. Like why, if you're gonna put a sort A and A to Z right here, like why can't you just select just one of these instead of having to put a filter on it and then sorting? It's just so ridiculous. All right, so it's filtered now. So now I can take the dates here and I can do a sum, right? So I can do a sum of. So stupid, it takes so long. So now I can do a sum of everything between now and 6 months back. So I can go back to 6/1 of this year, right? And I can come up with a summarized account of how many shares have been on loan versus returned.
Thank you so much. We're back here.
I don't care what you guys are saying. So over the last 6 months on AMC, there's essentially been 25 million shares more in loans than there have been in returns. So That's just back to June. 25 million shares more on loan than now. So if I go to Excel though, or not Excel, if I go to Ortex and I pull up the chart on Ortex, we can take a look at the numbers from June and compare to now and see what the difference is as being reported, which is always kind of the fun part, because now you'll see the difference between what's actually being reported versus what their daily number reports are. So if you look at the on loan amount from, we'll go back to June. In June 1st, the reported amount of shares on loan, it moved on me. On June 1st of this year, we had 176.43 versus today's date, which is only being reported at 166.97. So, what's the problem here? The problem is that according to this Excel spreadsheet, based off of their daily numbers of loan shares versus returns, it's saying we should have about 25 more million shares on loan right now than what we had back as reported in June 1st period of time. And that's not the case. Right now, we only have 166.97 million shares on loan versus the whatever number I said from June 1st, 176.43. So now you have to ask yourself, okay, well, because now we have a net difference, right? Because we have on loan amount of 166, which is shy 10 million shares of what we had on loan back in June of this year, plus the 25 million. So we're missing 35 million worth of shares somewhere. Who knows where they went? But as of right now, there's a 35 million difference between the numbers. And so you can, and the further you go back in time, the more you can see that there's shares on loan that are increasingly larger and larger and larger amounts that are stacking on this, and you go like, holy crap, what's being reported on loan right now is not what's really on loan. It's actually way higher, because they're doing daily reports on what they're borrowing and what they're returning on a daily amount. And so if you just take those numbers and you just crunch them, you can see the difference. Hold on a second, I cough, Pantheon. You made me laugh so hard. The junk in my lungs is coming out. Pantheon says, check your couch cushions for those missing shares. That's almost like shares by the seaside of a shore. But yeah, so those are pretty amazing numbers when you start realizing that over a 6-month period of time, that there should be 25 more million shares on loan right now than what we had back in June. And it really kind of makes you start to wonder, like, okay, well, how is this possible? Where are these loans at? Why didn't they come back? Why were they out there? How did they disappear? But yeah, so poor RB, man, poor RB. Like, he's like, dude, you said we'd be moving today. Well, we kind of are a little bit. But I can do this. I can take this. I can take this number and I can actually do the same. I can do the same thing down below 6 months ago in June for like June 1st. Holy moly! All right, so check this out. These are the numbers. These are the numbers for the last 6 months prior to that. Let me just make sure I got this set up right. Yeah. So from 6/1 down to 11/17 of last year, there's 99, almost 100 million shares more on loan than returned. So now, so basically for the last year, a little over a year's worth of time, we have over 125 million shares that have been loaned out over the last year and have not been returned, just in the last year alone. And you can keep on doing this. You can keep on going down the page, and every 6 months, what was the time span that this went to? Actually, let me move this down one because my last formula actually included this day. So now this formula is including everything that I didn't include before. So I will start the next one on, let's see here. Um, 1116, so right here. Oops. Oh no, come on, case. Ah, come on. Looking for 1115. So for the same time span of last year, from 1115 to 5-3, there was 5 million shares. I really hate you, Excel. I do. So then, and then if you go back and you do the same thing again, so you want to know why we started running up in June. For the same time frame, 6 months prior to, or at least around 6 months worth of time, the dates that were collected for this was between 10/19 of 2020 to 4/30, which is basically the month just before we started running up. The total amount of shares that were loaned during that period of time was 149 million shares. So, and then I can take all these numbers here from each one of these, and we know that they're stacking continuously, right? And I can go through and I can summarize everything in this column. So I basically looked at like 2 years worth of data, format this cell here to a number, no decimal places and commas, and you've got 277,169,704 shares over the last 2 years in loaned amounts that were not returned. 277 million shares. That's more than half the float. That's more than half the entire float over the last 2 years has been loaned out but not returned. And you can keep on going backwards. I mean, you have to. You have to keep on going backwards. At what point was it a negative amount? You know what I'm saying? Like when was that not the case? Well, it's 1 o'clock, guys. Let's take a look at the numbers and see what's going on, because I don't know if I can take any more of this the SEC stuff, but it is time to take a look at the numbers here. And yeah, Pro Jeweler says never. That is the right answer. Like, you basically have to go back to when there was a deficit, right, and understand how long this has been going on for, and go back to when there was a deficit of shares, or not a deficit, but at least breaking even on shares that were on loan versus returned, and understand how large this really is. It's super, super large. Now you have to remember, our float wasn't nearly this big back when we had our current float's much, much larger than it is now. So that 140 something number that I showed you in there, that was big number, and part of the reason why we had that run up in June. So yeah, you're welcome, Pro Jeweler. But that's a lot of shares. It's a lot of shares. Let's take a look at these numbers, guys, and see what's happening here. Take you guys to the other screen. I'm not gonna be able to see what it is you guys are writing, so hold those thoughts until I hiccups. Until you see the big tramp back up on the screen. Super bad hiccups. Just got to swallow a couple times and it goes away. That sounds so bad. You know what I mean. Just need more oxygen. All right, here we go. Let's take a look at our numbers here. By this time of the day, I would expect to see about 64% of our volume going through off exchanges and CBOE EDGX data. So let's see what we got for AMC. We've got 60.47% and EDGX at 9.03 for grand total 69.5%, pretty much where it's been all day long today. That's elevated by about 5% higher than it should be. CHX volume, nothing specifically there to note. On Ape, 78.47. This is somebody asked about why did Ape launch today. Part of it is because there's been a lot of return shares, and this is them buying shares at the market. They need shares right now, and so they're buying shares at the market price. That's what it really comes down to. If you watch the numbers in the morning when I talk about on-loan average age per day, when they're returning shares and then they start borrowing a bunch of shares back, that means they need shares really bad to close out positions. So that's essentially what you're seeing is you're seeing buying happening. You're seeing accumulation. That's what it is. Numbers for AMC, or for Ape rather, is 78.47 going through the off exchange. EDGX is at 6.5%. For grand total, 84.97%. That's 20% higher than it should be. Actually, 21% higher. CHX volume is normal today. And GME has elevated CHX volume very slightly. HYMC also has elevated CHX volume. Not quite double the normal amount, but it is elevated. Taking a look at Ortex. An hour ago, there was 2.26 million shares having been borrowed. It's now 2.48 million shares. That's going to have the effect of raising the short share interest of the free float to 18.74%. Cost per min is at 0.35, average at 22.39, and max at 26.87. Shares on loan today is at 166.97 million shares on loan. Day over day, that's a 4.5 million increase in shares on loan. And Ortex is estimating about 1.9 million of that to be in new short interest. Taking a look at Ape. As of an hour ago, there was 594,000 shares having been borrowed, returned rather. No change in the last hour. 6.62% is the short share interest of the free float. Cost per min at 5.84. Average 7.05, max 7.94. Shares on loan for the day today is at 24.41 million. That's 4.7 million shares that were returned less in loaned shares day over day. Taking a look at options. At a $6 strike an hour ago, there was 6.9 thousand contracts. There's now 8.8. And on puts, there was 5.5 thousand contracts an hour ago. At a $5.50 strike price an hour ago. Is that right? Yeah, that's right. There was 4.8 thousand contracts. It's now 5.9. So we're showing a closing price somewhere between $5.50 and $6 for the day-to-day on AMC. Price combined between AMC and Ape is $6.60. We did break back through that 663 range there We're still finding a little bit of support here, but we're struggling to try and maintain price. It sounds like maybe there's some major activity going on with the SPY right now. We'll check that out here in just a second. Lots of volatility in this market. Orders by Fidelity customers is showing pretty decent numbers for both GME and AMC for the day today. GME's got a 75% buy to 25% sell ratio, and AMC has a 61.5 to 38.5% buy sell ratio. Ape has not been on the list due to low volume. SSR would have tripped today at $5.15 for AMC. Ape would have tripped at 0.774. Has not happened yet. No new shares having been borrowed in the last hour, and fees for borrowing are at 19.7%. ETFs are at 40,000 shares available to borrow. And so far for the day, we've seen about 650,000 shares borrowed. Taking a look at NASDAQ is down 0.83, Dow Jones is down 0.41, S&P 500 is down 0.59. We have 4,040 decliners to 2,626 advancers. The market just flip-flopped, completely did a 180 here in the last hour. And we've got the US dollar down 0.12, the SPY is now down 0.6. Oil is, let's see what's oil doing. Up 0.34. Mortgage-backed securities are down 0.22 and 0.17. VIX is down 1.06. VTI is down 0.56. IWD down 0.4. Tesla down 2.61. Amazon down 1.16. Cinemark down 3.67. Doge down 1.88. Bitcoin down, or up rather, 0.83. Back under 18K a coin. GME is up 2.19. HYMC is down 1.67, Hood is down 0.7, CS is down 5.92, Ape is up 4.9%, and AMC is up 0.38. Inflow versus outflow for the day-to-day on AMC is approximately $300,000 more inflow than outflow. And so far we've traded 13.05 million shares after, I got 282 minutes of trading. Oops, that is bad math. 282 minutes of trading, putting us on a pace for 18.06 million shares before the end of the day. We are starting to head back up on that. I suggested a pre-market somewhere between 20 and 40 million shares. We'll see if I get that right. It'll be kind of cool if I do. On the 1 hour time interval, we have more equal amounts of buying and selling pressure with an RSI of 45.82, which is slightly below average. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 47.48, which is slightly below average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 46.54, which is just slightly below average. On Ape, there's approximately $300,000 more inflow than outflow, with 8.9 million shares having been traded so far after 283 minutes of trading. Putting us on pace for 12.26 million shares traded by the end of the day today. On a 1 hour time interval, there's more buying pressure than selling pressure with an RSI of 66.98, which is above average. On a 30-minute time interval, more selling pressure than buying pressure with an RSI of 65.31, which is above average. And on a 5-minute time interval, more selling pressure than buying pressure with a divergence of the vortex indicator starting to occur, with RSI at 56.82, which is slightly above average. So seeing a little bit of a cool off on the run up is helping RSI to come down a little bit, enabling the price to be able to continue to run up further. Not a bad thing. It's okay to have some retracement a little bit to kind of affirm where you've been in price. Retest the support levels. And let's see what you guys are writing. Oh, you guys are saying the rate hike. Yep. Let's see what they put in here. Well, it seems like you guys already know. 50 basis points. It takes a little while. Who was saying it? Somebody was saying that they passed one of the rules. Those do take a little. I believe those take a little while to go into effect. I'd have to look at the dates. Pantheon saying they passed it at the commissioner level. Now it goes to public comments through March 2023. Then, based on public comments, they drop it, change it, or implement it. It's like a couple months, right? Something like that. I can't remember exact timing. There is dates on those, and I can't remember what they are off the top of my head. But so let me see. What did they change the 375, 400? I don't see the Fed talking here. Give me 1 second here to look it up and see. Hold on 1 second. I got to go to YouTube real quick. Let's see if Chairman Powell. It's not going to be anything that's worth probably listening to, but let's check it out and see. They haven't come on yet, so it's still playing music in the background. I'm probably going to turn down the music and wait for that to pop up. Actually, it's not bad music. Let's keep it on. You know it's bad when the Fed can actually put up better music than you can. Thank you, Fed. Appreciate it. Tim says, don't look into Dana's eyes, Casey. Okay. I won't do that. I mean, Yale, they outlined all of their Jerome Powell outlined all the moves months ago. We've got another 50 basis points after this to go, and then the one after that, the next two after that are like 225 increases. So we knew these were coming. He announced these numbers a long time ago and said that they were coming, and they haven't deviated from their plan so far. I guess we could put the SEC back up until they talk. All right, let me how do I do this? Mute that one, and I can pull the other one back up.
Here, after a bit of an adjournment, some of us may be eating and drinking while we're doing this. I hope the public understands, but we're going to move on now to the next recommendation from the Division of Trading and Markets, and this is related to order by order competition. I'll again turn it over to Hashang. I do want to.
So this is where it's going to skip forward to the live portion. Unfortunately, I don't know why they chose to do this meeting format with this software, but it sucks, and there's nothing I can do about it. Doesn't allow
to be much more selective about the stocks they want to trade.
Doesn't allow me to skip around.
Fourth, although the release points to the objective of minimizing the transaction costs incurred by individual investors when they use marketable orders and anticipates annual cost savings, which are not to be sneered at, of $1.12 billion to $2.35 billion, there's a possibility that it could instead increase retail investors' costs. The proposal fails to grapple seriously with the possibility that retail customers will pay higher commissions than they do now. The Commission does acknowledge that there's substantial uncertainty in the eventual outcome, and notes that while bidders in qualified auctions may not provide as much consistency as wholesalers, some orders could receive improved execution quality, while others would receive reduced execution quality relative to wholesalers. Fifth, even if the problem we're trying to solve is real, the proposed solution could create even bigger problems. It will reroute existing pipes through which retail orders are executed, impose new costs on any firm that handles retail trades, and add new steps to the execution of retail orders. In addition to other detailed prescriptions about auction design and participant behavior, the proposed mandate would come with its own fee caps, another instance of government price setting, the inevitable consequence of routing mandates. Complex undertakings like the one proposed here always have unpredictable effects, and unintended consequences often arise at inconvenient times. Even if the order competition requirement improves execution quality for some retail investors in normal times, we may not be able to anticipate how it will affect liquidity in more volatile market conditions when wholesalers can play an outsized role in providing liquidity and mitigating market volatility. The Commission has a habit of trying to micromanage the markets, a habit that I think is on full display today. Absent a compelling justification, government regulation shouldn't override buyers and sellers' judgments about where to buy and where to sell. As talented as our staff are, they are not omniscient and omnipresent. Any regulator, no matter how sophisticated, lacks the on-the-spot knowledge and the money on the line that motivates market participants to make nuanced choices on a high volume of transactions. Regulation has a role in ensuring that market participants have information and that markets are orderly, but issuing decrees about how each order should be routed is outside of the role of facilitating a national market system. To return to snow plowing for a minute, when I was growing up, the plowing service was my father.
Oh, I bet.
He had rigged up a rickety old truck with a fuel tank balanced precariously on the roof and a plow that did double duty as the brakes. One day when he was out of town, I had to do the plowing. Dropping the plow to brake is not as easy in practice as it sounds in theory, and I ended up in the ditch. I hope that the Commission's proposal to wrest the reins of the equity markets from the people who live them every day does not end up similarly driving the equity markets into a ditch. The stakes here are a lot higher. With all that said, I'm grateful to the staff in the Division of Trading and Markets who have been working tirelessly to try to make this market-wide experiment that the Commission has ordered up as effective as possible and to minimize its adverse consequences. That job hasn't been easy, but you have approached it zealously and without complaint. Along with the staff, I'm awaiting the invaluable input of commenters who will help us conduct much needed further analysis of this proposal. I do have a number of questions. So the first one is just why make these auctions mandatory? We could use our exemptive authority to permit more experimentation with auctions and other mechanisms for enabling all market participants to interact with orders. Why not try this approach before using a mandate to redesign the way the whole market works?
Dan, would you like to take this one?
Sure, and thank you for that question, Commissioner Peirce. I think the number one issue that we need to address with the rule is the fact that this small group of wholesalers has the right of first trade to this 90% of the marketable orders of individual investors. And you might say, well, what does the right of first trade mean? And one of the, I think, great opportunities of this release is when you look in the economic analysis, you will see that our colleagues in DERA have done a tremendous amount of empirical work to shed light on areas that have received public data and public data analysis in the past. But one of the stats they have in there is very interesting. And that is, they have a stat that says wholesalers internalize 90% of the flow that they receive, and that for that 90% that they internalize, the adverse selection cost, or the extent to which prices move against the wholesaler within a minute after trading, is 0.91 basis points. Now, there's also 10% of the flow that the wholesaler chooses not to internalize and actually route somewhere else to obtain an external execution. Could be at another wholesaler ATS exchange or the retail liquidity program operated by one of the exchanges. The adverse selection cost of the flow that the wholesaler does not want to internalize is 4.63 basis points, which is more, that's more than 5 times the adverse selection costs of what they keep. I think in some economics papers refer to this phenomenon as cream skimming. So the actual flow that the wholesalers send to other markets has actually a higher adverse selection cost than what the average adverse selection cost is at the exchanges. So one of the key issues here is if you don't address that right of first trade that the wholesalers have from having this flow locked up, none of that low-cost flow will actually be available to all the other market participants with an opportunity to provide better prices to it. And just to finish up, I guess what I'd say is Dira can go into a lot of the details of the 2 major types of analysis that we've done to try and show why we think that there's a real possibility that individual investors would get significantly better prices than what they're getting from the wholesalers today. But I think in plain terms is we have stats that indicate that there's reason to predict that they would be better. But then we also have stats in terms of orders on the books, undisplayed orders, probably from institutional investors at the midpoint that today are not receiving an execution, and wholesalers are trading at worse prices than those orders that are actually already on the book. And it's sort of this opportunity to open up all of this flow beyond 6 firms and not even beyond just market makers as a type of market participant, but to all institutional investors, hedge funds. They will have all different trading objectives and timelines, et cetera. And then when you open it up to that level of competition, our expectation, and we think the empirical data shows that there's a strong reason to expect that individual investors could get significantly better prices. But then we also have the other objective in the national market system, specifically put in by Congress, that investor orders should have an opportunity to meet directly without intermediation and without the participation of a dealer. That's right out of the statute, because that benefits both investors. You give the opportunity for investor on each side of the trade, the buyer and the seller, to get a better price. So I certainly understand your concerns, and I think the strength of the release is it provides so much data that has not been known before, and it will provide a strong basis for a really informed public debate on whether there is a problem, as we at least preliminarily believe, and whether we've come up with the right solution to address it. Sorry for the long answer.
No, that's great. And I share the enthusiasm that you and Congress have for allowing retail orders to interact directly with other kinds of orders. But I do think that there are people who are thinking about ways to experiment with that, not in a mandatory way, but through experiments that they're conducting. And so if we could think about ways to allow those sort of voluntary experiments to occur, I think you're right that a lot of the flow is not making its way to exchanges, for example, and it might need to in order for some of these experiments to work. But we also have a best execution mandate. And so I think that combined with some experimentation on the voluntary side could perhaps achieve some of the same objectives we're trying to achieve. But you did bring up data, and so that raises another concern that I have. And I think the data in the release is certainly worth people in the public taking a look at, and I really look forward to getting feedback on some of the analysis that's done in the release. One concern I have, and it's not only with respect to this release, but I think it's really important in this release. Some of the analysis relies on CAT data, and consolidated audit trail data obviously is very sensitive, and we have a limited ability to make that public, except in kind of the way we're doing it here, which is to say, look, we did some analysis using CAT data, and we came to these conclusions. But it's common, I know, in an academic setting for people who are doing research to make their data available so that other people can, look at it, do their own analysis of it. And here, that's not going to be possible. So how are you thinking about that? And I know that CAT data is not the only data that we use, but it does form the basis for some of the conclusions in this release. So I see, Jessica, you've turned your camera on, so maybe you can address that question.
Sure, I'm happy to. I'll say a couple things. And first of all, just to, put in a plug for 605 data, which we also use to good effect in this release. And, thank you, Dan, for your work on that for so long ago. And it's true that the CAT data are confidential, and we provide a lot of detail about our methodology and about our results. I think in academics, there's a range of practices, and sometimes the data can't be made available. When the Commission adopted CAT, one of the benefits cited was the ability to use CAT for regulatory purposes. And what we're doing today is using the CAT data in furtherance of the agency's mission. And as usual, we welcome comment on all aspects of our analysis.
Well, I appreciate that. I mean, look, I have broader concerns around the protection of data that we collect through the CAT, because a lot of it is very sensitive data about individual investors. And so I think we have work to do on making sure that we really protect that data, and that individual retail investors are not subject to having data released. But I do think it's a real weakness of a regulatory proposal if it's based on data which is making drawing some pretty important conclusions if people can't have the chance to really test how.
Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have tightened significantly in response to our policy actions. Financial conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect the policy restraint that we're putting in place to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a half percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High-yield credit spreads have come in. The economy's accelerated, and the stock market's up 6%. Is this loosening of financial conditions a problem for the Fed in its effort and its fight against inflation? And if so, do you need to do something about that, and how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add that our focus is not on short-term moves, but on persistent moves, and many things, of course, move financial conditions over time. I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP, again, for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more, in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are softer.
Gina. Gina Smilik, New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward. And then I wonder what you're looking at as you determine when to stop.
Yeah. As I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy, and that'll be the key thing. But I mean, but for that decision. But ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move, and we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, we'll get to that point, and then the question will be, how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time. Now, why do I say that? If you look at you can break inflation down into three sort of buckets. The first is goods inflation, and we see now, as we've been expecting really for a year and a half, that supply conditions would get better, and ultimately supply chains get fixed, and demand settles down a little bit and maybe goes back to services a little bit, and we start to see goods inflation coming down. We're now starting to see that in this report and the last one. Then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up, actually, as rents expire and have to be renewed. They're going to be renewed into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that backlog, that inflation will come down sometime next year. The third piece, which is something like 55% of the index, PCE, core inflation index, is non-housing related core services. And that's really a function of the labor market largely. It's the biggest cost by far in that sector is labor. And we do see a very, very strong labor market. One where we haven't seen much softening, where job growth is very high, where wages are very high, vacancies are quite elevated, and really there's an imbalance in the labor market between supply and demand. So that part of it, which is the biggest part, is likely to take a substantial period to get down. The goods inflation has turned pretty quickly now, after not turning at all for a year and a half. Now it seems to be turning, but there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as moderate or modest, I believe. Yet it's really approaching stall speed. Half a percentage point is not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well, I'll tell you what the projection is. I don't think it would qualify as a recession, no, because you've got positive growth. The expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about a half a percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. if you look, you've got the reports we get from the field are that companies are very reluctant to lay people off, other than the tech companies, which is a story unto itself. Generally, companies want to hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
Nick.
Thanks, Nick Timoros of the Wall Street Journal. Chair Powell, I want to follow up on Gina's question. The decision to step down the pace of rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year. You just now talked about making decisions meeting by meeting and being mindful of the lags of policy. Does that mean, all things equal, you would feel more comfortable probing where the terminal rate is by moving in 25 basis point increments, including beginning at your next meeting?
So I haven't made a judgment on what size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly and having now so much restraint that's still in the pipeline, we think that the appropriate thing to do now is to move to a slower pace. And that will allow us to feel our way and and get to that level, we think, and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you consider how far we've come. But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including the incoming data in particular, the state of the economy, the state of financial conditions.
With the CPI report, if it had come out last week, do you think it would have changed some of those forecasts in today's SEP?
No, absolutely not. No, as just a matter of practice, the SEP reflects any data that comes out during the meeting, and participants know that that they can make changes to their SEP during the meeting, well in advance of the press conference, so that we're not running around. But that's not the case. It's never the case that the SEPs don't reflect an important piece of data that came in on the first day of the meeting.
Thanks. Rachel?
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I'm wondering if we could talk about the projection for the unemployment rate. Why has the Fed raised its unemployment projection? Is it because the models suggest that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as we think it is now? Thanks.
No, it's not about the strength of the labor market. The labor market is clearly very strong. It is more just that, by now, we've continually expected to make faster progress on inflation than we have, ultimately. And that's why the peak rate for this year goes up between this meeting and the September meeting. You see the fact that we've made less progress than expected on inflation. So that's why that goes up. And that's why unemployment goes up, because we're having to tighten policy more. And so it didn't go up by much in the meeting, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates, probably held for longer, just to get to where the kind of restriction that you need to get inflation down to 2%.
In order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the labor force population rate?
So it's very hard to say. You can look at history, right? And history would say that in a situation like this, the declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? So I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. I mean, I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work, then there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers, and it means that it may take longer, but it also means that the costs in unemployment may be less. Again, that we're going to find out empirically, but I think that's a reasonably possible outcome, and you do hear many labor economists believe that it is. So we'll see, though.
Colby. Thank you. Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SEP? Does that not then suggest that the policy rate currently forecasted for next year should actually be higher than the 5.1 medium estimate penciled in?
Well, I think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate as of today, really, for how high we need to raise rates, to how much we need to tighten policy to create enough, restrictive policy to slow economic activity and soften the labor market and bring inflation down through those channels. That is the estimate, best estimate we make today. And as I mentioned, we'll make another estimate for the next SEP, and we'll, of course, between meetings we do the same thing, but we don't publish it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to make sure I understand specifically what's going on in the SEP, because you all expect rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering, given that we have seen some cooling in inflation, is that primarily because of wage growth, that you expect wage growth to be sort of a headwind?
No, we're going into next year with higher inflation than we had thought, right? So we're actually moving down to the level that we're moving down to next year is still a very large drop in inflation from where inflation is running now, well more than a 1% change in inflation. But remember that the jump-off point at the beginning of the year is higher. So we're moving down still by a very large chunk. I don't think the policy's having any less effect. It's just starting from a higher level at the end of 2022. So we're getting down. I believe the median is 3.5%. That's a pretty significant drop in inflation. And where's it coming from? It's coming from the goods sector, clearly. By the middle of next year, we should begin to see lower inflation from the housing services sector. And then, the big question is how much will you see from the 55% of the index, which is the non-housing services sector. And, that's where you need to see, we believe you need to see a better balancing of supply and demand in the labor market, so that you have, it's not that we don't want wage increases, we want strong wage increases, we just want them to be at a level that's consistent with 2% inflation. Right now, if you factor in productivity estimates, standard productivity estimates, wages are running, well above what would be consistent with 2% inflation.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. Some of your colleagues have been pretty explicit that they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP. But futures markets have priced in some easing in the back half of next year. What's your view of the likelihood of any kind of rate cuts next year? What circumstances might make that plausible?
Our focus right now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So that's the test I would articulate. And you're correct. There are not rate cuts in the SEP for 2023.
Steve Matthews with Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly. I'm wondering if you see that as disinflationary because you're seeing supply chains improve, or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth and for commodities prices.
And so you're right. Those two things will offset each other. Weaker output in China will push down on commodity prices, but it could interfere with supply chains ultimately, and that could push inflation up in the West. It's very hard to say, how those two will offset each other, and it doesn't seem likely actually that the overall net effect would be material on us. But to your point, China faces a very challenging situation in reopening. And we've seen waves of COVID all around the world can interfere with economic activity. China, a very critical manufacturing place for manufacturing and exporting. Their supply chain is very important. China faces a reopening. They've backed away from their COVID restriction policies. There could be very significant increases in COVID, and we'll just have to see. It's a risky situation. But again, it doesn't seem like it's likely to have material overall effects on us.
Chris. Hi, Chris Rugaber at Associated Press. Thank you for taking my question. I wondered if you could comment a bit more about yesterday's inflation report. I mean, it showed inflation cooling in all three of the categories that you laid out at Brookings. Are you confident that you're seeing real progress on getting inflation under control? Are you still worried it could slip into some kind of unentrenched, upward spiral? Thank you.
Right. So the data that we've received so far for October and November, we don't have we have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace of price increases. As I mentioned in my opening statement, it will take substantially more evidence to give confidence that inflation is on a sustained downward path. So the way we think about this is this. This report is very much in line with what we've been expecting and hoping for. And what it does is it provides greater confidence in our forecast of declining inflation. As I mentioned, we've been forecasting significant declines in overall inflation and core inflation in the coming year. And this is the kind of reading that it will take to support that. So really this gives us greater confidence in our forecast rather than at this point changing our forecast. In terms of the pieces, we have been expecting goods inflation to come down as supply chain pressures eased. That's happening now. Housing services, as I mentioned, there is good news in the pipeline. As long as new housing leases show declining inflation, that will show up in the measure around the middle of next year, so that should help. And the big piece, again, is core services ex housing, which is very important, and we have a ways to go there. You do see some beginning signs there, but ultimately that's that more than half, as I mentioned, of PCE core index, and it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly earnings number we got with the last payrolls report, you don't really see much progress in terms of our average hourly earnings coming down. Now there may be composition effects and other effects in that, so we don't put too much weight on any one report. These things can be volatile month to month, but we'll be looking for wages moving down to more normal levels where workers are doing well and ultimately their gains are not being eaten up by inflation.
Michael McKee from Bloomberg Radio and Television. There's a little bit of a disconnect between the optimistic view you just expressed about the economy and the changes that you've made in the SEP. And I'm wondering if you're reacting to the fact that the markets have loosened financial conditions, or if you feel the Fed may be a little bit behind on inflation, whether the recent disinflation we're seeing is transitory or not, and how this affects the idea of a soft landing if you're projecting just 0.5% growth for this year.
So if I think I got your question. So, one thing is to say is I think our policies in getting into a pretty good place now. We're restrictive, and I think we're getting close to that level of sufficient, we think, sufficiently restrictive. We laid out today what our best estimates are to get there. It boils down to how long do we think this process is going to take. And of course, we welcome these better inflation reports for the last 2 months. They're very welcome, but I think we're realistic about the broader project. So that's all. That's the point I would make. It's, we see goods prices coming down. We understand what will happen with housing services, but the big story will really be the rest of it, and there's not much progress there, and that's going to take some time. I think my view and my colleagues' view is that this will take some time. We'll have to hold policy at a restrictive level for a sustained period, so that two good monthly reports are very welcome. Of course, they're very welcome, but I think we need to be honest with ourselves that there's inflation. 12-month core inflation is 6% CPI. That's 3 times our 2% target. Now, it's good to see progress, but let's just understand we have a long ways to go to get back to price stability.
Well, do you think the soft landing is no longer achievable?
No, I wouldn't say that. No, I don't say that. I mean, I would say this, to the extent we need to keep rates higher and keep them there for longer and inflation, moves up higher and higher, I think that narrows the runway. But lower inflation readings, if they persist in time, could certainly make it more possible. So I don't think anyone knows whether we're going to have a recession or not. And if we do, whether it's going to be a deep one or not. It's not knowable. And certainly, lower inflation reports, were they to continue for a period of time, would increase the likelihood of a, so I would put it this way, of a return to price stability that involves significantly less of an increase in unemployment than would be expected given the historical record.
Ryan. Hi, Chairman Powell. Brian Chung, NBC News. You warned Americans of pain earlier this year as the Fed hikes rates, but with the Fed now expected to raise rates higher than you thought when you first said that, just wondering where we are in that pain. How would you describe that to Americans if the projections on unemployment find themselves? That would be 1.6 million Americans out of jobs.
So the largest amount of pain, the worst pain, would come from a failure to raise rates high enough and from us allowing inflation to become entrenched in the economy so that the ultimate cost of getting it out of the economy would be very high in terms of unemployment, meaning very high unemployment for extended periods of time, the kind of thing that had to happen when inflation really got out of control and the Fed didn't respond aggressively enough or soon enough in a prior episode, 50 years ago. So that's really the worst pain would be if we failed to act. What we're doing now is, it's raising interest rates for people, and so people are paying higher rates on mortgages and that kind of thing. There will be some softening in labor market conditions, and I wish there were a completely painless way to restore price stability. There isn't, and this is the best we can do. I do think, though, that and markets are pretty confident, it seems to me, that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
Grady.
Thank you, Mr. Chair. Grady Trimble with Fox Business. You've reiterated today, and the committee has reiterated its commitment to that 2% inflation target. I wonder, is there ever a point where you actually reevaluate that target and maybe increase your inflation target if it is stickier than even you think it is?
That's just so changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal, and we'll use our tools to get inflation back to 2%. I think this isn't the time to be thinking about that. I mean, there may be a longer run project at some point, but that is not where we are at all. The committee, we're not considering that. We're not going to consider that under any circumstances. We're going to keep our inflation target at 2%, and we're going to use our tools to get inflation back to 2%.
Nicole.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. As you monitor wage growth and unemployment data, I wonder if you're paying close attention to a sector or even income level. Like, how do you factor potential exacerbations of inequality into your risk calculations, especially given the K-shaped recovery of 2020?
So I would go back to the labor market that we had in 2018, 19, 20. So what that looked like was wage increases, the people at the lowest end of the income, a long expansion where the labor market can remain strong over an extended period of time. That's a really good thing for workers in the economy, and we'd love to get back to that. That's what our goal is. There's in the near term, we have to use our tools to restore price stability, but we can't. What we have to think about is the medium and longer term. If you think about it, the country went through a difficult time. I think much more difficult than we can think it would happen here, but it really set up our economy for several decades of prosperity. So price stability is something that really pays dividends for the benefit of the economy and the people in it over a very, very long period of time. And so when it is lost for whatever reason, it has to be restored, and as quickly as possible, which is what we're doing.
In the short term, are you factoring in these potential exacerbations in the economy? Are you monitoring?
We do, yes, we absolutely do. We look at, it's our regular practice to talk about unemployment rates by different groups, including racial groups and that sort of thing. We do. We keep our eye on that.
Nancy.
Hi, Nancy Marshall-Genzer with Marketplace. What would you do if the economy slows so much that we enter a recession before we see strong, consistent signs that inflation is slowing? In other words, stagflation.
So I don't want to get into too many hypotheticals, but it's hard to deal with hypotheticals. So let me just say that we have to use our tools to support maximum employment and price stability. I've made it clear that right now the labor market's very, very strong. You're at near a 50-year low. You're at or above maximum employment, in 50-year low in unemployment. Vacancies are very high. Nominal wages are very high. So the labor market is very, very strong. Where we're missing is on the inflation side, and we're missing by a lot on the inflation side. So that means we need to really focus on getting inflation under control, and that's what we'll do. I think as the economy heals, the two goals come more into play. But right now, clearly the focus has to be on getting inflation down.
Greg.
Thank you, Chairman Powell. Greg Robb from MarketWatch. You spoke a little bit ago. You said that the U.S. it looks like we have a structural labor shortage in the economy. Could you expand on that? Talk a little bit more about that. And really, are you talking about getting Congress action on increasing legal immigration, things like that? Thank you.
So what I meant by that, with structural labor shortage, is if you look at where we are now, as I mentioned. If you just look at demand for labor, you can look at vacancies plus people who are actually working, and then you can take supply of labor by are you in the labor market, are you looking for a job or have a job, and you're more than 4 million people short. We don't see.
Yeah, we know what that's like.
Despite very high wages and an incredibly tight labor market, we don't see participation moving up, which is contrary to what we thought. So the upshot of all that is the labor market is actually. It's 3.5 million people at least smaller than it should have been based on pre-pandemic, just assume population and reasonable growth and aging of the population. Our labor force should be 3.5 million more than it is, and that there are lots of easy ways to get to bigger numbers than that if you go back a few more years. So.
All right, I got to pause them, get into the numbers here because we got movie trivia to come. The Big Tramp says no farting, Powell. No bowels, no Powell's bowels. Let's see here. So let's go through the numbers real quick and get that out of the way. And remember, when you can't see the Big Tramp on the screen, I'm not going to be able to see what it is you're writing. So hold those thoughts until you see it back up there. Let's do this one last run through for the day here and figure out what's going on with some of these numbers, and then we can do movie trivia. Starting with off exchange 58.75 and EDGX is 9.61. The grand total in that 68.36%. By this time of the day, I would expect 66%, so it's about 2.36% higher than a normal day. On Ape, extremely large amounts of volume going through the off exchange on Ape for the day today. We've got 79.96% and 5.73 through EDGX for a grand total 85.69%. That's just about, it's like 19.69% higher than it should be. Almost a ding near 20. CHX volume is normal. GME's CHX volume is twice what it should be at 14,600 shares traded for the day today through CHX. HYMC has right what it's supposed to have. It's normal. Taking a look at Ortex. As of an hour ago on AMC, there was 2.48 million shares having been borrowed. It's now 4.27. That's going to increase the estimated short share interest of the free float to 18.86%. Cost to borrow min is at 0.35, average at 21.94, and max at 26.87. Shares on loan for the day today is at 166.97 million shares. That's 4.5 million more shares on loan today than there was yesterday. Ortex is estimating 1.9 million of that to be in new short interest. Taking a look at Ape, an hour ago there was 594,000 shares having been returned. It's 591 now, so very little change. Short share interest of the free float 6.62, cost per min at 5.84, average 7.06, max 7.94. Shares on loan for the day today is down 4.7 million shares, and short interest down to 24.41 million shares on loan. Taking a look at the options. Highest amount of volume at a $6 strike went from 8.8 thousand contracts to 11.1. Oops. And on puts at $5.50 strike went from 5.9 thousand contracts to 9.7. Market indicating a closing price of somewhere between 5.5 and 6 for AMC. Combined price of AMC and Ape right now is 659. That's going to probably put us a little bit lower than that number. But we tend to get a little bit of support at 663 if we can get back up and over that again. But right now they're holding us right underneath that Fibonacci retracement there. Hopefully we'll see a bounce off of this descending level of support that we've got here. If not, if this follows down to that, we could see price close around 653. Let's see here. Taking a look at orders by Fidelity customers. AMC and GME have been on the list all day today and doing very well on buy-sell order ratios. GME is right here with the 75% buy to 25% sell ratio. And AMC is right down here with a 63% buy to 37% buy-sell ratio. So numbers are looking fine. Ape hasn't made the list today due to very low volume. Let's see here. SSR trigger price for the day today is at $5.15. Ape would have been at 0.774. Shares available to borrow. They haven't borrowed any additional shares other than the original 650,000 shares they borrowed this morning. Fees are at 19.7%. NASDAQ is down 0.21, Dow Jones is down 0.12, and S&P 500 is down 0.15. We currently have 3,508 decliners to 3,172 advancers. The market is starting to start to head back up again. We've got the U.S. dollar currently down 0.38. SPY is down 0.1. Oil is up 1.03, and mortgage-backed securities are back up again to 0.26 to 0.32. A lot of volatility today. VIX is down 4.04. VTI is down 0.15. IWD is down 0.09. Tesla down 2%. Amazon down 0.58. Cinemark down 1.79. Doge down 2.05. Bitcoin up 0.63, under 18K, just under. GameStop is up 1.43. HYMC is down 0.4. Hood is down 0.64. CS is down 5.56. NCMI is breaking even. Ape is up 4.17, and AMC is down 0.17. Inflow versus outflow on AMC, we currently have $2 million more inflow than outflow. We've got 40 minutes left of trading, putting us at 350 minutes worth of trading going on for the day-to-day so far. Putting us on a pace for close for 20.39 million shares on AMC. I went risky and decided to go 20 to 40 million shares traded by the end of the day today. It's going to be very, very close. I knew it was going to be on the low side. I was kind of expecting maybe around like 23 million, but I think it's going to be just a tad bit less than that. So, but man, thought I was going to be way off today. If it hadn't been for that late afternoon volume push, I would have been way off. On the 1 hour time interval, more selling pressure than buying pressure with a crossover on the vortex indicator. RSI is showing up at 44.72, which is slightly below average. On a 30-minute interval, more selling pressure than buying pressure, than RSI of 47.02, which is just slightly below average. On a 5-minute interval, more buying pressure than selling pressure, than RSI of 48.65, and it looks like a divergence trying to occur on the vortex indicator. On Ape, there's approximately $200,000 more inflow than outflow. 10.16 million shares traded for the day today. After 351 minutes of trading, we are on pace for 11.28 million shares traded by the end of the day today. I suggested 5 to 25 million. Looks like we'll hit that no problem. More selling pressure than buying pressure on a 1 hour time interval on the vortex indicator, RSI at 59.01, which is above average. On a 30-minute interval, equal amounts of buying and selling pressure with an RSI of 56.14, which is slightly above average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 45.23, which is slightly below average. I didn't toast yet for the day-to-day, guys, and I got a few extra minutes here, and we can listen to Powell a little bit too. But I want to go ahead and toast. We'll pull up Powell to fill in a few more minutes here before we move into the movie trivia time, because I got a little bit of time left over. And I'm gonna toast my neighbors. You know, I have really cool neighbors, and I just want you guys to remember that you never know. You never know whose life you're going to impact on a daily basis. It's that time of the season where people are possibly struggling. You never know what it is that they're going through. Maybe they're doing great, and they just want, passing on the, hey, have a nice day today, or being kind to somebody is kind of one of those things that it carries on to the next person. So it doesn't matter if they're having a bad day or a good day. You just saying something or doing something for somebody that makes a difference is that thing that kind of generates that attitude of community where you're always trying to build people up around you. So cheers to building up people around you and being a good influence on the community that you are around. Cheers. All right, we got a few minutes left here. I'm gonna put Powell's bowels back up here. See if you can't do a little more passing of gas before I'm one to talk. I am one to talk, but we'll see if we can't get Powell's bowels back up here, and he can finish out. Maybe we can get done with whatever it is he's been saying before I have to move into movie trivia. It's just gonna be a couple more minutes here.
Why is that? Part of it is just accelerated retirements. People dropped out and aren't coming back at a higher rate than expected. Part of it is that we lost 500,000 people who would have been close to 500,000 who would have been working, who died from COVID. And part of it is that migration has been lower. We don't prescribe, it's not our job to prescribe things, but I think if you ask businesses, pretty much everybody you talk to says there aren't enough people. We need more people. So I tried to identify that in a speech I gave a month ago, but I stopped short of telling Congress what to do because, they gave us a job and we need to, do that job.
Thanks. Jennifer?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You say you expect growth of just 0.5% next year. Given that you've said the process of raising rates and getting inflation back under control will be painful, have you had discussions within the committee and addressed how long and or how deep of a recession you would be willing to accept?
No. I mean, what we do is we make our forecasts and we publish them quarterly. And if you look at those forecasts, those are forecasts for slow growth, for a softening labor market, by which I mean unemployment goes up, but not a great deal. And you see inflation coming down. You see rates going up a lot. You see inflation coming down. Those are those forecasts, and that's really what they show. We're not. We all, of course, we don't. Talk about this kind of a recession and that kind of a recession. We make those forecasts. The staff runs, and you will see this if you look at the old Teal books, runs alternative simulations of all different kinds at every meeting, and we look at those too. And those will explore different things. But that's just upside and downside scenarios. Of course, that's responsible practice that we've carried on for many decades. But no, we don't. We haven't asked ourselves that question.
We'll go to Jean for the last question.
Hi, Jean Young with Market News. I wanted to ask about the SEP again. If you are reaching peak rates around 5% in the first half of next year and inflation starts to decline materially, that would seem to make the real rate gradually more restrictive. Is that something that's built into the projections and into models? Is that something you would want to see?
So we do know that, of course. That's something that we know and we'd see. But as I mentioned, we wouldn't. I wouldn't see the committee cutting rates until we're confident that inflation is moving down in a sustained way. That would be my test. I don't see us as having a really clear and precise understanding of what the neutral rate is and what real rates are, so that it would mechanically happen like that. It'll be a test of, for cutting rates, I think in the event it'll be a question of, do we actually feel confident that inflation is coming down in a sustained way? Thank you very much.
Oh, perfect timing. Perfect time. Was he making muffins under that podium? He sure was. Doing a bunch of patty cake sounds. Mike was picking it up. All right, that was pretty good timing here. That leaves us just enough time to get into movie trivia. And Hayden, I don't know if you saw my answer to your question about the other neighbors that want me to take down my sign on the truck. But I said maybe they just need a hug. You never know. Sometimes that's all it is. Somebody's baking brownies. Yep. It's a good way to hide the noises, like just tap on the podium and nobody's going to be able to hear it. All right, let's take a look at our trivia here, guys. I'm going to tell you guys to hit live. Hit live and ready up for movie trivia. So today's movie trivia, I am going to tell you the name and the title of the movie first this time. Sometimes I just kind of let you guess because usually the very first one, Joe's in here saying rigged. Joe, you just got to be quicker, man. You got to be quicker and not living across the pond. Nope, it's not. It's not that. Actually, it would be maybe it would be more fun to give like a bonus point to the first person who can guess the movie with the questions without me saying what the Nah, I'm gonna tell you the movie. All right, here we go. The movie for today. Are you ready? The movie for today is Miracle on 34th Street. Question number 1. What did Chris say to the manager who was arranging the reindeer in the shop window? No, today's not the wrong answers. You need the right answers today. Today's the right answers. Tomorrow's the wrong answers. I just realized that you guys are maybe putting in a bunch of wrong answers. The deer has no. It is not the deer have no butthole. Today's the correct answers. Yes. Gorilla Gardner says he told him he had him in the order wrong. The deer. You're talking about the deer. I'm opposing. So Gorilla Gardner gets the first point for the day today. He didn't get the memo and got it right. 1 point for Gorilla Gardner. Congratulations. All right, next question. The movie is Miracle on 34th Street. What did Chris show the parade Santa how to do? It's the correct answers today. You guys are practicing for tomorrow. It's like nobody knows this movie. Some of these are pretty funny. Twerk is a pretty funny one. You guys got it all wrong. You got to get the right answers. What did Chris show the parade Santa how to do? Yeah, Miracle on 34th Street is the name of the movie. Man, I picked the movie. Nobody apparently likes this movie, or you guys just really don't know it. Barry Electronics is getting close. Fly the Sleigh it's getting kind of close. Kind of in a weird kind of way. Something you might have to do if you were going to drive the sleigh. And Nana Ape's even closer with Get the Reindeer How to Pull the Sleigh. What do you got to do? Use the reins is very close. Using the reins is getting very, very close. Use the whip. Jeff Meadows is correct. Use the whip. Jeff gets the answer. Y'all need some practice on this movie. Apparently, I didn't know any of the answers either, by the way. I'm stumping you guys today. Why did the first parade Santa get fired? Drinking for Joe Pounce is correct. Joe, you got a point, man. You should be happy. You said it was rigged and you got a point. What time was the Macy's parade? He had you beat though, Pro Jeweler. 11 a.m. for the Duke of Wall Street, I think, is the first person to put it in. Hold on one second. Let me verify. Yeah, Duke of Wall Street gets it for 11 a.m. Next question. That's not what I wanted. What was the name of Miss Walker's daughter? Somebody was really, really close. Susan is correct by Darren Bowen. Next question. Finish the quote. But maybe he's only a little crazy, like painters or composers or. You guys, when you said Jerome Powell, Mr. Mills, it's really close. It's really close. Yeah, I'm going to take politicians as a correct answer, but it's some of the men in Washington. Oh, Jared Hutto came in with the correct answer. Joe, I'm going to give you another point, though. Politicians was really close. I was waiting for that as an answer, and I'll accept that. So I'm going to give you another point, but I'm also going to give a point to Jared Hutto as well for that because he did put in the correct answer in full length. So point to Jared as well. Let's see here. Next one is. What had the baseball player balloon been in the previous year's parade? What had the baseball player balloon been in the previous year's parade? Clown knows. Clowns is correct. Darren Bowen for the correct answer on that one. What happened to Miss Walker's husband? Why? What happened? Died. Nope. You know, I might go with yeah, there we go. Jared Hutto for divorced. Jared's got 2 points now. Let's see here. In which month was The Miracle on 34th Street first officially released? Crazy. Crazy, crazy, crazy time of the year to be releasing a movie like that. June for Ken Gross is correct. Kind of an odd time to be releasing a movie like that, don't you agree? 2, 3, 4, 5, 6, 7, 8, 9, 10. That is it, guys. I think that's all the questions I've got for you. Oh, no, I've got one more. 1, 2, 4, 5, 6, 7, 8, 9, 10. Okay, yeah, I got one more. One more question here. What language did Chris speak that made Susan wonder if he was Santa Claus? Dutch for Ken Gross again. That is correct. All right, we got a bunch of new winners today, guys. I was able to finally find a movie that got us a bunch of different winners today than our typical winners. Let's check and see what we got going on here. First person to put on my list here is Gorilla Gardner. Congratulations on your first point of the week. Jeff Meadows. Congratulations on your first point of the week. Joe Ponce. Where's Joe? Joe doesn't have any points this week. Congratulations, Joe, on a rigged game. You have 2 points. Duke of Wall Street. Congratulations on your first point of the week. Darren Bowen. I think it's Bowen. Hopefully I'm saying it right. Congratulations on your first 2 points of the week. Jared Hutto had points already this week. Added 2 more additional points to it. And Ken Gross coming in with his first 2 points of the week. Alrighty. We have a new leading champion for the week. Hopefully he can hold on to it. Jared Hutto has 5 points for the week, narrowly margining out John Hannaford and It's Me with that both have 4 points apiece. They're coming in second, and in third, man, we got a big tie going across multiple people here for third. We have Danny R. Paul. I don't know if I wrote Paul's last name down. I just put Paul. Hopefully his only name was Paul. Paul's got 2 points. Joe Ponce has 2 points, and Darren Bowen and Ken Gross all have 2 points and are tied for third. So good luck to you guys for tomorrow. Tomorrow's trivia. It's obviously going to be another holiday movie trivia, but tomorrow, for those of you who put in funny answers, I will be accepting funny answers for the correct answers and not the right answer. So I will be asking questions, and I will give you guys about 10 seconds, and whoever has the funniest answer to make me laugh, and I obviously get to be the one that chooses which one's funny, so you got to know how to make me laugh, is going to be the winner for the day for the point on each one of the questions. Yes, wrong answer day. That is correct. Wrong answer day wins. The best, funniest wrong answer. And you guys may think it's funnier. Some other answers might be funnier than what I think is funny, but it makes a difference about what I see as funny. So you guys are gonna get a chance to know what what makes me laugh and what doesn't make me laugh. I will tell you this. I'm trying to think if I want to give you guys a hint as to what the movie might be about. I think I do, because I kind of want you guys to kind of know what movie it's going to be a little bit. It is a holiday Christmas movie that has Arnold Schwarzenegger as the main lead actor. So I will just leave it at that. I'm not going to say yes or no to any of the questions. If you guys start trying to guess who it is or what movie it is, I'm not going to say. But that's going to be what the questions will be on. That's right. Get to the chopper. So it is a Christmas movie that's gonna be that'll be on about. So we'll see for tomorrow what that is. I kind of thought that would be a great movie to have funny. Joe says, "Oh, it's Pounce." I don't know why I put Ponce. It's Pounce. Pounce. All right, I got you. I wrote you down as Pounce, but for some reason when I put it in I didn't spell it right in here. Let me put it. I thought for sure I wrote it wrong. Pou and Pounce. There. I just fixed it. I wrote it down right on my board, but then when I typed it in, it was like, that doesn't look right. Jared says, looking forward to trivia, but not liking my chances of hanging on. Well, you never know, Jared. You never know. You might be able to make me laugh. Mr. Mill says Conan was a Christmas movie. I'm actually looking it up to see what movies he's been in for Christmas. I had to go type it in because I just wanted to see it. I wasn't sure. No, it's got to be like Christmas theme related. I feel like. No, Jay, you definitely heard rattles. That's the rattling of my ice cubes. Oh, that was that was definitely two drinks worth in one. Petrofire says the best ice cubes on the tube. No, it's believe it or not, Jay, it's every single day at the end of the day. So it looks like we're consolidating just above 663, which is what I was kind of hoping for. I wanted to see us close at least above 663. I'm sure they'll try to push this down and get us just underneath that, but 663 puts every one of the price predictions in the money for the day today. So nobody at threat at losing a price prediction tally point, which means we're going to go into the fourth day tied, a four-way tie. Well, there's still another week here worth of movie trivia to go, Deborah. I gotta save some movies for some for next week. Casey, play my Dominic the Donkey Xmas song. All right, I'll look into it, Joe. I'll look into it. I saw some of the songs that were listed in the on the Discord, and I'll take a look at it. Plague's coming in with answers, I think, from an hour ago. Oh man, you know what, Petro? I think my favorite Christmas song is "I'm Dreaming of a White Christmas." It's the one I played on Monday. I don't know what it is about that song. I just really super enjoy that song. I'm dreaming. I just love that song. It's a really good song. of a white Christmas. Yeah, we'll do another one next week that's in black and white, Hayden. So interesting fun fact, Jana. I actually played a rendition, my own rendition of "I'll Be Home for Christmas" with my sister, and we actually. So I don't know if you know this or not, but that song only has one verse and one chorus. They literally sing the verse, the chorus, the verse, the chorus, and it's the same thing throughout. They might even some versions of the song when you hear them. Actually, the song is so slow that you hear sometimes you'll hear the verse three times and the chorus three times. The same exact verse and same chorus. I actually wrote another verse and another chorus, and my sister and I performed it. She sings it. I play the guitar, and I think it's pretty good. It's pretty decent. She's got a really good voice. I'd love to try and get that played for one of our songs one of these mornings. If I can get her to send me a copy of the version, because I don't think I have it anymore. I'll have to probably reach out to her and see if I can get her to send that to me. Arby says, you do music trivia, play a short clip. We have to guess the song. um, maybe for the new year. Maybe for the new year, Arby, we can think about doing something like that. It was 0.5 or 50 basis points. Looks like it'll be Argentina versus France on Sunday World Cup final. Whatever happened to the U.S.? I never even heard what happens. I never. It's like the U.S. was in it, and the next thing I know, I didn't hear about the U.S. again, and nobody ever mentioned it again. Who'd they lose to? The person that got June 1st, I think, was Jared Hutto. I think. I can probably tell you. Hold on a second here. Is that the second to last question? Yeah, that was the second to last question. I think pretty sure that was Jared Hutto that got the second to last one. Jay says, Casey, I restocked on my Bailey's today on my way home from work. We'll need a drinky drink with you. Sounds good, man. AMC is trying to close out the day decently strong here. We're about $5.80 right now. USA lost to the Netherlands. Got it. Okay. I hadn't heard anything about it. Well, maybe it was Ken Gross then that got it. 1, 2, 3, 4, 5, 6. Maybe it was Ken. I don't know. Somebody got it. It could have been Darren. It could have been Ken or Darren. I don't remember who got it. All right, somebody's got to tell Plague. He's talking from like an hour ago, or maybe a half hour ago. He's still answering questions. Oh man, that's pretty funny. It's super entertaining. He's just gonna start randomly like just saying things like completely out of context. Just starts blurting out like what were some of the answers? Dutch. He's gonna say Dutch next. He's gonna yell Dutch here next in a minute. Everyone's gonna be like, what? Why is he saying Dutch? Scott says, can't laugh at Plague. I've done it a few times. No, you're not stupid, Plague. It's just funny, though, because people don't realize they need to hit the live button. I think everybody's done it. That's why I usually tell people right before I start the trivia to make sure to hit the live button and stay ready. Just because I like to give everybody a chance to get readied up on the live stream and make sure they're caught up. You're not the only one to have done it, Plague. There's been plenty of others. I think Dana was in here one day, just randomly like throwing out answers, and we're all like, we were half hour later down the road, and she's just throwing out answers. It was pretty funny. Petra was like, I was answering questions from 3 months ago. It's all good, Plague. Hey, at least you're live now. You can toast out the here. I'm gonna cheers to you to Plague, to toasting out the end of the day with us and being in the real time. Javi says, am I late? Yes, very. No soup for you. Well, you're not wrong, Jay. On to tomorrow. And you know what that means, because it is that time of the day. I hate to break it to you. Eat, sleep, drink, get plenty of rest. Tomorrow's another trading day. We got 2 more days left this week. Spend time with your family, spend time with your friends. Take your pets for a walk, because maybe you have a brand new AMC leash, like I do. Go see a movie, guys. That's what we're here for. Go see a movie. Above all else, don't have a good night. Have a great night.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
You sound good.
Discovery Houston, negative return.
Copy, a negative return.
Getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear it's all in your head. Those hedgies are dead. So when the night's getting colder, you're needing that shoulder, these apes got your back. We got each other, all we